Раз, два, три. Махни рукой. Один, два, три. Раз, два, три.
Раз, два, три, четыре, пять. Раз, два, три. Раз, два, три, четыре, 7. Раз, два, раз.
Good morning, everyone. How do you feel today? Did you enjoy Astana yesterday? Did you enjoy the event? I have the honor to keep being your MC for today. We will have some amazing discussions again about the local ecosystem and putting it into the context of the World Digital Framework. And I would love to invite here on stage the person who has initiated this event 11 years ago, the one who is responsible for bridging the dots around the world and bridging traditional and innovative. Paolo Tasca, welcome on stage.
Thank you, Christina. You're always too kind with me. I don't deserve. So I will be very quick because yesterday I gave my remarks in front of the governor and deputy governor. So I would like to thank you all to be here and survive to the first day, actually. But new speakers are coming today, I guess. So we are going to have an exciting, also good panels and good papers that are going to be presented. Of course, thanks again to the National Bank of Kazakhstan for their kind hospitality. Yeah, just to summarize a bit yesterday what happened, right? During the day, we had an interesting panel between the different Kazakh authorities. And what emerged from this panel actually was an interesting type of dynamics that in this country we can witness, which is an open and structural collaboration between these regulators. And the interesting part that people from outside Central Asia can learn is that the regulation here works like is not monolithic, but it works like a puzzle. So you have different pieces that are built together. First, we have the implementation from policies and rules from the National Bank of Kazakhstan. Then you have the Astana International Financial Center, and that do the initial crypto regulation that cover also mining. And yesterday we heard, exciting new project, a new regulation that will, interact with the former one about the new futuristic digital city, Alatau, in Almaty area. So that's interesting how these different regulators at national and local level do work together. Then the second panel was interesting also, keeping also on the topic of the compliance and competitive advantage. And of course, what emerged was not much something new, because everybody say, okay, we want a stable regulatory environment. Who don't want this? Everybody want this. We want consistent plans. But what is important that probably emerges that the people say during the panel that they are ready to absorb some compliance costs. Although there are important factors in their business model, if in exchange for long-term plans and clarity, which is probably something important. So the need for the industry to have to also different type of mindset with respect to opportunistic type of behavior, more a constructive long-term collaboration with the regulators. Then we have a nice paper presentation about AI for financial institutions and how AI can, bring more efficiencies and, these result from, addressing inefficiencies in legacy technologies, sovereign-oriented and privacy-oriented regulation. The third panel was about crimes and all these sort of different crimes. So we learn actually that these are different type of solution like KYC, KYB, travel rules, etc. These are all different bricks that are part of the same wall, right? Scams are more related to retailers, and and fraud is more related to institutional context. So the panel discussed about implementing different tools for different problems, for different type of crimes. And of course, these tools are not set in isolation. They need to integrate with each other because it's very easy to jump from one type of crime to another. So the important point is also how do you integrate the different monitoring and supervisory tools. That was a key point. The panel also touched a bit upon the recent Zcash exploitation. Zcash, do you know what Zcash is? Right, do you know what the market capitalization of Zcash is? What is the market capitalization? Eh? Yeah, 7 billion, it was about 8 billion few months. So, but what is important that you see, okay, there was this type of AI that exploit a bug and they started minting coins, right? I think a couple of things I learned from this, looking at the price actually. The price didn't much collapse. It's the same more or less level of drawdown than Bitcoin and others. So, okay, what does it mean? That probably the community discount these type of attacks already, and these are already priced in, because the current market situation is mainly driven by macroeconomic dynamics rather than idiosyncratic shocks like this one that happened to Zcash. So it's interesting to monitor these, in the next months, especially with the emergence of quantum technologies. So probably the Q day, the so-called Q day, probably there's a debate about when Q day will come, and that probably will come sooner than many of us think. New breakthrough in quantum technology show that the number of qubits and experimentation process and tries that you need to do to break standard cryptographic standards are generally can be lower than what was expecting 1 year ago only. So it would be interesting to see how these two technologies work or fight together. And I will encourage everybody to look closely in the next years about this. Yeah. So basically, what emerged from that panel also was an important component, which is about education. We still need a lot of education and training, continuous education, and for not just for the retail investors to protect them, but also for institutions. And I'm proud that with our organization, Exponential Science, we are working with the United Nations Development Program to start this government blockchain academy. The proposal of this government blockchain academy is exactly to train member of the governments, or the cabinets, or managers that work in the operations area for the governments, in the implementation areas, on topics around blockchain and AI. And actually we are using AI Java, to implement these models. So we are using technology to teach technology. Yeah, that's the world we live actually at the moment. And we are going to live it also in the future. So yeah, to summarize, yesterday basically was a topic about the foundation of finance. We heard from Mr. Governor, the Deputy Governor, about the work that Kazakhstan has been implementing with the different sandbox, the digital Tienge, and all this collaboration with the different authorities, including the Astana International Financial Center. And this makes actually, as I said before, a good case study for us that are coming from outside Central Asia to study what is happening here. So to speak about today what is going to happen, I don't know if you, Christina, you're going to do so, but I have the agenda here. So we're going to start with the keynote, probably, if this is not wrong. about Central Asia digital asset experience and lessons. Then we're going to have another one on real-world asset tokenization framework implemented by the Astana International Financial Center. We are going to have a discussion around this future city, Alatau, the crypto city that is underway here in this country. Following, we are going to have a central bank digital adoptions and framework and some discussion around this point. This is basically a paper presentation, and we're going to have also another panel in the afternoon about data governance, open banking, and the digital economy. And actually, we continue with the day to talk about the municipal tokens and as a urban tools. I think this is an interesting paper that is going to be presented today actually around 1 o'clock if we are in time. And that's all. I think I would like to thank you all to be here, and let's start. Thank you.
Thank you so much, Paolo. This was a great summary of what thoughts did we get from yesterday's discussion and what is waiting for us tomorrow, or today, also tomorrow, because we are building this all together, right? I'm happy to introduce you, the first speaker of today, Janar Samaeva, who will be talking about the infrastructure that she and her team is building with the National Payment Corporation of the Republic of Kazakhstan, and which experiences, also plans and maybe some challenges and lessons that building this great infrastructure has taken her to. Please, welcome on stage. Do we have a clicker? Can we get a clicker?
Hi, good morning, everyone. Thank you for the introduction. And my name is Janar, and I am a CEO of the National Payment Corporation. It's actually the subsidiary of the National Bank, and we are a technical operator of the whole National Bank systems. Basically, today I will not be talking about the payment systems itself or the separate digital products, but I would like to emphasize how the philosophy of the development of the financial market has been changed lately, because like recently we used to that the digitalization is defined by the separate digital products, like for example in the financial market, for example by having the mobile banking app or digital wallet or online loans or anything, something like that. But nowadays we understand it's obvious that competitiveness actually is defined by by the quality of the infrastructure in the financial market. So basically, infrastructure gives the ability to the financial market to implement the innovations, to scale their digital products, and etc. And today I will be talking about our experience, the experience of the National Bank on creating and building the national digital financial infrastructure. So when we come to that when we build the national infrastructure, we have to first of all understand what kind of challenges comes in the market, in the financial market. And it doesn't matter actually it's emerging market or vice versa. Basically all the markets, they kind of deal and face the same, more or less same challenges. First of all, we understand when we talk about the digitalization, it's kind of costly for the market to onboard their customer, to transfer from the offline to the online market their clients. Second of all, kind of in the financial markets, usually each participant trying to create their own ecosystem, their own products and everything, and they do not kind of cooperate between each other, and that actually creates another challenge of lack of interoperability, because when it comes to the clients, they want the seamless services, they want to cooperate with other financial digital products and etc. So, and we also understand, this is a huge challenge, that the more digitalization, the more fraud risks are coming. So this is kind of challenges we understand that the emerging markets face. But what we did is we decided, the National Bank decided to create the infrastructure, not the separate digital products, but the infrastructure that will actually help financial market to connect to it and build their own, let's say, cooperate between participants of the financial market and build their own products. Like, for example, our financial infrastructure, actually, it's kind of infrastructure where financial markets connecting to each other, and they can get, I think you can't see it here, but you can get all the services, like, for example, the digital onboarding of their clients, the payment system, the interbank payment systems, the interbank cooperation, the interbank anti-fraud system, and etc. I will talk a little bit here what means digital infrastructure. So basically, when we started to develop it, we didn't just do the separate products, but we did as a whole system, like divided into several, let's say, divisions. Like, first of all, the payment systems. Like, we provide the different payment systems to the market, and last year we were the first one in the region to actually switch to the international standard ISO 222. We also, the last year, implemented the interbank system, the card payment system. So basically, we localize the processing of the card payments here in Kazakhstan. And last year, we also launched the new payment system, is a fast payment system. So basically, this is kind of the system, and all the banks are connecting to that, and they can provide very fast services to their clients. Like, for example, P2P remittances, using the mobile phone number, or etc. QR payments, the interbank QR payments, and etc. So basically, this is the whole payment infrastructure we provide to the market, so they can actually decrease the time to market of their products. The second part of the infrastructure, the national digital infrastructure, is the digital trust infrastructure. That's what we call. Basically, we provide the market participants, not only banks, but the microfinance organizations, payment organization, and etc., the digital identity, actually the biometric identification, authentication, actually everything that comes with a trust. The cloud signature, for example, electronic signature for the people. And basically, this is one single point for the market where they can connect to and actually onboard their clients very digitally, let's say so. And the third part, I would like to say that it's not about payments, it's not about the digital identity, but it's about data exchange. So we provide the infrastructure so that organization may exchange the data between each other using our infrastructure. It's standardized open API approach, let's say so. So also we provide infrastructure for collaboration for the market in terms of stopping the fraud, the fraud that is coming due to the digitalization. We launched in 2024. We launched the national anti-fraud system. So basically, whenever the fraud is happening, they're reporting to our system, and each time, for example, another participant is providing the service to their clients, they're checking if their client is in the list of the fraudsters or something like this. Also, we are providing and connecting them to the, let's say, to the criminal prosecution authorities. So whenever the fraud has happened, they report to our system, and those authorities trying to, let's say, investigate the case and return the money to the clients. So basically, this is very shortly what the infrastructure looks like, but what kind of lessons we have learned when we started to create or during the creation of the infrastructure. So basically, first of all, I want to emphasize on the digital identity. We understand that digital identity comes first. So whenever you want to do digitalize or anything, you have to start with the digital identity, because this is something must be or must do. This is something that is also equal to electricity, for example, or roads or anything. So whenever for the financial market, the first thing you have to do, you have to provide the digital identity, the infrastructure for the digital identity. Because using it, they can like scale their products and do the online communication with their clients. So basically what we provided is biometric identification, authentication, and in the cooperation with the National Bank, it actually became the must use. Our product is must use because it's defined in the law that for the onboarding you have to use that system. The second lesson I would like to emphasize that we always have to think about citizens and make the interoperability happen. Actually, that is why, like, all the systems I told you one slide before is actually provide the interoperability for the clients. This is kind of we provide the invisibility, because the clients, they don't have to really care what kind of payment system they're using, their bank using, what kind of infrastructure comes behind the service or etc. So we have to make the infrastructure as invisible as possible. So basically, this is a lesson tree that we have learned. It's about the fraud prevention, but I would like to divide the lesson into two parts. So the first part is we understand that the fraud prevention actually has to be, it's not only about banks anymore. We understand that the fraud is actually the chain of the process. It starts with telecom, it starts with the phone calling, it starts, then it finishes with the bank when they try to fraud and take the client's money, the fraudsters, I mean. And it finishes when the fraud has happened and you have to go to the authorities to get the money back and etc. So we understand that it's not only the task of the banks anymore, it's a task of the whole system, and that is why we have to provide that infrastructure to actually communicate between different markets, not only financial markets. But the thing is that was the first lesson we learned. But then after we launched the anti-fraud system, we understand and we make another lesson that we have to change the model, not the change, but we have to let's say, change the model from the current model where we investigate the fraud case, but to prevent from reactive to proactive. So basically, this is what we are now building. We are trying to, let's say, not trying, we are doing, let's say, we're doing that model where we first of all integrate with all banks. We do the transactional anti-fraud system where we can detect the fraud, prevent fraud, and the fraud never happens. So we're coming from the reactive to proactive system. Also, the data exchange. We all know that data currently is a really expensive active nowadays. But basically, actually, we have to provide, like the market itself, they're quite fragmented and they used to live inside their own system, but we have to provide like standardized infrastructure so that we can grow the cooperation between markets and provide the different services and products to the market so they can trust each other while, for example, exchanging the data. That is why we created different services like consent management, the centralized consent management, because like when we talk about the data, we understand that the data is actually the data of the clients, and we have to get the consent to transfer one data from one system to another system, let's say so. And we also understand that because our digitalization in Kazakhstan is quite very high because of the government services, so basically we provided the infrastructure for financial market to integrate with the government systems. So they can provide other digital products to their clients. So this is a huge demand, actually, which we didn't understand at the first time, because we thought that we will provide the infrastructure to exchange the data between the banks or etc. But we understand, and this is a lesson we learned, that there is a huge demand in governmental data, state data, let's say so. And the last lesson which I want to emphasize is that whenever we talk about the innovation is not only about the market. The innovation is also about the cooperation between the market and the regulation. So basically, most of our products are happened and used by the market because of the huge cooperation between national bank and the market itself to actually create that basis, the law and jurisdiction basis to use those products to make that happen and everything. So that has to be a huge cooperation between the regulator and the market itself. So this is kind of 5 lessons that I try to emphasize. And lastly, what I want to say, I already did like a few minutes ago, but why we do it? We do it actually not for the technology. We don't do it for, I don't know, the beautiful architecture or anything. We do the national digital infrastructure for the people to make their life easier. So basically, infrastructure is not about, let's say, the more complex it is, the better it is. No, it's not about this. It should be easy, and it should be like centralized, like it's worked in our country, and actually the more invisible infrastructure is, the more seamless digital products or user experience for the people is. So thank you very much for listening.
Please go back. Let's get one question.
Thank you. Thank you for the overview. It was super clear. I'm just have like a question more out of curiosity, and if you can tell a little bit more about how the digital identities works, because I completely agree with you. That's the cornerstone. Because I was wondering, one of the most, like not one of the most, but it's still really expensive, is every time that you want to open a bank account, you need to do KYC. So I was just wondering if this is a certificate that you have maybe on DLT, or how does it work, and if it's reusable, so I can just like basically apply this KYC across different banks, like kind of like a reusable KYC that facilitates the process. So just
I will tell you. Actually, we have a huge advantage in our country just because we have the state database of the whole biometric data of the people. It's actually state database. It's not the national banks. But the thing is, the cooperation happened between government, national bank, and banks. So basically, what we do, we use that centralized biometric state database, which is actualized and everything by the government. So whenever you do the documents, your actually data goes to that database. But what did NPCK together with the National Bank is that using that database, we created the services of the dual, like two-factor authentication plus KYC. So it's not only like identifying, like matching the photos, but it's also about KYC. We also like providing the data of the KYC, like the address, the name, all the data that is needed. So we provide actually the like digital identity as a service. So we don't do just the match of the photos, but we take the risk and we say yes, that person who is he claiming to. So basically, we let's say so, like technically or user experience. So we get whenever the client comes to the banks, they capture the photo and the bank sending the photo to us, and we are matching it with that state database. We take the risk, we identify, we say yes, this is who he's claiming to be, and after that, we are also sending all the data for doing the KYC for the banks. Regular database or what? Can you repeat, please?
Like I was just wondering if that is like a blockchain in the back.
No, it's a regular one. Yeah, it's a regular one. Yes.
Thank you so much. Thank you so much, Janar, for this impressive job. And I'm really impressed also of the level of integration and of the relevance of what you do nationally to all the international context. Good luck with everything. Round of applause. Thank you so much. And we are moving forward to the next keynote that will be presented by Chief Innovation Officer of Gateway for international companies here in Astana International Financial Center. So I'm really happy to introduce you to Talgat. Please, welcome on stage.
Thank you. Do you have a clicker? Or yeah. I brought a slide deck to go along my presentation. Hello everyone, my name is Talgat. I work as a Chief Innovation Officer at the Astana International Finance Center. So my work in the past 2.5 years has been focusing around bringing innovation into financial center. And of course I couldn't skip such a big innovation that is happening as tokenization, particularly tokenization of RWAs. But bringing a real world asset to a blockchain is relatively a simple task, right? It doesn't require much. There's enough technology, enough players in the market. The challenge that we've been facing when we tried to make a pilot was how do we make this token trustworthy? How do we make it enforceable? How do we make it regulated issuance? And then how can we provide access to a much global network by local and international investors? So let's talk about the assets first. Central Asia does not lack assets. Kazakhstan alone has a significant number of assets in commodities, agriculture, energy, infrastructure, real estate, private markets. So that's not the problem. The problem is that these assets, they are seldom divisible. They're very slow to verify. The way they are traded traditionally in the past 30 years, the history that I could find is quite outdated. And the businesses that are built around it are quite conservative into adopting innovation. So a lot of work has to be done to make a mind shift on how people look at these new financial instruments, to do education, and not just to provide the tools, right? And then another thing was about the regulation, of course. Like previous speakers have mentioned, and yesterday and today, there are various regulators in Kazakhstan, the National Bank, the Agency for Financial Markets Regulation and Development, right, the AIFC, AFSA, and then the new regulator in Aladao. How do they all work out? When we speak of tokenization, was also one of the questions that I tried to answer. So asset by itself is not an investment product. To make it a product, we have to answer a question, is there a legal right around this asset? Can we verify how asset is created on chain? What's happening in the real world with the asset, when it's moved, when something happens to it, when it's damaged, when it's lost, something happens, right? How do we turn it into a financial instrument? Something that can be traded easily on global markets, exchanges, SECs, DEX, and does it have the investor access? Easy investor access, where he can remotely be assured that when he invests, all of this is taken care by the infrastructure. So the challenge, the question I'm trying to debate today is why AFC is a great place to do tokenization, right? But before we go to AFC, this is just a comparison of what me and ChatGPT, right, both think about the differences between traditional model and tokenized model comparison on the RWAs. Like I said, the fragmented records, manual reconciliation, high minimum tickets to enter the market. For example, if you want to enter real estate market or movie industry or creative industry, right? Or you want to go into agriculture, you have to have significant investment. You can't do it with $5 or $10 or $100 in your pocket, right? So slow settlement, limited investor access, manual servicing, right? The tokenization by itself provides this technology. However, it doesn't resolve all the risks related with the underlying asset. So the tokenization trust gap is answering the question, does the asset really exist? Just having the token in the blockchain proves nothing. It just shows that you are the owner of that record, right? But do you legally own it in the jurisdiction where the asset belongs? Does that right that is stated in the token is represented in all the legislative documents? Who safeguards your asset? How do you settle your disputes, right? Who enforces if somebody violates your rights to this token? And what happens if in the scenario of default? Who takes what, right? How do you clear it? So, like I said in the beginning, tokenization, unfortunately, doesn't answer all these questions. It is a big job that we had to do as a nation, right? How to answer this question, how to connect the digital token to a real world scenarios that will happen to the asset when the token is emitted, created, and burned, right? The blockchain can record ownership, but trust still depends on law, verification, and enforcement. Okay, so this is why AFC, of course I work at AFC, I'll be promoting AFC, right? Astana International Financial Center is a unique jurisdiction where you can combine traditionally something that you wouldn't expect, right? First of all, it's a legal certainty, English common law, something that is very understandable to a lot of people around the world, all right? Predictable rules, independent regulation, principles based on oversight, ensuring integrity, transparency, and trust, AIFC court, and International Arbitration Center. This is important, guys, right? World-class dispute resolution with global enforceability, so that when something happens to your rights, we can enforce it through our international court into different jurisdictions, especially when we talk about export-import storage with RWAs, right? Capital markets and infrastructure. We have an exchange, IAX, we have crypto exchanges operating in the AFC. They do provide access to capital markets. And then the innovation ecosystem. We have FinTech Lab, which is essentially a lab at our regulator, AFSA, which allows to enter, test your ideas with a very low cost and then fail-safe environment. And then if you graduate with your business idea, you can fully commit. We have Tech Hub, which is another arm that we use at AFC which helps us to structure innovation projects. And then we have governance, like the governor, all the management. We're all innovation friendly. You can notice that Kazakhstan is innovation friendly today. The president is talking about AI, right? Digital. There is a ministry of AI. There is a new crypto city built. Bless you. So there's a lot of innovation happening already in the country. So it's just not just AFC, right? The whole nation is trying to be innovative and be open to new technology and be open to new challenges, right? So regulatory foundations already in place. The FinTech Lab, and there is no single document that says AFC RWA tokenization framework, but there are documents that are called Security Token Offering Framework, which structures how you do security token offerings, right? Investment token framework, how do you structure investment tokens, right? Tokenized commodities framework is how you tokenize commodities, and then digital asset activities rules. This is how you actually do operations with digital assets. The combination of these, the regulatory foundations are in place. So the next challenge is coordinating market implementation. I unfortunately can't see the bottom line, but this is what it says, right? Market implementation. Building a case was very important to prove that this scenario actually, there on that screen you can see that. So again, I can't stress this enough. So asset classes on the top, commodities, real estate, private markets, green assets. The tokenization life cycle, the technology, structuring, verification, classification, issuance, distribution, settlement services. This is the visible layers, right? But at the bottom, the actual thing that is making this mechanism tick, that making it work, building the trust, is what's underneath, right? This legal certainty, investor protection, like AML and financial integrity, the integrity of the market, right? Technology governance, and then the enforcement, right? Okay. So the token is a visible layer, right? The value lies in the trusted infrastructure beneath it. So the past 18 months, a lot of my friends whom I see in the room know that I've been tackling this challenge called grain tokenization. So the idea was, how do you bring back trust to granular receipts, right? In Kazakhstan, there was a big practice. Forget the tokenization. We are a big agriculture nation, right? Apart from the contribution of the GDP, if you don't look at the GDP, if you look at the population working in different areas, around 40% of our population actually works in agriculture. So we have a vast agricultural lands. It's a $7 billion export market of agriculture. But the problem we were facing is a lack of liquidity. It's a seasonal business, right? When a farmer is getting his harvest, the price for the grain is very low. He has to survive until spring, when there's a good price, to sell his grain. So for the next 2, 3, 6 months, he needs to get some loan or liquidity to survive, right? Usually he would take a granular receipt when he deposits his grain to a silo or granary like this, right? And then he would go to a bank and then get a loan on top of it. But the system had flaws. There was a lot of fraud in the past. Then there was a lot of mingling and juggling with the papers, right? And then because it's a very difficult asset, right? I'm not very happy I started with grain because biology, it can explode. It can I forgot the English. Yeah, well, it's biology, right? It can spoil it will lose its humidity, it will lose its protein level, it will lose its grade and the class and its price if it's not stored right. And storage is troublesome too, and it involves a lot of work. So building back the process, what the challenge was visiting the silos, learning how this process is, how the harvest is accepted, what's happened in the lab, what happens when there is a contractor who's talking to farmers, talking to traders. So we picked one warehouse here at Akmola region, which we called the Ethanol Vault, which is the example warehouse in the perfect scenario, right? And we tried to make the perfect scenario. We brought a lot of IoT, sensors, cameras, CCTVs, robots that are like vacuum cleaners who dig into the silo and then make sure that the grain is there, the level is there, the humidity is there. And it's trying to make it live. Thanks to all this low orbit satellite technologies, you can now provide pretty good internet at any location, remote location. Most of these silos are remote somewhere in the urban area. And so we created this infrastructure behind to build the trust that the asset is stored at the silo, is at the same quantity, quality, and humidity level, protein level. The lab is verified so that we can bring back the trust to the granular receipt, not the token yet, right? And then once we wrap it as a token what type of token does it become? Is it a token on the right of this grain that you're storing, or are you providing a loan, right? Is it an investment token? And then a lot of farmers whom I talked to started, running in front of the train and talking about the futures, right? Like can we issue a token for the harvest that I'll get the next year so that I can get forward contract? So a lot of innovation, a lot of debate was happening with farmers in the Akmola region. Where we were talking with 11 farms who are serviced by this elevator, and set up a few JVs with Tech Hub AFC, so joint ventures. The main joint venture which we are working on is called Comma Chain, Commodity Chain. The name gives it away, right? It's an exchange, so we're getting a license, operating exchanges license, and then the clearinghouse license for that company. And actually we got our in-principle approval, and hopefully we'll get a full license soon. We did a demo trade on a volume of grain that went to China, right? We tested this ecosystem. There were some issues, but I think resolved it. And we found a few commodity exchange partners. The traditional commodity exchange in Kazakhstan is called ETS, right? It's also our partner. They have a branch in the AFC called ETS-E. I think E is electronic, I'm not sure. But they are also one of them. So just to make real infrastructure, satisfy one simple token case, right? It took me 18 months and a lot of groundwork. I'm trying to show that it's actually not as easy as bringing the regulation. Regulatory alone does not resolve anything, right? It doesn't guarantee you anything. The technology alone doesn't guarantee you anything. You still face the underlying asset risk. It doesn't solve the problem of liquidity to an asset, right? If it's a bad asset, tokenization solves nothing. It doesn't provide instantly market, that is ready to buy and sell. It actually just makes it, hopefully, right, cheaper to trade, faster to settle, programmable compliance, all these things that tokenization promises. That was it, right? And then the access. So the tokenized grain finance. What we successfully did was we solved the asset verification problem, right? The quantity, the quality, and the deposition. But it took us a lot of investment into the silo. And Kazakhstan has 287 silos. And we did only one, and that's a new one. We have, I think, around 60% of them that were built maybe 80 years ago, back in the Soviet times. They're very hard to modernize. I know there's a big program in our Ministry of Agriculture has issued a program for granary modernization. Maybe that will help, right? Legal claim, we built a token that can be legally owned and then enforce that ownership in case if somebody violates, right? This is through our court and through our ecosystem at AFC, right? The tokens issuance, the custody, the wallets, the system, the blockchains, different blockchains that we're testing, right? The financing, of course, because of the license limitation, because of the in-principle approval is a very limited test license, right? We orchestrated one simple trade just to see that it works, the off-ramp, on-ramp, right, the settlement. And then the monitored and redeemed collateral. This is also one of our partners who's in business of video surveillance and then data centers. It's a great combination for me. He is building a system that'll monitor all these robots and IoT sensors and does a verification through. So just a short brief. When a farmer brings his grain, there are two verifications. One, it checks the satellite imagery in the past 9 to 10 months to see that he actually owns land, that he actually has been doing some work on that land, just to prove the origin of the harvest is actually from that farm. And the second one is a physical verification at the silo, right? It's a lab test and then the surveillance and blah, blah. Okay? So, like I said, the KPI for RWA tokenization for me is not how many tokens we issue. It is, do we really resolve the problem of high transaction cost? Do we make our assets more liquid? Do we build the trusted system? Does the market participate? Do the different jurisdictions, different regulators, do they participate? Do the businesses come in, right? This is the KPI that we're trying to solve. And then it's a very exciting time to be in. Thank you.
This you can do it. Thank you so much, Talgat. I think it was not only exciting from the point of view of what you're building, but also giving this relevant example of an asset that is important for the country, has definitely given food for thought, grain for thought. I'm happy to move on with the next panel. This, in my opinion, is one of the most exciting topics that have been discussed these days. Yesterday evening, I saw that a lot of foreigners here were very much interested in the Alatau City project. So after having the presentation yesterday from the CEO of the Alatau City, today we will be discussing all the interesting possibilities and challenges that arise with such a project. And we'll be having different sides of the discussion: legal, research, business, crypto exchange, and obviously local innovation, financial, institutional point of view. So I'm happy to introduce the moderator of the discussion, Nikhil Vadgama, co-founder of the Exponential Science Foundation, co-founder of the UK Centre for Blockchain Technologies, who will be moderating the panel about the crypto Alatau City. Welcome on stage Massimo Morini, Taljibek Muhanbetkaliyeva, Nurhat Kushimov, and Bakits Mekenov. Okay, I'll leave. Where is it? Missing here.
So we're missing Bakyat. Do we know where Bakyat is? Oh, sure, but we can start, fine. Okay, all right, fantastic. Thank you, everyone, for joining us this morning on this panel we have this morning on Alatau, Crypto City, and Kazakhstan's digital future. Great, so we have a full panel now. So my name is Nikhil Vadgama. I'm going to be the moderator of our wonderful panelists for the next hour. And we're going to be spending this time thinking about a question that is simultaneously about urban development, monetary infrastructure, and regulatory design. Alatau City is being positioned as a testbed for digital assets in Kazakhstan. And we're going to spend this time really understanding what does that mean in practice and what does it mean when it's working. Okay, and we're going to be exploring this and also what the future of Kazakhstan's digital technology implementation is with respect to Alatau City and blockchain ecosystems itself. So if I can ask each of you, and I'll go in order, to give me to introduce yourselves, and then to give kind of what Alatau City briefly means from your particular vantage point. So if I start with you, Bakir, the NBK is the monetary authority, of course, and what is its role in enabling a trusted and investor-friendly financial and crypto fiat ecosystem in the Alatau City?
Good morning, everybody. My name is Bakits Mekenov. I'm Deputy Head of Division of Innovations and Crypto Assets in NBK. NBK expect Alatau City to develop as a crypto city that integrated TradFi, CBDCs with crypto asset industry, with DeFi and with real assets tokenization sphere. We believe Alatau city developed as a large-scale experimental testing ground where advanced financial solutions and crypto fiat solutions piloted and subsequently scaled across Kazakhstan to accelerate country's digital financial transformation. And also NBK really support this vision within our mandate. Thank you.
Thank you very much, Bak. Moving on, Talzabek, you're building the institution from the inside. In one sentence, may I ask you, what is Alatau City's core value proposition for a digital asset company deciding where to headquarter?
Hello, everyone. Thank you for your question. So basically, Alatau City is a unique opportunity to build a new economic model where entrepreneurial ideas can be tested, included into the real-life economy and scaled. So we're looking for entrepreneurs, people with diverse technology and innovative background to change the way traditional economy, society operates, and not only test it, but scale it up, and not only in Kazakhstan, but in the region and in the world.
Fantastic. Thank you for that introduction. Massimo, if I may, you're an academic. You're studying digital financial systems at a research level. In terms of your understanding, what's the most interesting thing you've seen so far about Alatau City from an academic or design perspective?
It's certainly exciting from the point of view of testing empirically, what can be the effect of technological innovation, to see a city which is really designed, that becomes a city which is mixed with an urban infrastructure, in a sense that allows to direct and in a sense also just to the economy also to self-direct through economic innovation. And in this sense, this is related to what we have been doing in Lugano at a different scale, but we will probably talk about that later.
Fantastic. And finally, moving on to Nurkat. I mean, Binance, is operating globally, has navigated many different regulatory environments across many different jurisdictions. Why Kazakhstan? Why Alatau City? Why now?
Yep. Hello, everyone. My name is Nurkat. I am head of Binance Kazakhstan here. Spent a lot of time before working as a regulator as well. So this and yesterday topics are very close to my heart. So welcome everyone to this building and to this session. I think what is important for Binance is generally its predictability of regulatory framework. I think this is one of the core, tests that Binance considers before moving into any jurisdiction. And I think this is important for many businesses. So if I look at from the business perspective, generally I think the kind of crypto area and tokenization, generally blockchain is one of the most fastest development financial part of the industry today. If you look at the numbers, I think there are several estimations. One from kind of city, which I believe more conservative, that, for example, tokenization will, in 2030, will be around 5 to 8 trillion USD. If you look at BCG, I think they kind of more ambitious in terms of their projection. It's around, I think, 16 trillion tenge USD. So if you look at that numbers, you definitely, the country want to embrace it. And I think for Kazakhstan, Alatau City is a project which tried to kind of capture that development and put it in the real world, because kind of there is investment part of crypto industry or blockchain industry, but I think what is important is to put it into real world use, and for that you need, as you said, urban infrastructure, kind of development projects, and multiple real world use cases. So I think Alatau City is one of these, but to develop it correctly and you know, win in a kind of in a competition not only within the country but also on a global stage, I think we need to see a really high level of commitment to uphold consistency and predictability of a regulatory framework. So I think it needs to be built for centuries or for decades at least. So the companies, when they will invest into what is now just land, they need to have that projection for many years ahead.
Thank you very much for that. So we've just heard some initial thoughts on Alatau City from all of the panelists. The next round of questions is going to focus more around, you know, the city's vision, its mandate, and its government. And we're going to start off with the basics, right, to make sure we're all on the same page. Because I think perhaps, you know, people in this room may not be still fully clear about the structure of Alatau City, because Alatau City is not the AIFC, it's not the ARDFM. It is a city whose status has been fixed by constitutional law. Talsbek, if I can start with you, can you explain the governance model? Who set up the city? Who runs it? What decisions does the authority make independently? What requires a sign-off from national institutions? If you can give us a bit of flavor on that.
So as you mentioned, the city has been established by the constitutional law. It's a city with accelerated development, as we call it. It operates under a special legal regime. So basically, we have several governing bodies, the council, the highest body, the members are appointed by the president. And there's Alatau City Authority, which is a special management organization. So basically everything related to development and management of the city is performed by the authority under the special legal regime. It has powers starting from registration of the residents and companies to, you know, issuing authorizations, licenses, permits, setting up, you know, special testing regimes. And also there will be local Akimat and Maslihat, but they will be mostly responsible for those items, basically, you know, serving social purposes like education and healthcare, and the rest of the projects will be, you know, managed by the authority, and they will be working under one-stop shop principle, so everything will be digitalized under the principle of digital primacy. So everything that requires coordination with the national mainland authorities with regard to national security, monetary policy, of course it will be agreed with them. But there is a freedom to, you know, to set the regulation with regard to entrepreneurial activity.
And if I may ask, if you know, what does the process look like operationally if a company wants to go and set up and operate there?
At the moment, we're drafting the legislation, but it will be, as I mentioned, it will be paperless, so digitalized and one-stop shop. So. We will be, you know, setting up the smart city with all these processes that will be speeding up everything. The details are will be represented in the regulatory documents that are to follow.
Okay. Fantastic, thank you. moving on to you, Bakt. Talking again about the National Bank of Kazakhstan, acting as the primary regulator for the national digital financial infrastructure and onshore crypto fiat ecosystem. How does the MBK engage, or how is it going to engage with activities inside Alatau City? Is the formal legislative framework, is there going to be this formal legislative framework that is codifying this particular coordination mechanism and institutional collaboration? Could you give us some more insight on that?
NBK is formally embedded in Alatau's governance framework through constitutional law on the special regulatory regime Alatau, which requires coordination with NBKs on key regulations related digital assets circulation, related financial services, financial and crypto fiat infrastructure. This coordinating mechanism makes possible and makes it cross-jurisdictional opportunity to harmonize of regulatory framework and pilot regimes. It's a good opportunity. NVK's role is coordinating all under law regulatory acts related digital assets and financial services.
Thank you very much for that. And again, now talking as an operator, Nurkat, I have it in my notes here that you've been through the setup process in Alatau City. Is that correct? Or is it too? Yes. No, not yet. Yeah. So these notes are not. Well, these notes are projecting something that should be happening in the future. But I mean, from an operational perspective of what you've heard from Talzabek about, how the system is going to be operating to operationalize within the city itself, from your particular perspective, I mean, and based on your experience in Binance's experience in other jurisdictions, what's going to be something that makes it relatively, from your perspective, pain-free and attractive to for the process to get set up in Alatau City itself?
I think I mentioned already first kind of prerequisite stability and kind of consistency of regulation. It doesn't need to be too lenient or too liberal, but it does need to be consistent and it does need to be predictable. So no shocks, no surprises from the regulatory point of view. But this is not the kind of the full picture. The next, I think, the kind of most important, the second most important point for any jurisdiction to build an attractive space for companies is infrastructure. When I say infrastructure, it means like kind of possibility to integrate with a traditional finance area. For example, at the AFC, when AFC started, it took us kind of a difficult path to build these bridges between crypto industry and traditional finance industry. One example is kind of fiat integration. You need to have on-ramp, off-ramp solutions across the industry and available for the whole industry, not just for select players. And it's difficult to build because it requires coordination, as you had the question to NBK. It requires a lot of coordination between regulators, mutual trust, mutual understanding, and which then need to be kind of signaled or kind of made obvious for the whole industry. Then banks start to work with the crypto industry of course based on their own risk appetite. Second point is I always make that example as well. If we want to have more people kind of get into that industry and to use that, because there are a lot of useful cases of blockchain technology and crypto industry. But to get people to select that instruments, you need to have trusted partners. And today, trusted partners are brokers and banks or your kind of asset managers. So you need to allow those kind of players as well to be part of the industry and to kind of work with crypto industry on understandable regulation, understandable rules. I believe that took us a long time to develop here in Kazakhstan. It was not an easy journey for everyone, but I think now we are in a good shape. I think for my hope for Alataw City that we will take it further. By saying that, I mean that, for example, we could build something like crypto crediting to buy a property. Just one example. But that's a very complex exercise which need to allow banks to, from prudential point of view, to take on their balance sheet some crypto pledgers, then work technologically with us as a crypto players how to kind of honor that mortgages and pledgers, etc. And so that will be a complex project, but that actually is infrastructure building. Another point is payments. I think what's one of the progressive part of the crypto today is the payments, stable coins and payments. If you look at the Binance, we have 45 million people who using Binance Pay today, and we have 20 million merchants on our platform. And I think the kind of last numbers was around 250 billion USD transaction volume only on the pay side, not trading, not investment, on the pay side. So this is a huge potential, but again, that requires a lot of infrastructure. We just did one integration recently with Alataw City Bank. The name is not coincidence. We have kind of great plans for Alataw City Bank and Alataw City generally. And we provided the infrastructure for QR payment. So any person who has a Binance app could use a QR payment in tenge, local currency, and pay any goods in Kazakhstan using Alataw City Bank infrastructure. But again, that was a kind of difficult, lengthy, complex project, both from regulatory perspective, required a lot of engagement with NBK, with other regulators, but also kind of very significant infrastructure project from technological perspective. So my point is that if the jurisdiction or country wants to win the race, very competitive race, it needs to have a big focus on infrastructure building. Otherwise, kind of it won't be that attractive for the businesses.
That's fantastic, thank you. And we've jumped into the next section as well on important infrastructure in Alataw itself, but we'll come back to that. I just want to finish off this first round on kind of, you know, the mandate and governance of Alataw City by coming to you, Massimo, and asking you, you know, a little bit about any work you've done and looking at other special economic zones in the world. You've got, for example, you know, the Abu Dhabi global market, the ADGM, Bermuda, Wyoming, etc. I mean, we've got the case of Lugano as well as a city, as an area, which with the canton of Ticino also having its own particular policies to attract companies to come there itself. I mean, in your opinion, what do you think these particular case studies, and also in the example of Lugano, are important design features that make, you know, having a special economic zone or an area one that ends up succeeding rather than one that ends up just becoming regulatory decoration?
Well, that's a very interesting question, and I have experience of different realities. You know, for example, I'm now leading digital economy at Adia Lab, and we are in ADGM in Abu Dhabi, and I'm dealing with research, particularly in economy, also in Lugano and in the Plan B Foundation that is very involved with the building of the infrastructure. And I think that regulation in this area is very important. We cannot say that that is not, because if you look at my research, you know, on decentralized finance or tokenization, often one obstacle is the fact that when regulation imagines or is built on a different kind of world, it becomes very hard to show the advantage of technological innovation or business model innovation. So, for example, if you look at the situation of Lugano versus Alatau, you realize that there is a difference in scale in two different directions. You know. In a sense, it's interesting that while Lugano is looking at a relatively small city, this city at the same time sits in the middle of a very strong and large economy and financial ecosystem, the one of Switzerland, but extends also to the one of northern Italy or southern Germany. You know, or the opposite, Alatau is thought as a much larger project with a larger national relevance. However, the ecosystem around is not definitely so much definitory for the project. So there are analogies and different challenges, you know, under many points of view. I think that one fundamental element of design that was important for the success of Lugano is that Lugano started from the usage, in a sense, from the use case. The infrastructure came with the use case, you know. That, I think, was very important. There was a problem to solve, very specific. It was the time of COVID. It was also a desire to strengthen the local economy, and the infrastructure came with that, you know, and the different bits came with that, you know, the digital currency, the blockchain infrastructure, but that immediately mixed with the economic policies that the local authorities, the municipalities wanted to implement. And this is very important, because otherwise the risk is that you build a little bit too abstract structure from a regulatory point of view or from a technological point of view. I think that Alatau has got an incredible opportunity, and my impression, even only based on this morning, beside all the things I knew already, you are moving very well, you know, and I really like when you talk about a regulation, to think of a regulation that thinks of the issues of the digital world before thinking of the traditional issues of traditional finance. That's very hard, you know, because it's clear that you need, as some of us were saying, you need TradFi, you know, to support you. Everyone needs also the presence of TradFi. But at the same time, if you keep thinking, okay, things are done like this. I don't know. I mean, I could make different example. You know, you have to create maybe a central security depository. You maybe have to think of how to regulate the issuance of assets. Maybe you know, registry for assets. If you start thinking, you know, first of all, I need to have high-level traditional solutions, and then thinking of their extension to digital, maybe you are not exploiting fully, you know, the opportunity that you have in Alatau. So as much as possible, I think that there is an incredible opportunity in this country, and there is, I think, also the skills and the resources to really trying to do something that looks first at the future, you know, rather than the past, which is obviously not easy. But I think this is one fundamental opportunity here.
Thank you, Massimo. And it brings us nicely onto, you know, both you and Nurkat have been talking a bit about the infrastructure aspects as well. Staying with you, Massimo, on this, just in the case of Lugano itself, what was the most kind of important kind of infrastructure that was needed to kind of get the Lugano token project off the ground and in place?
Well, it's very hard in this case, and probably not even correct to pick out one specific thing, you know, because probably the surprise that was in part in the design, but in part was also surprise, was the interaction that existed, you know, between an blockchain infrastructure, but also the My Lugano app that in the end became the interface between citizen and the new urban infrastructure, and a vision about, you know, the kind of multi-dimensional ways in which this infrastructure could have been used, first of all from the public administration and then also by private players. And then there were elements that, while potentially not being central to this infrastructure, had a very important effect. For example, the fact of deciding to use the infrastructure also to open up to crypto payments, to stable coin payments, was in a sense, if you want, a side project compared to the original goal. But it had got an enormous power of announcement, of message, because it showed that we had the courage, actually, you know, think we were in a jurisdiction that, while federal, you know, did not give control, you know, about having spatial regulations, only up to a point. But there were things, you know, that the municipality could do. There will be a great presentation this afternoon also with Simona here that represents the municipality. And there was the courage, the decision to say, for example, the public administration will accept crypto, will accept stable coin. I don't know if you can imagine how much this open up the city to new user, but particularly new ideas, new entrepreneurs. You know, it became a hub automatically because of this choice. You know, and so even this signal effect can be very important at the time. It's worth to be bold. You know, that's what I think I've learned from the experience of Lugano.
Fantastic, thank you very much. And coming back, you know, to this idea of Alatau City as being a test bed that, of course, does require infrastructure itself, right? Infrastructure for data, infrastructure for having live systems in place. Coming to you, Bakt, specifically with regards to the MBK, are you thinking about Alatau City being used as a test environment at the moment for any particular payment or crypto fiat infrastructure that you could tell us about?
Yeah, sure. In MBK regulatory sandbox, participants from crypto market and the financial industry testing and evaluated new crypto fiat payment solutions under real market conditions before potential deployment in mainland. Bright cross-jurisdictional example is pilot project in MBK's sandbox between Binance Kazakhstan and Alatau City Bank. Mr. Nurhat mentioned about this pilot project. This pilot project allows customer to do pay with crypto assets through crypto QR and online payment channels. This pilot project, great example for cross-jurisdictional cooperation and collaboration between between participants from mainland and different economic zones. This pilot project creating seamless bridge between crypto asset industry and traditional payment infrastructure.
Thank you very much for that, Bakt. Talsbek, as well, from your perspective, can you tell us, what's going to be happening in the roadmap for the next 12 months in terms of infrastructure development as well in Alatav City?
So one of the principles in the constitutional law that I mentioned is that private capital comes first. So we assume that the basic, the basic level infrastructure will be provided by the government, but the rest, which relates to business opportunities, to some technology opportunities, will be built jointly through PPP mechanisms with private partners, and this, driving the development by the private businesses will actually accelerate the growth, because it will not be driven by the government, but by the businesses who understand the needs, can forecast, and basically implement it. And also, I just wanted to reflect what you mentioned, what Nurhat mentioned, the stability and predictability of the legislation, and what you mentioned about the starting from the usage. I think all of this altogether combined will allow, building the proper infrastructure in place, which will be usable, and the regulatory framework will be stable and predictable, and of course, flexible, taking into account, innovations.
Great, thank you. And Nurkat, you've already talked a little bit about, the kind of the infrastructure you think is going to be necessary, if Binance is operating in the city and so forth. I mean, what's the most? Can you say what is the most important thing? I know Massimo said, we can't isolate one thing in by itself, but do you agree with that, or is there kind of, these are the top things I need?
Yeah, I think I agree actually with the point that there are no one kind of piece that is crucial. Kind of the jurisdiction building, and with Talsbek we had this experience before at the AFC. It's a difficult project because you can't build it based on just one point. It needs to be home for many different projects, for many different ideas, and you need to build it the way that actually satisfies a lot of different options. And I believe in Kazakhstan it's even more challenging and complex, not because it's underdeveloped or bad, because it's, I believe, at least in the financial industry, payment industry, I would say it's too developed. And users, clients, population is too spoiled with all the services, infrastructure, and everything already built. And that's why it's so difficult to find sometimes use cases. For example, we have together with NBK the challenge with KZT, stable coins, because digital tenge, not CDBC, but just digital form of KZT is so well developed. There is no issues of using KZT electronically here. I probably myself forget when I last time had the cash in my hands. I pay everything with QR cards and transfers. I don't need cash at all, from taxi to groceries to all the payments. Everything done digitally. And actually, there is no joke in Kazakhstan that you can get married online. This is absolutely true and correct. You can buy property online. Recently, I sold my car and bought another one. It took me 1-2 minutes to transfer the deed and everything and receive the plate. So it's too developed. And that's why for companies like us, it's very challenging to operate, because, as I said, the standards and expectations are too high on one hand. Then the second challenge comes that Kazakhstan itself is relatively mid-sized economy. it's not huge. So you kind of, again, for global companies, you're always mindful of investment versus kind of return on the investments. And with that size economy, it's also a very challenging decisions. That's why, and for Alatau City, for example, I think one of the way for us to look at that is to look for new opportunities and look for new business models, new opportunities in terms of the growth. And I believe that kind of one major point will be export, financial industry export opportunities. As Kazakhstan, we never looked at the financial industry from export point of view. Kind of, we exported a lot of raw materials, energy, etc. But as a country, we didn't export too much of our financial services. And I think as a country, we have huge potential to export financial services. I think it's even bigger than oil and gas and, you know, other raw materials, because it's very well developed. So for myself, particular kind of how I look at the Alatau city and what I want that kind of, how I want that to be developed, that we try to use it as a launch pad for export opportunities, to look at the region as the first goal, but then beyond the region and kind of expansion. So I would say that kind of from my point of view and my angle, that that jurisdiction will be a very good kind of point that we will take that to the next level in terms of the financial industry export opportunity. And I think I echo the Lugana experience here. It's quite similar in terms of the regional and, you know, European, being in the center of Europe. For us, it's being in the center of Asia, gives us the similar edge, small economy, or small own economy, and a huge potential around us.
Fantastic, thank you for that. I mean, it's really interesting. You mentioned that actually, you know, that the expectations are too high, which makes it challenging in a sense to kind of, you know, operate in the jurisdiction. I mean, coming from the United Kingdom, I mean, it's kind of alien that we can do something in 1 or 2 minutes in terms of trying to sell a car, or it's I would be, you know, that's kind of what we expect from technology companies giving us solutions on using apps, right? But from government services to have something like that is absolutely
in
fascinating.
Kazakhstan, if you go on plane, if you go to a kind of domestic plane, you don't need any documents with you. You drive a car, you don't need any documents with you. Everything fully digital. So kind of that's the expectation from the population. And it's very challenging to work with such high expectations.
And keeping on that theme, I mean, the last part of this panel is about, you know, talking more broadly about Kazakhstan's digital future and what's coming. What do you think is important in the next kind of 18 months? But on this particular theme of having, you know, the infrastructure so well developed in this kind of, in this way, what do you think is Nurkat, to stay with you, what would you say to the regulators, I suppose, to trying to help you with this? Or is this something that, you know, Binance as a company just needs to step up to?
I think as a company, we have a very big focus on Kazakhstan, and we're trying to be very helpful and, you know, to kind of to build the products and everything which give value to the population, to our users, and to the country itself. From the regulatory point of view, it's not a critique. Regulators are in Kazakhstan amazing, you know. We work across with everyone, all the regulators. And I think what just the next challenge and the next focus need to be is take it further. We already built a very good regulatory framework and infrastructure for fiat crypto fiat on-ramp, off-ramp solutions. Now, NBK this year built a kind of an extra layer on stable coins, payments, tokenization. And I think we need to take it for the next step to have great integration between TradFi and blockchain technologies in terms of the banks and brokers and other financial TradFi institutions becoming blockchain native. I gave already example like having a mortgage or credit kind of on a crypto pledge and vice versa. I think we need to inbuild crypto and a prudential regulation kind of in a more visible way. So I think that will be a thought level. Kind of when I say that not in Kazakhstan, people kind of I think very surprised because a lot of countries and a lot of jurisdiction on a level 1, and but in Kazakhstan, I think what we want to have is that level 3 discussion, and I believe that what we will going to have in the next kind of several months, because the layer 2 already under the implementation. I gave you example that we're already doing a pay integration with banks, and we will continue to do that. So I think that from the regulatory point of view is done. So next is the kind of even more cohesion and more integration with the traditional financial industry. And again, back to all at our cities, I think where we want to see that prop tech and TradFi and crypto industry merge together, where we could have property finance through crypto and serviced by traditional bank. So that sorts of cases, I think that's what is on the agenda now.
Thank you. Coming back to you, talking about the fact that in the next 18 months in the future, looking at kind of Kazakhstan's own regulatory position, how do you see that in kind of the global crypto regimes that have been that are present? Do you see Kazakhstan moving for more global harmonization or keeping its own views on how crypto should be regulated going forward?
The main risk for regulatory fragmentation is that crypto asset activity easily migrate to least regulated countries, and this creating regulatory fragmentation between countries, creating opportunities, regulatory arbitrage, and increasing risk for crypto investors, risk for consumer protection and financial stability. However, NBK already seeing a gradual convergence regulatory approaches across major jurisdictions, and driven by work with international standards and international bodies such as IOSCO, FATF, Financial Stability Board, BIS, and NBK. I believe next stage of crypto regulation is greater institutionalization and more stronger cross-jurisdiction coordination, as well as introduction crypto asset regulatory reporting framework is another significant milestone for standardization approaches for tax approaches across jurisdiction tax transparency.
Thank you, Beck. And tell us, Beck, again, the next kind of 18 months, we've talked a bit about infrastructure and things, and you know, you mentioned that basic infrastructure will be provided by the government, and then you're expecting public partnership to be the way that investment is coming. I mean, what about also the people, right? I mean, you want to attract the top talent that other jurisdictions have done. I mean, you know, engineers, researchers, academics, founders indeed, who are going to be building this particular ecosystem. Have you got any particular, can you talk to us a little bit about the plans you have for that part of Alatau City?
Yes, with regard to this, you know, almost like 20 years ago, I did my master's dissertation, and I was examining how the cities become financial centers. And one of the studies showed that when a person, you know, chooses a location for a living, they do not only go for some particular field of legislation or regulation. So they choose a city as a whole. And because we are building a city, you know, which goes beyond financial regulation, financial markets, there will be a great opportunity, you know, to use smart technologies for almost every aspect of human existence in an urban development. So for this, I think this will be a huge, important aspect to consider for those talented individuals to come and to live and you know, to test and integrate into real life their thoughts. And we think that, you know, more and more entrepreneurial minds will use this opportunity, and actually we're looking forward to it.
Great. And finally, Massimo, to you, you know, you work also with the Plan B Foundation, which is at the intersection of Bitcoin, digital assets, and financial infrastructure. From your perspective, what is do you think the single most underestimated risk in the creation of the digital asset ecosystem in Kazakhstan and Alatau City that you can draw on from your experience?
It's another good question and deep question. However, I still think that today the biggest risk is still the one of being behind rather than being too much forward. You know? For example, and in a sense it's relaxing, you know, compared to the buzz that we always hear, but we have mentioned AI surprisingly little, you know, in this panel. You know, usually the word surfaces much more often. So under this point of view, that's an advantage. But I'm thinking, you know, that when we think of, you know, the smart city, or when we think of digital finance, you know, when we thought of smart contracts and so on, we were thinking in a sense of an increased form of automation in our financial system that obviously creates risks, you know, and also provides new tools for managing them, you know, for example. And now there's element of automation obviously gets the full meaning from what we're seeing happening with AI agents. You know, I think this is news of today about ChatGPT allowing you, an agent, to access your bank accounts. I do think that the biggest risk is, for example, not considering that blockchain technology or smart contracts will have to interact with AI, and they can both improve each other, you know, in the sense that, you know, AI can make the access to blockchain technology much easier, and can make blockchain technology much more clever than it may have appeared. At the same time, blockchain technology, smart contracts, set some rails into the behavior of systems that often is exactly what is missing and what is too dangerous with the way we are treating AI today. And there is also a level of traceability in front of the obscurity, in a sense, of how AI proceeds. So I think that being on the cutting edge of technology, and also of you know, how you think of regulations and infrastructure, is still the way to go, you know. And the biggest risk is to run in big risk for fear of risk. I don't know what it means, but maybe if you understand the rest of what I said, what I say is, not missing the pieces of technology that also help us into protecting from the risk that innovation always entails.
Thank you for that. Before I go to the panel, to close off with one final remark on Alatau City that you would like to share with the particular audience. Does the audience have any questions that they would like to any members to ask to any members of our panel? If you don't, it's also okay because we're a bit behind time. But if there are no questions, if I may ask for each of you, please starting from you back to any closing remarks that you have to share with the audience about Alatau City.
My closing remarks, one sentence is Alatau is an icebreaker. It's a platform for testing advanced new digital and crypto fiat solutions and for scale successful innovations across in Kazakhstan and mainland.
Yep. I think kind of it's never too many good projects. So for Kazakhstan, we have kind of very developed mainland, as we call it, mainland jurisdiction, which is kind of codified regulatory framework, etc. We did build AFC, common law, principle-based, risk-based regulation, which is, from my point of view, highly successful, and it is home for Binance Kazakhstan today. And now we started to create, as a country, Alatau City, which is, I believe, another great project. And I think we'll repeat myself, but it gives the different choices and opportunities. So the same company could have different opportunities in different jurisdictions, but another company could just have a greater menu of options which are more suitable for their business model, for their business case. And as for the country, it's just important point is just we keep that companies at home, we capture the opportunities kind of with the global trends by providing these different options and different jurisdiction which should suit kind of as a whole should suit any business which wants to operate from Kazakhstan.
To finalize, Alatau City is a gateway, and now is a great time to join. So we welcome the businesses and ideas and opinions and entrepreneurs. So please welcome.
Yeah, I also like the idea of Alatau as a gateway, or also, if we want, as a bridge, as a crossroad, particularly of one of the big issues that we have in digital finance now, making sure that there is a solid bridge between the digital finance and the real-world assets. I think that Kazakhstan, in particular Alatau, have a unique opportunities to become a solid bridge between real asset and the digital version. If this promise is maintained, I'm sure that investors and activities will come here very rapidly.
So let me thank each of the panelists for your views on Alatau City and Kazakhstan's digital future. And if you please join me in thanking the panel for their views. Thank you very much.
Thank you very much. 15 minutes break for your coffee, tea, and conversations with the speakers if you want to ask some questions. Welcome back. I hope you got charged with some coffee or tea. An amazing pastry, by the way, really compliments to Kazakhstan for your cuisine. We are moving forward, and we will be having, in my opinion, one of the most impressive plethora of speakers in this panel. You'll see it in a second. And the topic of discussions will be dedicated to digital payments with specific focus on some products that are changing the world, including CBDCs, stablecoins, and different infrastructure ecosystem facets for the cross-border payments. The moderator of the discussion is the one who is managing and building the Digital Tenge project here at the National Bank. And the speakers are the following. So we will be having representative of the Central Bank of Turkey, Ahmet Bugday. We will be having Ekaterin Galdava, Deputy Governor from the National Bank of Georgia. We will be having Director of Research of the Center for International Governance Innovation from Canada, Arden Olowukere, and Sanjar Jamalov, Country Manager for Kazakhstan and Central Asia at MasterCard. Please take your seats and enjoy the panel.
Well, greetings everyone. It's a real honor to actually participate in such activity and in this particular panel session. Today we're going to talk about digital assets reshaping global payments. And before we start, I just want to clarify on how exactly this panel session is going to be. There should be 3 rounds, and we're going to ask and answer some questions relating how exactly digital assets are affecting our world and our sphere of finances. And if we'll have enough time, we also will be able to actually have some questions from the audience. Well, if not, well, that would be a pity, but still. I hope that would be a great discussion. And we would start from something that I would call a state of the art. So what actually digital assets are and what they are doing in payments today. I guess you need some kind of introduction. Maybe it's obvious, but still. Well, actually, everyone can see that over the 5 years, maybe a decade, digital assets actually stopped being an experiment, but become a real, meaningful implementation of digital technologies that can actually significantly change the world. And in my opinion, they are actually changing the world right now. Each of the panelists is working with payment infrastructure that either uses digital assets or is being reshaped by them right now. And we see that it's not only pilots, but it's also some real implementation, real use cases that really changes how things are working in finances. So my questions will be, in this first round, will be about digital assets doing something in payments today that was not possible or not feasible like 5 or 10 years ago. And I guess we'll start from our guest from Georgia, Ms. Galdava. Georgia actually sits in crossroads between Europe and Asia and has actively invested in payment modernization. And I might even say that Georgia is quite similar to Kazakhstan in this particular regard. In your opinion, how can countries like ours, countries that are not global reserve currency issuers, leverage digital assets and modern payment infrastructure to become regional hubs for cross-border settlement?
Thank you so much. First of all, I'm really very insightful because I can see this kind of excitement development of the country, of the Kazakhstan, and also see this kind of very comfortable and very clean city, first of all. Also to see this kind of developments, which are really, really very impressive. So, Small maybe talks about myself. I'm just heading the payment department, but I'm just heading the traditional one, payment department, which exists in Georgia for many, many years. So I'm also a central banker. I spent a lot of years at the central bank, so whatever I'm just listening from this side, from the side of the audience, sometimes, let's say it's not that kind of comfortable for me, because we're always taking care of the risk, we're always taking care of the safeguard of the sustainability, because it's done for us, it's granted for us by the Constitution. Maybe a decade ago, we were just only talking about the cash, how important this was cash and what we have to do with the cash. And now the reshaping of the world, the reshaping of the society is moving so fastly that even I have to say about a small example. I have a very good employee with whom I'm just having some kind of talks, but kind of rarely. For example, 3 months ago, we were talking about the new development in the digital asset category, and all his wording were so not familiar for me. And on every he's coming and entering my room, I'm always asking him, what is the new one? And he, again, is just shaping and underlining that there are so many new and interesting things. So what the Georgia had to do in this regard? First of all, we just mostly are thinking about our traditional infrastructure, about modernizing our payment system. So for that, we started to do some kind of very influential and very significant project, like upgrading of the RTGS system. It's very well known to every one of you, because even though we are just dealing with the crypto, everyone knows what is the real-time gross settlement system. So we did it perfectly. The first one was done in 2001, and the second one in 2016, and lately we just did the upgrade of the system. One just finished a month ago. The new project, which also involved our development in this payment system, goes to IPS, this fast payment system, which will be done by the end of the year. And of course, we will think about this kind of cashless involvement of the merchant, of the physical entity into the system, and of course about the source of money that will increase the banking system assets as well. We're also just thinking about the national card processing system, which of course we are so thankful to the MasterCard and Visa, because this kind of card system did a lot for our country. They developed our banks technologically, and we have maybe one of the most, developed card scheme in our country. And also the second is the openness from the side of our system and of our countries. Of course, it will be very easy to speak about our mutual understanding, about our memorandum, but we have to think technologically, how we have to switch, how we have to connect our system. And first of all, legislation is very, very thinkable from our side. And the third one may be the trust, because geographically we are in very nice place, especially Kazakhstan and also Georgia. Besides the geopolitical circumstances, because geopolitical wars, we still have very good situation, and we hope that we will have calm situation, stability, which also underlines the financial prosperity for the country. And we will think that using this kind of, turbulence from our side will be very good. So, of course, we will think about our future connection with the Kazakhstan, and we'll try to connect all this kind of already developed and new digital system in the future.
The part about legislation and all that allows, because we actually have the similar situation here in Kazakhstan. What we have actually learned is that create a CBDC or any other technical platform is quite easy, actually. But create laws for that, well, that's a completely different story. Well, again, thank you for your answer. I would like to ask our guest from Turkey, Mr. Bugday. Turkey has built some of the most advanced national payment infrastructure in the world. So we can talk about instant payments. Yeah, I'm also familiar with your CBDC research. We also know that there are several significant blockchain-related programs. Well, where in that infrastructure are digital assets, stable coins, tokenized instruments, or CBDC? Where is it actually doing real work? And what actually surprised you about adoption that looked like your assumptions were not met, or maybe you were wrong in your predictions?
Okay, thanks for asking. I would like to start by separating two things, digital assets role in our official payment system rail and market demands for digital assets. In our official payment systems, one of them is FAST, our instant payment system. It does daily work. We launched it at 2021 and it has a great adoption since then. It settles 15 million payments in a daily average, and it settles 28 million payments in a peak day. And it took less than a second to settle a message. This is one of our official payment rails. But in this system, digital assets is not playing a role, unfortunately, for now. Another complementary payment system rail we are working on, as you mentioned, CBDC. By the start of this year, we conducted a pilot project. We tested DVP scenarios in that pilot. So we can say digital assets have a potential in CBDC systems. But again, for now, it's not live, so we can't say a real work in that. Digital assets are doing real work in the market demands outside our official payment rails. Especially stable coins has a big demand from our citizens. As you may know, because of the high inflation and volatile local currency, let's say in the past, we are fixing that. People demand stable coin to protect their money's value. Stable coins are used to access for dollars easier and cheaper. And they are used for crypto settlements, but that's not the same as being part of the national payment system. What surprised me is that adoption didn't follow the design language. Designers talk about blockchain, programmability, and architecture, but users talk about speed, cost, trust, and control. They ask simple questions. Does it work now? How can I use this? And who helps me if something goes wrong? So the lesson is simple. Digital assets are adopted when they solve a real problem, like in Turkey. The design can be advanced, but adoption is always practical. Let me stop here. Thank you.
Really familiar with the situations that you explained that sometimes even the language doesn't exist for problems that we're trying to solve. Or like we had a lot of these discussions with a lot of our government officials that we are trying to propose some of our solutions, and the answer is like, no, it's not possible. No, you cannot. Like we had a lot of the discussions regarding inflation. It's a real problem for, I guess, the majority of financial regulators around the globe. And there is always like an answer, no, you cannot fight inflation. There is should be only a monetary policy can solve that. However, I think the opinion is actually changing, and I'm really glad that opinion is changing not only in our country but also all over the globe, and Turkey is an example of that changing the perspective. Thank you. My next question is going to Mr. Jamalov. I would like to actually ask you about traditional role of MasterCard, because MasterCard is actually an intersection of traditional card rails and emerging digital assets. And we all know that you have partnership with different type of decentralized finances representatives, such as crypto exchanges, stablecoin companies, and CBDC pilot globally. Actually, we also participated in one of these. What is MasterCard's operational view on how the payment landscape is shifting, how it's changing right now?
Yes, first of all, thank you for your questions. Hello, everybody, dear friends, partners, and obviously the colleagues and guests of our country. Welcome. We're always happy to see you here. Yes, as a also background, wanted to mention, like before, of course, MasterCard and my career, I also used to be employee of National Bank of Kazakhstan as well, some time ago. So it's always exciting to be back, but now as a guest already myself. And coming back to your question, actually, indeed, we see huge development of this stream globally and especially also in Kazakhstan. And when you realize that, I'm always telling this story, you know, that recently I've been in a wedding of my cousin, and like one of my aunts, who's like almost like 60 years old, coming to me and asking, do you like, oh, Sanjar, what do you think about Bitcoins? How should I buy it? And like, you're saying, okay, if people all the age already in Kazakhstan are really interested in this development, interested in this assets, if you understand that this industry is developing very fast. And we can see that as well, that even 5 years ago, we've been just discussing, well, what is blockchain, what we should do with that. But nowadays, you're seeing on this old presentation that infrastructure developed so much. It's unbelievable. It's evolving in huge temp. Even speaking about the Kazakhstan itself, that we as MasterCard in Kazakhstan have already several crypto programs. We had a crypto card with BCC Bank that was approved also by Central Bank of Kazakhstan and with their help. We have a card with Binance in AFC. We in a deep discussion and some programs with Binance. We have already program with them, wallet to card and card to wallet. And I can bring you lots of examples of what exactly we as MasterCard do in Kazakhstan, thanks to very good regulation from Central Bank of Kazakhstan and AFC, Astana Financial Center, that allowing us to work and actually expand this new technology in the country. But at the same time, we're working closely with, for example, Central Bank, that we launched together first CBDC for Kazakhstan tenge. Last year, we launched first stable coin with Solana, Central Bank, Kazakhstan and Eurasian Bank. Or again, huge project. So you see that we are kind of trying to be on the edge of these technologies here. That's an important point. But coming back to your question, where it's heading. In our view, the future lies, you know, somewhere, not it will be with digital currency, etc. I think the future lies somewhere in between. So we need to somehow find the way to connect digital assets with real classical financial instruments that we're already having, because future is definitely there. It's not that one technology evolves and it will kill the rest of the thing. It will be definitely somewhere merger of this thing. But the main, obviously, question right now that I'm hearing actually almost from all speakers today, that how we find trust, interoperability, scalability, and governance in all of this. And I think that's the main question that we need to answer as all market participants. And I think that's the crucial thing. But we are definitely see that future lies there in collaboration between all members. Thank you.
It's actually nice to hear the approach of collaboration is something that MasterCard, as one of the largest companies, international payments providers, takes as a principle, as a main principle. I also want to mention that I participated in our joint experiment with CBDC card. It was like 3 years ago. And actually that was maybe the first example when we could see actually how can this middle between innovation and traditional payment coexist. And I guess you're right in this particular regard. We would not, despite the presence of this term of disruptive innovation, I don't think that digital assets are like killing innovation. Of course, it disrupts market, it changes the landscape, but it doesn't mean that all of it should be altered without any kind of older versions of payments being existed. So my last question on this particular house goes to Mr. Oluwukere. I'm actually really glad to have someone related to academic research, and I know that your research at CIGI examines how digital assets are shaping monetary sovereignty and global financial governance. That's something I guess we all can agree. That's something that is now kind of difficult to predict, but still it's needed to be done. When you look at the empirical evidence on cross-border payments corridor where digital assets have been deployed, like if you're talking about remittances, trade settlement, liquidity management, what does the data actually show about cost, speed, and accessibility compared to traditional corresponding banking system? Because we have a lot of these discussions, and I actually, one of the participants in these discussions, I truly believe that digital assets can significantly simplify cross-border payments and make it cheaper. But is it actually so?
Question. First, I want to thank the hosts of this event, and I want to thank the organizers, P2P. It's been a great event so far. The hosts, the city has been pleasant. I'm looking forward to future visits. Regards the empirical data, I mean, the data is quite clear, but it should be read with carefully, because variables like costs and speed are not fixed, right? So what the data says about speed, I'll start with speed. What the data says about speed is clear, right? Stablecoin settlements are quite fast. They settle atomically, quote and unquote. But they're subject to restrictions and restraints, like they could be gas prices as a result of convergence and high traffic. And the global average costs, for example, of sending a $200 bill, $200 transaction from A to B, would probably be around 6%, which is a lot higher than the G20 requirements of less than 3%, I believe. So that's quite concerning. But stablecoin transactions settle quite quicker than that. But as I said earlier, it's subject to gas costs and traffic. Speed is a bit more complicated. Correspondent banking, 35% of retail payments and 55% of wholesale payments reach beneficiaries within an hour. But digital asset rails, they settle in minutes. But again, it's network dependent, and blockchain confirmation times vary, again, dependent on congestion levels. So that's complicated, as I said. Now, volume is a lot more complicated than speed. And yeah, because I've noticed that volume tends to converge on certain jurisdictions that have unique requirements. So in certain unbanked jurisdictions in Africa and Global South, as they're popularly known, we find a lot of convergence on these alternate payment networks. But we find the reverse in other jurisdictions. So, and we also see a lot of use case with institutional settlement. So it's been described as the killer app for institutional payments and settlements. And this has probably caused a lot of threats to the central banks and regulators. So that's quite interesting so far. So yes, that's about it.
It's actually really nice to hear that there is at least some kind of advance. I tend to think that it's still better than existing technology, than well, older methods of payment. But yeah, I just want to have some clarifying question. You mentioned that if you're talking about cost, it's 6%. Is it for private blockchain networks, like an average, or are you talking about stable coins? Yeah, could you please clarify?
The 6% is for correspondent banking, right? 6% of $200. Yeah, but for stablecoin payments and most digital assets, it's a lot less. But that's subject to, you know, gas costs that could increase due to traffic and convergence.
Well, thank you for clarification. And I guess we now will move to our second round. And we would talk about the topic that actually was predicted by Mr. Jamal. We're talking about infrastructure. Well, it's actually a really important topic for me personally, because I work for the Digital Tenge project. It's actually our Kazakhstani CBDC project. As you may know, it is actually designed to operate as a programmable money. We use a lot of Digital Tenge's programmability for public procurement. And actually, one of the hardest problems that we faced with is actually interoperability, because it's kind of difficult to connect and quite novel system as CBDC to private networks, to state databases, corresponding banking rails. And it actually becomes even more difficult if you're talking about cross-border payments. That's something that we are actually working on. And what we're actually going to talk about is how we can address existing gaps and what is actually the situation for now. And I guess my first question for this particular round goes to the person who actually predicted this topic. Mr. Jamalov, MasterCard processes billions of transactions annually, and I guess maybe even daily, across its network. When you look at the corridors and use cases where digital asset rails are gaining share versus where MasterCard's network still wins on cost, speed, or reliability, what does this competitive map look like today? What are strengths of MasterCard's in this particular regards in terms of infrastructure?
Yes, thank you. I think that's a very good question in the sense that indeed everybody believes that with development of these new rails, of new assets, our business will be obviously at risk somehow. But to be fair, we see it slightly different. So to be clear, like up to date, our main competitor is cash. It remains, that's the main thing that we are trying to kind of fight. And of course, because clear path for payment is what countries need, people need, what is good for our business as well. So we see CBDC and tokenized transactions in general as one of the streams how to deliver value. That's important thing is to deliver value, and that's what all businesses are looking for, how to deliver value cross-border, how to deliver this value from business to business. And we actually see ourselves as in a good place in this sense, actually, the one that can connect several players. Even you, as you just mentioned right now, that doing cross-border CBDC is very complicated. And when I think about MasterCard, because we work in 210 countries globally, we connect more than, I don't know, like 25,000 banks globally. So we kind of in this connection already. So we are in a good spot to start connecting all the market players between each other, so to help, first of all. And second of all, as again we've been mentioning before, everybody needs trust and governance for this. And we are also in a good spot to provide that. That's why we kind of developing our own initiatives in this sense of, that's why we, for example, created a multi-token network that actually designed to connect regulated institutions with their traditional banking systems, with B2B tokenized payments. So the idea obviously is to provide real-time settlement, and that's the whole idea. But on top of that, they know that because it's a MasterCard network, it's very trusted, governance is very fine, there is a compliance checks and everything. So this system already works. Even like one of recent examples, for example, we've done settlement between Standard Chartered and JP Morgan with tokenized treasury assets, actually, that went through blockchain and traditional infrastructure, and the payment obviously was done simultaneously. So it's actually the point that I was taking before, that we're trying to combine both worlds, because both worlds will be still existing, and we can be on the edge of all of these technologies. And we're seeing that this MTN network is already becoming quite popular for SME, it's becoming quite popular for real estate transactions, and we are there actually to expand this technology going forward. So we indeed see that this technology going forward will be developing. Even nowadays, lots of banks in our region starting settlement with us with stable coins, which is good for us, which is good for them, for the clients as well. So I think that's the path we will be taking. And speaking also about our project with stablecoin, I understand, like I was listening to Nurhat and totally understanding him from Nurhat from Binance, who said like, it's very hard to find examples how to use stable coins in Kazakhstan, because indeed everything flying simultaneously with help of central bank, government, everything. But at the same time, when you're thinking about the cross-border, that's where we can work. So we are right now trying to facilitate the dialogue with bank with Dubai and other countries, so who can work on this stablecoin project cross-border. And once we finally, of course, understand the first road, we will be discussing with the central bank again, how it should work, etc. But at least to find this way for cross-border transaction, I think that's the common goal that we in general have. Thank you.
Actually, I must say that I was always a little bit skeptical about like this idea of networks or multi-token networks, as you call it. But again, if there is an organization that can actually create one, I guess it should be MasterCard or any other player with this particular experience and infrastructure to build one. Again, thank you for your answer. My second question goes to Mr. Olavukere. There is a narrative around digital assets that they actually can solve, well, if not all, but at least the majority of corresponding banking problems. But again, the question is, in evidence, do we actually have one? From your perspective as a researcher, where have you seen digital asset payment corridors generally displace corresponding banking? Or maybe there is none. Maybe there is still a mixed evidence on this particular regard. Where has de-risking by corresponding banks simply shifted into de-risking of digital asset on ramps? And actually it's solving nothing and potentially making things worse.
Two aspects. There's a gray area in between the displacement and the retainment of correspondent banking. So there are places I believe there's likely to be a displacement, and then there are other places that I believe that the displacement has already begun to occur. So where I think there's likely to be a displacement is in the area of institutional settlement, wholesale settlement, and that's because it's the advantage of digital assets is that quick settlement. They settle very, very quickly, and the institutions are likely to take more advantage of this than peer-to-peer transactions. The other angle or other area where the displacement is occurring is in jurisdictions that are highly inflation sensitive. So in these jurisdictions, you probably want an advantage of access to other markets where goods are a lot cheaper. And inflation, you're stuck with your system, you're stuck with your money. But with these digital assets that are borderless, some claim it's a good or it's a bad thing for these instruments to be able to pierce through borders unchecked. But others would like to derive some benefits from this. So in areas where there's a lot of inflationary issues, you find people that gravitate towards digital assets as a form of payment or settlement. So yes.
Researcher, but I can definitely agree on wholesale payments, because as a representative of central bank, I see a great potential of digital assets actually simplifying and making wholesale payments more efficient than that. Again, thank you for your answer. You restored my faith in digital assets. My next question goes to Ms. Galdava. Actually, Georgia sits on a corridor between the European Union, Turkey, Central Asia, and Caucasus. As I mentioned before, we're a little bit similar in this particular regard. Where are the flows, remittance flows, breaking down or being diverted to informal channels because the formal digital infrastructure is not good enough? And what would it take to fix that? What is your opinion on this particular thing?
Thank you for this kind of very interesting question. I would like to underline, it might be not that kind of more, slow, because of course it's formalized, it has been done, but sometimes for remittances, for the people who are outside of Georgia, it needs 2, 3, 1 week, 3 days for just kind of having this kind of placement of remittances or whatever we have. Georgia is, we just gained our independence, sovereignty through the monetary policy views, through many macro topics, which is very favorable in this case. We have double-digit growth for the past years. We have slow, moderate inflation, and we are very much thinking about our environment because we are just having the border with Russia and all this kind of geopolitical sort of things. Sometimes it's not nicely just involving for our country. So we have to think about this issue first of all. And of course, we very well understand that we have a very well built London-based, based on the London Stock Exchange, 2 commercial banks which dominate in the country. Of course, they're also transporting and just exporting their services to the Central Asia countries, to Uzbekistan, to East Europe countries, to Armenia. They bought one of the big banks in Armenia. So they're just positioning themselves like a very good financial services company. But from the other side, of course, we have this kind of WASPs, we have this kind of digital crypto assets that exist. So currently, let's start from 2021, when the National Bank of Georgia decides to formalize this kind of regulations and made some kind of changes in the national law on the activities of the National Bank of Georgia. So this sentence about the virtual assets activity was added to the legislation. But currently, recently, by the end of 2025, NBG, National Bank of Georgia, decided to have strong, much prudent supervision of the WASPs. What does it mean? So financial reporting, which is really very necessary, at least to know what are the ideas, what is the amount, what are the flows inside, outside of the banking system in these kind of cases, and also have some kind of supervisory requirement, like to have the statutory fund, maybe $100,000 US, something. Everyone strictly was this kind of amount, but also to think how to build and also what to do with CBDC and what to do with the stablecoin. Because digital assets already exist in Georgia. Not digital assets, crypto assets. Crypto exists in Georgia. So this kind of approach and very well-known IMF white paper about the same risk, the same regulation, and from the side of the central banks, it's much easier to think and much easier to talk about the strict regulation, but this is kind of mixture, because today and yesterday we heard many controversial sort of things about the harmonization of legislation, about the AML and further know your client facilities, because we need still the governance, the procedures of AML procedures, so this is also very important for us. Another aspect which is also important for the new population, because we are responsible not only for the inflationary matters, not only price stability and financial safeguards, but also for the consumer protection. So we have to, educate maybe people. What does it mean? Because even sometimes for me, like being in the banking sector for more than 20 years, so many things are new and so many things are not understandable. So this financial literacy, which is also part of the activities of the National Bank, is very important. So we are also trying to find this kind of understanding and delivering to the public, delivering it to through mass media to the population, how it is important. And also the third one, maybe the fraud problematic issues, which is increasing with the modernized capability of the world, of the people, because it's today I heard very interesting chain about, it's not only the banking system, it's all kind of telecommunication, all sorts of institutions who are in the same chain, and by then when you are just having the cash and you need the banking account, of course it's the last point goes to the bank. So very important and very critical sort of views that now currently are discussed among the central bankers, also at the National Bank of Georgia. So we hope we will find very good solution, because when even we're just talking about the supervision, about this financial kind of reporting from the side of the WASPs, this is kind of global sort of financial product. So how to make this kind of harmonization between the different legislations, between the different blockchain DLT facilities, is not that easy. So this is the main sort of understanding for the Central Bank of Georgia.
Well, thank you. Thank you. Yeah, actually, I could not agree more on your words that actual central banks need to educate people, because I tend to think that due to this disruptive innovation caused by digital assets, there is one more role on the central bank. It's actually an enlightenment, because I actually remember that I had a lot of these conversations, like educating conversations with a lot of our colleagues, a lot of our representatives of our commercial banks, because like 5 years ago the situation was, I guess, much worse than it is now. I mean, globally, people didn't know anything about Bitcoin, people didn't know about blockchain, and actually, I remember that I even created presentations with the slides that explains that what is blockchain, what is the cryptography, how exactly it works. So yeah, I think that's actually one maybe most curious aspects of this digital assets being popularized all over the globe. And last question of this round goes to Mr. Bugday. Turkey's fast system that you mentioned before processes millions of instant payments daily. But cross-border instant payment remains a fundamentally harder and different problem. What is the technical and governance bottleneck that prevents domestic instant payment infrastructure from extending cleanly into cross-border corridors? Because it seems kind of logical if we have an existing internal system, why should not we scale it up? And should it be a CBDC or any kind of digital asset solution that actually solves it instead of just scaling it up?
Yeah, thanks for asking. Creating domestic instant payments is quite easy when we compare to cross-border type, because you have one legal framework, you have one central bank settlement environment, you have one domestic rule book that makes instant payments possible at scale. But when you come to cross-border payment system or interlinking domestic instant payments with the other countries' instant payment systems, it's a very different problem. Actually, we developed our fast less than a year, but we are working on an interlinking project. Actually, setting a meeting takes weeks. Yeah, it's a different problem. But the bigger bottleneck is governance. In a domestic system, everybody knows the rules. They know when a payment is final. They know who carries fraud liability. They know who can stop a payment. They know which regulator has the final word. But across the borders, none of these is automatic. You have different legal systems, two different legal systems, sometimes more. You have different currencies, you have FX risks, you have different AML rules. As everybody mentioned, you have different regulation. You have to harmonize the regulation before interlink instant payment systems with other countries. So the real question is, can we agree on a common rule book when something goes wrong? Can CBDC help? Yes, but only some parts. CBDC can solve a settlement problem, maybe FX problem, trust problem. Non-technical trust problem still remains. But it does not create FX liquidity. It does not harmonize sanction rules, and it does not automatically decide who has legal authority over a transaction. Digital assets, especially stable coins, maybe they can solve, but they move the problem to another level. When you use stable coin, how can you trust the issuer? Trust issue pops out. And reserve assets, redemption risk, compliance, and monetary sovereignty especially pops out. So my view is digital assets can solve the settlement layer, but the full solution needs governance. It needs a shared rule book. It needs a shared common standards, clear legal finality, and clear responsibility. Technology can connect the systems, but governance make the connection usable. Thanks.
Actually, I always remember one of the maybe first recollection me as a central bank worker is one of my colleagues telling the joke about two central bankers being in prison for 25 years. And when they actually became free, they were like standing in front of their prison talking about governance for half an hour, and only after that they decided, well, now we can go. So yeah, governance is always important. We can spend a lot about talking about it. But yeah, we actually would like to move to another, maybe our final round. And it's actually one of the most important and I guess the most interesting one, because there is always this ongoing debate on how exactly central banks or financial organizations should address the issue of two quite different systems. One of them is CBDC, it's public financial system, and another one is private blockchain, or maybe not blockchain, networks. I believe that these two types of networks will coexist. Maybe not so peacefully in the beginning, but still there should be some kind of trade-off between two of them. But the question is like how they should be designed to work together, and actually who should govern, again, the governance, who should govern the interface between them. And so, again, my question in this final round goes to, again, Mr. Bogda, for you. As again mentioned before, Turkey has deep technical expertise in RTGS, instant payments, and blockchain-based infrastructure. And I have a question in when you are trying to design a system that actually should be a bridge central bank digital currency or private stablecoin, or I don't know, any kind of traditional and innovative financial instrument, what are your non-negotiable technical requirements? And is there any cases where actually government's requirements create constraints that cannot be solved by technical means?
Okay, thanks for asking. Firstly, I would like to define very briefly these types of digital money, let's say. CBDC is central bank money, as you know. It has central bank liability. Deposit tokens or tokenized deposits is a commercial bank money, and stable coins are private money, private sector's money. These are really different type of money because of the liabilities. So when we design a bridge, the bridge must respect this difference. The first non-negotiable requirement is, in my opinion, settlement finality. When the payment is done, it must be really done. There should be no uncertainty. The second requirement is atomicity. If there are two legs of a payment with different payment system, let's say one CBDC, another digital assets chain, they both must be done or not done at the same time, atomicity. The third requirement is interoperability. System needs standards, common data standards, APIs, wallet rules, ledger adapters, and a clear way to handle exceptions. The fourth requirement is resilience. This includes cybersecurity. In this panel, in this event, AI hasn't been told much, but with the rise of AI, cybersecurity becomes really very important. So the system must be resilient. In payments, downtime is not only a technical issue, it's a trust issue. It's the most important thing in a payment system. Now, where does governance limit technology, you asked? Technology can make two ledgers to talk to each other. It cannot decide where a private token should be accepted at par with central bank money. Technology can freeze a wallet. It cannot decide who has the legal authority to freeze it. Technology can share data. It cannot override data protection rule. So architecture can reduce risk, but governance defines acceptable risks. Payments or money should be simple, safe, and overlay services or innovation can be around of its control layers. In our CBDC project, we don't prefer to say programmable money. Instead, we prefer to say programmable payments, because money must be simple and safe. It can turn to everything. You can buy anything you want with money, but you can program your payments. So the best bridge is not the most complex bridge. It's the bridge that is legally clear, operationally resilient, and trusted by all parties. Yeah, thanks.
We're actually reminding about this dark side of using AI, because I truly believe that this is a problem, because I see a lot of sites that can actually, websites that can create artificial photos of your passport, and I know that a lot of crypto exchanges can use these photos in order to verify your transactions. And I am actually deeply concerned with that, because I see this is a topic that actually not a lot of people talk about, but for now the problem maybe is not so significant, not so serious. But I really think that this is maybe a topic that we as a representative of central banks, we as a representative of financial organizations should pay more attention to. Thank you for your answer. My next question goes to Mr. Oloukere. The governance questions around public-private payment network convergence is fundamentally questions about who controls the rules of systems. Again, we are talking about rule books. In the jurisdictions you study, where is the government's questions being resolved well? And where is maybe absence of clear governance framework? Can you please give us some examples?
That's a great question. To answer this question, I would like to tell a story of two jurisdictions, right? One jurisdiction favors private networks and put an absolute bar on CBDCs. And another jurisdiction favors, well, not a jurisdiction, sort of a regional bloc, favors CBDCs and is setting up frameworks that are resistant, quote unquote, to foreign stablecoins. I find that the jurisdictions that are doing better are jurisdictions that have public infrastructure and private innovation running on that public infrastructure. And are not jurisdictions that place an absolute bar on certain financial instruments and or favor certain public or private digital assets. It's very, very tricky. It's actually almost like a tug of war right now, because certain jurisdictions that okay, maybe I should stop using certain jurisdictions and be more frank. The United States has put an absolute ban on CBDCs, and it's quite interesting and hilarious that you find that absolute ban in legislations that have nothing to do with payments. So for example, you find an absolute ban on CBDCs appearing in real estate legislation, not for tokenization of real-world assets, but a plain and simple real estate legislation, which is ironic and confusing. And I think in that jurisdiction, public payment networks have gotten a bad rap. And I guess it's as a result of, I guess, heavy lobbying by the private payment networks. So I do not know where things are heading. I do not know if there's going to be a convergence. I hate to go against what has been said earlier. So the previous panel, it was said that it's best to move fast, and there's certainly there are advantages to first movers. But I think it's sometimes it's best to act when the dust has settled. I believe it would be best to have a mix of private and public payment networks. But you would have an economic problem called Gresham's law, where bad money chases away good money because of the differences in the intrinsic value of the bad money and good money. And I haven't seen a lot of research done on the effect of Gresham's law when you have multiple currencies or multiple payments means existing at the same simultaneously. So yes, I do not have a clear answer to that, but I believe the best approach would be public infrastructure and private innovation running on it, and allow competition, and no absolute bar to certain private or public payment instruments. That's a bit too much, in my opinion.
I actually totally agree on with your words regarding competition. Yeah, maybe I'm a little bit more skeptical on private networks because this is a nature of monetary policy and the nature of money itself. It actually may be an issue in some jurisdictions, but still, thank you for your information. Thank you for your thoughts. My next question goes to Ms. Galdava, and it's actually a little bit a paraphrase, maybe, but I am interested in your opinion as a representative of a central bank. One of the key debates today, again, is whether the future of digital payments will be built around public payment rails, such as CBDC or instant payment systems, or around private blockchain networks and stablecoins. How do you, as a representative of the central bank, see the balance? Because we talk a lot about there should be balance, they should coexist, but how exactly this balance and this coexistence should be actually done, in your opinion?
This is a very, very difficult question because there are so many debates about this issue. Yes, they have to coexist. This is my personal opinion, but I am an ordinary member of the board of the National Bank of Georgia, and the board consists out of 9 people, so we are just in the deep discussion to where to go and what to do. We had the project with CBDC, with Ripple, which was done 3 years ago, but we didn't have some kind of continuation of this project. So what I can tell and what is my personal view. Of course, you already mentioned the monetary sovereignty. To deal with CBDC and having the digital currency of the central bank, of course, this means that emission is again at your hands, at the hands of the constitutional right of the central bank. So it's much more easy. But when you are just talking about the commercial banks and about other entities of the financial sector, whatever we're just hearing from the debates all over the world, we're just hearing that in 10 years or maybe even less, there will be no need for commercial banks. There will be only central bank, and there will be the account of the population and the entities. So, of course, we have to think about the intermediates. We have to think about the deposits, that liability side of the commercial banks and the financial sector, which is governed by us, by our supervision, but governed with the perfect management of the commercial banks. The second pillar and the second story of this, how to say, debates are these kind of stable coins and these private sort of organizations that are doing this, dealing with these digital assets. That means that all your sovereignty, you are just moving to the private sector. So the printing of the money, which is your constitutional right, goes somewhere else. You are responsible for the reserves also, but you have to have very good and very strict framework of checking whether these reserves are on the place of this stable company, issued company or not. So there are so many technical details that should be coincided and should be thinkable that I think we would spend the whole 2 hours about that. Because when you have your monetary policy at your hands, when you have this kind of monetary policy instrument on which you work for so many years, and now currently your broad money is governed by cryptocurrencies, which are also the assets, digital ones, so it's not that easy to talk about this issue. I think from the point of view of researchers, point of view of many academicians, this will be the issue that will be discussed in many, many years. But the hybrid system of the Kazakhstan, this is very, very, how to say, welcoming by our country and very, very interesting for us. I hope that in coming years, the world will come to some kind of point which is the better. But from the point, my personal point, I think this kind of hybrid system is the best case on the current stage. Thank you.
I'm glad that we are not alone in actually not having a clear answer for that particular question, because we do not have an answer for that. We are still looking for it. again, thank you for your thoughts, for sharing your knowledge. And last questions goes to Mr. Jamalov. MasterCard has positioned itself, and I guess it goes for maybe several years now, as a bridge between digital asset networks and traditional financial infrastructure. We can actually mention the example of CBDC card issued in Kazakhstan with our Digital Tenge project. You're actually connecting crypto wallets to merchant acceptance. You're also enabling CBDC interoperability with card rails, again, as in CBDC card scenario. Is it a traditional role while new infrastructure matures and you will shift to something else in future? Or you see MasterCard as a permanent layer in this digital asset payment scheme?
Okay, thank you. Again, brilliant question. If only I knew the future, yeah. As colleague already mentioned, like maybe in 10 years' time there won't be any commercial banks. That would be interesting future. But in general, of course, we're seeing that the world becoming more and more complicated in the sense that right now, of course, we're seeing that commercial banks still have their classical deposits still in place. At the same time, some other providers creating deposits for crypto assets, how to regulate all of that. At the same time, someone should, of course, govern that. Someone, of course, should be a dispute resolution center for all of this. And on top of that, there is, of course, a fraud. And all of this system is extremely complicated. But at the same time, we're thinking from the point of view of a customer. Eventually, customer wants best from both worlds, I would say. Yes, first of all, of course, they want this very efficient system that digital assets can bring, that all CBDC can bring, etc. Very easy, operatable, but at the same time, still nowadays, and I think people maybe always will want proper governments, good brand behind that. They will definitely need trusted partners who can manage that, especially when we're speaking about cross-border transactions. That's why for example, when I heard about the fraud, for this reason, for example, we created exactly crypto credential. That was one of the points here, because we provide IML and compliance check in crypto credential. So unlike other transactions, there you can go and send or receive crypto assets with simple ILs, with very simple term in the sense of, for example, like right now, when anyone who uses crypto exchanges, you have this 64-digit numbers, etc. While, of course, at the same time, in a crypto credential, you just can use something very simpler, just phone number, etc. But importantly, even if you don't know who is behind it, you know that the transaction is IML compliant, is general compliant with all the rules. And that's kind of the bridge we're trying to build long term. And this bridge, I think, will stay there for some time. Because even I'm just responsible, of course, in MasterCard for Central Asia, I'm seeing that every country trying to find their own way. Every board of central bank have their own discussion, their view, someone agree with something, some not. So that's create the whole system. At the same time, all the banks, all exchanges in this country have their own views as well. That's why there is so many different business models that we're seeing, even in Kazakhstan, how we had a project with Eurasian Saving Bank, with BCC Bank, etc. Everybody work on different model. And we are right now here to bring all of this best expertise from the 200 countries that we are operating with to find the best model. And of course, we believe that once finding this best model, we will stay as a bridge that will help to operate this model going forward. Thank you.
Thank you. Actually, it's really nice to hear that you have like a full-fledged plan or implementation scheme. Well, thank you again. Unfortunately, we're a little bit out of schedule, so there will be no questions from the audience, but I guess you all enjoyed this panel sessions. Actually, I enjoyed. Thank you for your participation. Thank you for your attention. And I hope we can actually consider this panel session be useful and productive for all of us.
Thank you to our moderator for great moderation. Thank you. Perhaps we can do a joint photo.
I will introduce in the meantime the next presentation. Thank you so much for this amazing panel. I think, yes, when you have so many amazing speakers, we can talk for hours. But we need to move on. And yeah, 100 more. I also want to be on this. There is actually an amazing rollout outside as well, if you want to use it. Thank you so much. We are getting back to this project that already has been mentioned today. It's also part of the papers that won the submission tournament. So I have these two amazing speakers coming from two sides, Simona Gamba and Massimo Morini, who will be talking about the city of Lugano and Plan B Foundation project of the Lugano coin, Lugano token, sorry, and my Lugano app. Welcome.
Thank you. So I will be as brief as possible since it's almost lunch time. Yes, I do, actually, yes. Thank you very much. So my name is Simona Gamba. Let me check if this works. Yeah. Okay, so I represent the city of Lugano, and I'm here today to talk about one of the main projects that we are working on as a startup inside the city administration. So I'm actually part of a specific team that works on digital projects and innovation in the city and for the city. So what we do is we work on many projects such as mobility, energy, tourism, and so forth. We work on specific new technologies. We've been talking about some of them today. And today we'll be talking about the project that's based on our city blockchain. I will not go into details, so we can maybe have a chat during lunch and talk about this as well. But anyway, we're working on smart city innovation and services. So today we'll talk about My Lugano. My Lugano is actually an ecosystem that rewards citizens and also merchants that use and exchange token that is actually local. It's called the Luga. And it's a legal tender currency. It's not a stable coin, it's a local payment token. And the city of Lugano, like the citizens call it the coin of the city. And it's based on Swiss ledger. And we'll be talking about it maybe later on also with Massimo. Anyway, so a lot of cities have apps. And these apps usually have services, events, news, things like that. Ours is the same. It has all of this, but it also has like the main call to action on the homepage is actually payment. So you can pay with it, you can send money, receive it, you can receive cash back. So what happens is that we are connecting the citizens to the local merchants. And this project was born actually in 2020 because we wanted to help people, actually merchants, to get people in their shops and not to buy things online with big companies and the big distribution. There's a wallet also, and this wallet not only manages Luga, but the citizens can also use crypto in it. So that's why we positioned Lugano way back in 2018, 2019 as the crypto-friendly city, and then we continued with this. So actually we have more than 500 merchants in the city that can receive crypto and the coin from the city as well, the Luga. So you can buy a motorcycle if you want to, and you can also go to the movie theater or go and buy a coffee as well. So this attracted a lot of attention also from the media. But the nice thing is that all of you, if you all decide to download the app, is that you can also as tourists benefit from this because you get a 10% discount from the merchants. And this creates and keeps the value inside the city because then users will not have a chance to exchange the money in francs, but it remains as a value inside the city. So you were talking about, I heard most of you saying that it's a problem to create trust and also to explain to users how blockchain works or how payments work and crypto works. And this is exactly the same challenge we had. So we had to create a lot of campaigns, and we also had marketing money and also urban economic development budget that was put in specific wallets that we then QR coded around the city, so people could go around and, let's say, get a specific amount of money. So you could win 5 francs or 200 francs and go spend it also inside the city. And this helped us also, and it's helping us because this type of infrastructure is not just helpful for the local merchants, but it's also helpful, let's say, if you want to do specific measures. I don't know if you have something similar here, but we have 200 francs that we give to all 18-year-olds as soon as they turn 18. And the problem is not having them go and spend it on alcohol or anything different. So this is like a culture voucher. So we can shortlist specific merchants that are connected to culture somehow, cinemas, bookstores, whatever. And so this helps us create a shopping experience that is also helpful for the citizens and for the tourists that come, because we can decide to choose where people are going to spend their money based on specific policies. Let's say culture, but it can be sustainable shopping, or it can also be helping, let's say, creating discounts for all the employees of the municipality. For example, we have a way to recognize all the people that work in the city, and they get a specific extra discount in all these shops. So this is useful for us, and it's helping us also create like a test bed for other cities that are interested in this. We're actually white labeling this type of system. So if you're interested, let us know. And yeah, we have 60,000 users that are actually active on the app and that use it. And out of these, 40,000 are the ones that are actually engaged in the wallet, like using the wallet. So it's always increasing, and people are starting to get it, to understand what crypto is and how digital payments work. And so it's, yeah, working well. I would give you the floor now. Huh?
Okay, that's perfect.
Yeah.
So you need to give me the remote, and that's it. Yeah, now we do another very brief analysis of the economic meaning, in a sense, of what we are trying to do in Lugano. You know, we live in a so-called platform economy. So there are entire markets which are dominated by one big monopolist, you know, with one big platform. In a sense, we like it because usually it gives you some, you spend a little bit less, you have more supply. But this has damaged a lot local businesses, you know. So our idea was, can we actually make a platform for those without a platform? And that's the idea that was implemented together, you know, with the Swiss Ledger blockchain, with the My Lugano app, and with the Luga digital local currency, is to actually create, to put all the local shops, all the local merchants and businesses of a city onto the same platform, where they can also decide, you know, to provide incentives to the user to gain their loyalty, so that, in a sense, the same virtuous mechanism that the big platforms benefit from can exist also for the local businesses. You need an intervention of the government, in this case of the local government, because you need to solve a sort of coordination problem. It's very meaningful to start from a payment platform, because not only, you know, you bring back to the city one of the things where you usually have to give returns to external players, but also it allows you to circulate tokenized benefits and incentives very easily on your payment platforms. And the local currency, in a sense, ensures that the resources remain spent locally. We actually built a Swiss Ledger, which is based on open source EVM compatible blockchain adapted to the local needs. It's a consensus algorithm where essentially the local businesses and institutions validate transactions. very important is this logic of digital cashback that allows the merchants, in a sense, to create something that increases the loyalty of the users, because if they use the Luga, they do get cashback. The public administration gives an initial endowment to start a business, but then to those that are able to expand their business in Luga, they keep this initial endowment, but then start essentially providing the cashback benefit themselves. Interestingly, this has some good economic consequences. It incentivizes loyalty in the users and commitment in the merchants. It actually represents, in part, an increase of monetary supply, because there is not an automatic right to conversion for the user, and for the merchants it's conditional. Even if a part of the reserves instead is held in the financial system as a reserve, this, in any case, has a multiplicative effect, because through lending, it benefits in the end still the community, and it has been measured already, but we are seeing the same in Lugano, that the kind of money that you earn with a benefit like cashback gets spent more easily and more rapidly, so you also increase money velocity. Interestingly enough, this infrastructure has been used by the municipality for different kinds of targeted incentives. For example, Luga has been distributed in foreign events or in events in other cities of Switzerland, but then being spendable in Lugano, it attracted people to come to Lugano. Some urban promotion initiatives has been based on people coming and being able to find Lugas by some gamification, during the city. The private sector decided to use the Luga even for their final year bonuses, because that, in a sense, being usually local businesses, they were benefiting partially from their bonuses. And as Simona was already talking about, that there is also the possibility of doing conditional locations, in the sense that only if you have some features you actually get a certain benefit, that are also targeted, because they can only be used in a certain kind of sector. Obviously, digital identity is an important component here, for example, for this kind of conditional location and targeted usage. We're trying to design it really with the maximum privacy by design. For example, I don't know, if you you can do something or you can receive something, or only if you are older than 18, the check will only be on the fact that you are older than 18, not on your full age. So the minimum exposure of your data. And also, since that's a component of digital identity which is used for payments and for other activity, we have started to implement different forms of keys to reduce as much as possible the linkability and also the surface potentially exposed to attacks. So the message is that even if apparently we are talking about one new digital currency, one new blockchain, and some governmental initiatives, in reality that's for us is a unique urban infrastructure that allows, in a sense, to drive and to give also to the local economy the possibility to grow and somehow beat the competition from big international foreign platforms. Thank you very much.
Yeah, maybe a question, and then we move toward the lunchtime, and all the other questions take place there.
Thank you a lot for the presentation. My question is, I'm just curious, do you have maybe some assumptions or calculations of public value created thanks to this platform for the maybe growth of GDP of city or something like this?
Yeah, we are doing that now. We are coming out with econometric analysis. For doing that, you need to have a few years of examples, and now we do have them. That's going to be the next version of the paper. Now we have collected data. I think that we will come out with the version with the econometric part in a couple of months.
Yeah, actually, use the moment to remind you that all the papers that are discussed at the conference can be found in the research library on the website, p2p-sci.com. Any other question? Then I'm thanking the amazing speakers, Massimo and Simona. Thank you so much. And invite everyone to have some lunch at the usual place. We are coming back here. What's the time? By 2:10. 2:10.
Раз, раз. Раз, 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 раз.
Раз, два, три, четыре, пять, шесть, семь. Раз, два, три, четыре, пять, шесть, семь. Раз, два, три. Раз, два, три, четыре, пять, шесть, семь. Раз, два, три, четыре, семь. Раз, два, три, четыре, пять, шесть, семь. Ты YouTube отрубил? Раз, два, три, четыре, пять, шесть, семь.
Раз, раз.
welcome back. By the end of the second day, I think I learned how to use this mic. Welcome back. And now there is a pretty special moment because there will be a presentation of the research that has been made just these last weeks. So we'll be basically reading the work in progress. The research has been made on the digital assets and crypto ecosystem here in Kazakhstan, and we will be presented by Dia Savitkanov, CEO of Kazakhstan FinTech Network, who is the soul of this research. Please welcome on stage Dias.
Good afternoon, everyone. I've been off the stage most of the time helping Exponential Science with this event to happen. And at this moment, it's a little bit hard to be off the stage and then on the stage and also preparing papers. So I'm a little bit nervous about it, but Можно презентацию, да? So let's talk before they put the presentation slides on the screen. We are still preparing paper on the progress that we have in Kazakhstan on the field of digital financial assets with NBK, FinTech Center of Kazakhstan, and Formula, it's a consulting agency by Cointelegraph. So have a little technical problems, but so this dialogue probably might be impossible like 3 years ago, and now we have regulation. It was licensing came like 1 month ago, and NBK started putting companies, letting companies in the sandbox like 1 year ago, probably in the end of 2025, summer 2025. And now they have more than 30 companies in the sandbox. And
so as the work is in progress, so actually the work needs this behind the scenes. And I wanted to ask you, how much have you learned since yesterday? Who is here in the audience from Astana? Actually, I thought more people. That's amazing. So thank you so much for hosting us here. You have an amazing city. And I guess all the rest, will you confirm that we are impressed of what is being done here in Astana? Other representatives from Kazakhstan? Amazing. So which cities? Almaty? Amazing. Do you come often to Astana to learn about the projects here? Or this is also maybe the benefit of this amazing event that National Bank is hosting. And then I guess we have so many other countries that demonstrated not only their expertise and what Kazakhstan as a developing ecosystem, digital ecosystem can learn from, but also I can tell from my perspective that I've been in the space for 10 years, that actually what we've been hearing these 2 days from Kazakhstani projects is something that we can learn from. I'm also very impressed by how integrated and how cohesive all the speakers have been, and you can see that everyone here did their research. Sorry for the pin, not only research in the academic sense, but in the sense of international overall integration. And it's not actually simple. We are all talking about the decentralized world. We're talking about international framework. But then we are, as all humans, pretty used to look at the world through our own eyes. And actually traveling helps a lot to learn not only about other cultures and countries, but actually to continue integrating different ideas that we can learn all around. Do you think we are ready? Private stuff? Don't look there. Another question that I would love to ask you. So those who live in Kazakhstan, how many of you have a crypto account? Okay. How many of you have a crypto account? Well, actually not only from Kazakhstan, anyone in the whole. How many of you have a crypto account for over 3 years? How many of you have a crypto account for over 5 years? How many of you have a crypto account since 2016? Okay, hi Paolo, amazing. On this note, I think we've made a great progress in 10 years, and I'm really excited to learn more about what Kazakhstan has been doing. Diaz, please, welcome applause again.
Everything was just fine before me, and everything that could go wrong got wrong on me. So one more time, good afternoon, ladies and gentlemen. I'm going to present the draft of our. I just wanted to pre-announce our research with NBK and Cointelegraph on this event. So yeah, probably we will just start with. So digital financial assets are no longer a crypto experiment. They are a new form of financial infrastructure. And I say infrastructure deliberately because that word changed everything. Infrastructure isn't about hype or volatility. It's about settlements, custody, standard trust. It's about what markets are built on. Kazakhstan in 2026 stands exactly at this inflection point. The normative framework is in place, and that's not a declaration. Infrastructure is being built across 3 parallel tracks: NBK, AFC, Alatau City. The market is forming 30 projects in Sandbox, the first industrial issuance this year. The question is no longer can be digital financial assets be regulated in Kazakhstan. The question now is who will build the liquidities, the standards, and the products with real economic value. To understand where Kazakhstan stands, we need a moment of global context. 2021, the European Investment Bank issues the first digital bond on Ethereum, $100 million. 2023, MiCA is adopted, the most comprehensive regulatory document on digital assets in history. BlackRock launches Beetle, tokenized money market fund within 2 years and hold $2.6 billion in assets. 2024 and 2025, Franklin Templeton, JP Morgan, Hong Kong, Singapore, the UAE, tokenized sovereign bonds, and Visa launches stablecoin-based settlements for US banks. Today, May 2026, tokenized real-world assets on public blockchain have crossed $20 billion. This is industrial-scale production. Those who are building into this infrastructure now will have competitive advantage in 5 years. And Kazakhstan has a real chance to be among the first in the region. Let's look at what is already working and what is directly relevant to us. First, tokenized bonds, 5 stars of maturity, and Kase Digital is launching exactly this in 2026. This is not someday, it's happening right now. Second, stablecoins as settlement instrument. JP Morgan moves $5 billion a day through its network, and 7 tenge stablecoins, not US dollars or anything else, tenge stablecoins project are live in our sandbox. At NBK's sandbox. Third, real estate tokenization. 4 companies in our registry are testing this today. What has matured yet but deserve attention, tokenized money market funds. this and next wave. Now on regulation. The world has chosen different approaches, but all jurisdictions are moving in the same direction, regulated tokenization. The EU chose maximum breadth, MiCA a single license across the entire economic area. Singapore chose risk-based approach, maximum flexibility for institutions. Hong Kong issued their first stablecoin license in April this year, and UAE is building a competitive ecosystem through two separate regulators. Against this backdrop, Kazakhstan, with its three complementary jurisdiction, doesn't look like a laggard. It looked like a country that has its own model. The question is only whether we can articulate that model to the outside world and use it as a competitive advantage. This is perhaps the most important slide in the deck, because even domestically many people don't fully understand how this architecture works. We understood it today probably. Kazakhstan doesn't have one regulatory venue. We have three, and they serve different functions. So NBK and RDFM, Agency for Development of Financial Markets, is a mainland jurisdiction. The digital assets law, the resolutions, the license, the sandbox, this is the regulatory foundation for domestic market. If you want to work with Kazakhstani citizens and legal entities, you work here. AFC is the international jurisdiction, English common law, AFC court, Astana International Exchange. If an international institution investor comes to Kazakhstan, they come through here. This is the entry point for foreign capital into Kazakhstani domestic markets and assets. Alatau City is something very different from what we have in NBK and AFC. We should distance it from NBK and AFC, because Alatau City is technology hub. It's like a building playground for technological companies and innovations. And here it's important not to confuse roles. This is not a financial jurisdiction. It's where you can develop blockchain protocols, build infrastructure, benefit from tax incentives, but financial products are licensed through NBK or AFC. Alatau City is about creation, not distribution. This three-tier architecture is a genuine competitive advantage. There is nothing comparable in the region, but it only works if three levels coordinate rather than compete with each other. 6 levels of regulatory stack from the foundation law of supervisory instruments. So the first one is digital assets law in 2023 establishes the core category secured DFAs, secures DFAs, which behave like securities, and unsecured ones, which is essentially crypto. The regulator is the NBK. Resolution number 45, adopted in this April, sets the rules for unsecured DFAs exchange operators. IT security requirements take effect in July. KYC and ML procedures are already active. What I find significant, the reporting line to the Central Security Depository. This is the interface between the DFA market and traditional clearing infrastructure. It means the system is being built on integration with capital markets, not as parallel universe. So AFC ecosystem. AFC is not a duplication of NBK. It's a different function. If you want to structure complex transaction for a London-based fund that wants exposure to Kazakhstani assets, you do it there. English law, AFC court, SPVs, trusts, all the legal instruments that international counterparts understand. And Astana International Exchange provides the exchange infrastructure. AFSA authority has its own digital assets frameworks covering DLT, securities, exchange tokens, utility tokens. The strategic function is clear. International investor comes through AFC, access Kazakhstani assets, with NBK governing the domestic side of distribution. This is a bridge, not a competing regulator. So Alatau City is technological venue, not a separate financial jurisdiction. Built here freely, develop blockchain protocols, build payment infrastructure, benefit from the tax incentives. But if your product touches financial services, licensing goes through NBK or AFC. The value chain is technological development here, product licensing there, market distributions through banks, brokers, and payment services. And who is already in the market? So now you can see like a small market map. On the regulatory side, it's NBK, AFC, and AFSA, Financial Regulation Agency. On the exchange side, KASE, Astana International Exchange, and Interbix. Banks are already participating in some of DFA and crypto projects. We have custodians, and CSD as a national infrastructure. And this is more important, we have issuers like Samruk Kazana that is working on natural resource tokenization. Upperchain that is building real estate products, plus growing pipeline of corporate issuers. On the blockchain and compliance side, Solana as a network of choice of KASE Digital, Axelect, Binance, and Crystal for analytics. As the players are in place, secondary market liquidity is not. That is the job that we have ahead. And a little bit more about sandbox maps. Of the previous is market in general, and this one is about NBK sandbox. I just want to walk through all. I don't want to walk through all the 30 projects. This slide is a reference, but the distribution is telling. 8 exchanges and brokerage projects, the largest segment. 7 tenge stablecoins projects, 6 unsecured DFA exchange operators, including Bybit, which came from outside Kazakhstan, 5 real estate tokenization projects, 4 infrastructure and custody players. And then the bottom section, licenses that exist in law, but no active projects yet. Secondary market for DFAs, tokenized money market funds, Islamic DFAs and Sukuk, RegTech and market data providers. And I want to be direct here on both the strengths and the constraints. Probably, so what we have, a functional regulatory framework, 3 complementary jurisdictions, unique in the region, high mobile banking penetration, Caspian, Halyk already have a large user base for DFA project, historical experience with mining infrastructure and strategic position between Europe and Asia. What is slowing us down? The first one is no functioning secondary market. The exchange live, but liquidity hasn't been created. This is a central problem. Second, regulatory arbitrage between NBK and AFC creates legal uncertainty. Third, issuer disclosure standards are weaker than MiCA and MAS. For no public machine readable market data, no statistics, that is a trust problem. Fifth, talents. We don't have much lawyers, financial engineers, and other professions. There aren't many of those, and it doesn't get fixed quickly. So, and this is a 3 scenarios that we are foreseeing, and I will be direct. The first one satisfies me. The second is realistic. The third is ambitious but achievable. The first scenario is a regulated island. Self-contained national infrastructure, a few licensed operators, domestic corporate DFA market, limited international integration, essentially a more efficient version of a status quo without quality flip. This will happen on its own and if we do nothing special. The second scenario is regional hub. Kazakhstan as Central Asia's DFA center, NBK and AFC harmonized, cross-border flows with neighboring countries. This requires specific decisions, but they are within reach. Then the third scenario, TradFi convergence. By 2030, the boundary between DFA and traditional finance effectively disappears. Banks tokenize assets and as standard products. A digital tenge operation as a wholesale CBDC. Probably not this slide. Next one. And I want to close where I started. Kazakhstan has moved past the question of can DFA be regulated. That question is closed, and it represents an enormous amount of work that's done by regulators, industry, and everyone in this room. The question now is who will build the liquidity, the standards, and the products with real economic value. The funnel is simple. Regulation is already here. Products come next, and products create liquidity. Liquidity generates trust. Trust makes us a regional hub. Every step of that chain requires specific people taking on specific tasks. I hope some of you are exactly those people. And that is and that this conversation continues well beyond this room. Thank you.
Thank you so much, Diaz. That was actually a very concise and not simple way to present, but very simple to digest. I guess all this kind of structured schemes are something that goes straight to the point. I think we can remove this maybe for the panel. Можно убрать, пожалуйста, панель эту? Кафедру. We are moving forward. And we have mentioned this topic several times because nobody has passed current discussions of financial services without mentioning AI. But now we will be having a panel dedicated to AI in financial services. And this is a very important topic because I think after the ChatGPT moment, as we call it, from futuristic discussions, we actually passed in 1 second to a discussion how we can start doing it yesterday. So I'm very happy to introduce you to the next panelists. So we'll be having Ayja Narinova, who is leading the AI integration in the National Bank of Kazakhstan, Talgat Amanbayev, whom you already saw today, the Chief Innovation Officer at the Astana International Financial Center, and Amangildi Zhumabekov, CEO of a very ambitious new project, Cryptic AI. The moderation will be held by Nihil Vagdama, whose area of expertise, academic expertise, actually includes AI. Welcome, and I'll leave you this.
Good afternoon, everyone. We are down to 3 panelists. We had 4 before, but we're not yet in the age where we could have had also an AI agent on the panel as well, but that would have been quite interesting if we had arranged it. Before I go into the panel itself, we had Christina ask a question just before about how many people had been using digital assets. And I think maybe half the room put up their hands, maybe less than half. More, would you agree or not? Was it about half? About half, okay. Let me put this in another way. How many people here have used AI today? How many people have used AI in the last 2 hours? There we go. So you kind of see the difference between the adoption and indeed the pace at which blockchain has come into markets and how AI has actually, you know, surpassed even some of the previous apps that have broken records for their particular adoption itself. So, we have our panel this afternoon on AI in financial systems. As we all know, AI is being applied to almost every function in financial services. We're going to talk about some of them, I hope, underwriting, fraud detection, regulatory reporting, and even get the perspective on how it is being used in supervision as well. The question for Kazakhstan is not whether AI will reshape the financial system, it is a question only of how fast will that happen, on whose terms, and with what controls in place. And we have three perspectives about this on stage. We have the central bank, we have the AIFC innovation, and indeed we have builders as well, talking about their particular perspective as well. The discussion we're going to have, I've broken down into three kind of parts, right? The first is about what AI is actually being deployed, and we're going to ask the panel about that. Then we're going to move on to actually discussing about the implementations itself. What makes that hard? What makes it risky, perhaps? And why is it hard to govern? And then the last part will focus on Kazakhstan and what it should prioritize next in terms of supervision, future plans, regulation, and indeed institutional readiness. But before I get into the formal questions in these three rounds, I'd just like the panel to give me some framing remarks, if they may. And for Talgat and Amangeldi, I'll ask you about your view on where Kazakhstan stands on AI, one way that you have personally used AI, or personally or professionally, and if you would, if you don't have to, your favorite AI tool, application, or use case. Okay? And for Aijan, I want to begin with the National Bank's strategic agenda, because that sets the institutional context for the rest of the discussion. Panelists, please don't talk about the particular use case in depth. We've got plenty of time to talk about that a bit later, but this is just to kick things off. So if I start with you, Talgat, from the AIFC and innovation ecosystem perspective, where do you think Kazakhstan currently stands on AI? And is there an AI tool, application, or use case that has changed how you work or think about financial innovation?
Yeah, thank you for having me, Nihil. So, first of all, AIFC, AI is in our name, right? First two letters are AI. And it's a good joke to start from, but in general, you can see adoption of AI in a quasi-state and private businesses. We have cases in the news how our sovereign wealth fund, Samruk Kazina, has introduced AI board member. There were attempts to do RegTech and SubTech with the use of AI. Particularly at AFC, we tried to apply it for the scoring mechanism. When you come to AFC and set up a company, there's very little traditional scoring they can give about the company, right? You have to dig into who is the founder, what's the capital, what they do in the business, and try to get the reputation context, try to build the score for this new entity that was set up at AFC. Speaking of favorite tools, I think investing in every tool is a good choice because there is a great race that we're witnessing. As of yesterday, I love Anthropic and Claude again because they just released Fable 5 and it's been showing great, except it's very expensive now. It eats the tokens very fast. At work, we use a lot of vibe coding apps. We actually turned some of our developers into vibe coders. They are much cheaper. They do a lot of more projects, and there are great tools out there. They're allowed to do simultaneous tasks. And then our steering committee, which was deciding what sprint to work on, has been increasing its pace of features rolling out for our internal portal, for the portal for the participants. So I think a good use financial effect already. And for the plans, I think regulation, how do we govern AI? How do we work with it? Most importantly, how do we punish AI for doing something wrong is a question that we're trying to answer. Yeah, briefly this.
Fantastic, thank you. We're going to go into some of those points as we continue on our panel. If I may turn to you, Amangeldi, from the builder side, where do you think Kazakhstan is strongest on AI adoption? And the same question to you on what AI tool, product, or use case do you currently find most compelling?
Well, yeah, first of all, thanks for having me. Second of all, I'm glad that we don't have AI sitting next to us because it probably would have given more complex and sophisticated answers than we do. But yeah, so we, as AI company, I always say that you shouldn't use AI just to use AI, because right now, if you want somebody to throw money at you, you just put AI-powered label next to the name of your company, and you might raise some investments. Although we're just trying to use those models that are highly efficient. I don't think it's possible for Kazakhstan, at least right now, to build our own LLM, which is going to be as efficient, as productive as the ones we have, like top tier in the world. So again, I agree with my colleague. We also love Claude AI. I personally love Notebook LM because it gives you a lot of opportunities to present what you are working on. But yeah, again, in the sense of productivity, we tend to often forget about the privacy, and we tend to forget about the cybersecurity itself. I was actually surprised when I was talking to a lot of my colleagues from financial institutions in Kazakhstan, because they were so interested in the product itself. They didn't even bother about the privacy, security, and everything. That's actually very good because we have enthusiasm. We, as a young nation, as a digitally friendly nation, we easily adapt new technologies, but at the same time, we have to keep in mind that they possess a great risk. They possess a great security possible issues. So we have to keep that in mind. This is something we're trying to focus on. Yeah, so basically just to shape, that's going to be it.
Sure, and again, we're going to talk about plenty of those particular risk points as well as we continue the conversation. And then finally to you, Ayjan. The MBK sits at the center of Kazakhstan's financial system. What is the National Bank's strategic agenda on AI and digital transformation, and what has the MBK formally committed to, and what is it meant to achieve?
Thank you, Nikhil. Nice to meet you. Thank you. First of all, welcome everyone in our home, in our building. We have like very beautiful building. We just moved to this building like last year, and so we always proud to have local guests, international guests, and we very proud to host events such like this. Let me introduce myself and what I'm doing in National Bank. I'm the head of Digital Transformation Department, and I'm responsible for implementation of our digital transformation strategy. As a big picture, yeah, as I said, we have a digital transformation strategy. We approved by the board of members in December 2024, and we have started implementing it in 2025. Right now is the second year of our implementation of our strategy. We have more than 100 projects in our strategy, and it's going to last for 5 years, till 2029. And the big ambitious goal, big picture, is to build AI native model, digital first national central bank in the region. And we have 5 big pillars, working on this big ambitious goal is building modern infrastructure, is building AI native subtech platform, building agile culture, because we believe that we have to prepare our workforce and our people within NBK to the main new challenges that we have. Another big pillar is that we build data management strategy within NBK, because it's core, it's a fundament for AI, all AI or data related initiatives. And another one, we have more than 70 systems within our IT architecture, and some of them is a legacy system, some of them are not prepared for new challenges. That right now we are working on building different platforms based on this 70 legacy system. It's one of the biggest pillars as well. So And personally, like just for personal question, yes, we do use AI like every day. I built like my own system, like Second Brain, and different types of agents based on Claude Cavor, Claude AI, but I would say like different LLMs has different own features, and there is like not like you like Claude and you do everything on Claude. There is like different models. Some of them we can use ChatGPT or Gemini and etc. So it depends on the goal. Yeah. So thank you.
Thank you very much for your perspective. Since I asked all the panelists, I'll have to also tell you what my favorite tool is. And I'm a very loyal man. I've tried other particular partners, but I always come back to the same one, and that is ChatGPT. Okay, so I want to move on now from broad perspectives to the first main theme, which is what AI systems are actually live in Kazakhstan's financial sector, and what evidence shows that they are working. Now, when we talk about AI in financial services, this can mean many things. It can mean, for instance, rule-based automation that's being branded as artificial intelligence. It may mean machine learning models. It can also mean generative AI in customer interaction. It can mean AI systems also influencing credit fraud compliance or indeed supervision. So what I want to do first is establish a baseline. When we say AI in Kazakhstan's financial system, are we talking about genuine AI systems, or are we talking about systems informing consequential decisions? And where are they? Are they live? What are the performance metrics that are associated with it? And how do we know, actually, that these particular systems are working? Ayjan, I'm going to start with you from the central bank perspective, then move to you, Amangaldi, on the builder side, and then to you, Talgat, for IAFC's perspective. So, Ayjan, has the NBK deployed AI or machine learning tools to analyze supervisory data for risk signals, anomaly detection, or reporting quality? And what have those tools caught that traditional methods missed?
Yeah, thank you. It's all about data quality. Yeah, let me first start from that, because I think we all understand that trash in, trash out, and not AI can help with trash data without normal data quality metrics. So for that reason, last year we built NBK Data Factory. It's on one of our biggest flagman projects. It's what is NBK Data Factory? It's a complex of components of different tools. It's a modern data warehouse. It's a data governance. It's a master data management. It's a different analytics tools such as sandboxes, ML tools, BI tools. So all of that is NBK Data Factory, and one of the main component is data governance and data quality within data governance. So how we work with supervision data, we have more than 1,000 respondents that from them we gather data to our NBK Data Factory, and we have 5 layers of data quality. So we check the quality metrics in every step. So when data comes from respondents, from financial sector from financial subject sectors. So and we check on the between forms and between data, and then on quality data we can use different ML techniques as well. Like recently we did, right now it's MVP, it's a prototype. We are trying to catch some different suspicion patterns. It's regarding to ML. So especially we have colleagues from this department, and we launch it together. So it's a prototype. I can't share some results, I think, right now, because we are still working on methodology, we're still working on different types of techniques, different models. So, but yes, we are trying to use like rule-based data quality technique, AI-based quality techniques to catch some hidden hidden networks for like different events. Yeah.
So may I ask, is it making decisions, or it's just being used as a tool to support decision making?
No. It's a making for decision as a result, because it's a system of several AI agents. As a result, we have some report, and then based on this report, we not like we our supervisory department they talk to the subject, and they're trying to understand what case and what's transaction, and yeah, it helps a lot, I think, for our colleagues to reduce some time and routine, and for data cleaning purposes as well. Yeah.
Fantastic. Thank you very much for your example. Geldi, from the builder side, when financial institutions try to move AI from prototype to production, in your experience, what usually breaks first? Is it data access? Is it integration with legacy systems, model governance, procurement, or even trust, for instance? And which AI applications are you seeing that are most ready for production deployment at the moment?
Yeah, thank you for the question. So the first issue, I would say, is always the budget, right? But to speak for any other potential circumstances, so the first thing that comes to mind is data quality, as Ayjan said, and also data access, because at times our government agencies, they do not tend to share the information that they got from their institutions that they cover. So it's a bit hard for them to work, although we have systems like Smart Bridge, which allows you to integrate with different data sources. But again, so we are, in particular, we are building a solution which helps you analyze crypto wallets and crypto risks, doing auto investigation on it. So we've seen that a lot of financial institutions, they just don't have an access to crypto wallets that their clients possess. And this is something that I think we need to do a better job on, because, again, even some private financial institutions like exchanges and banks, they do not share any information on their clients, even though they have already built integrations with each other. So this is a big challenge. I think this is the biggest challenge, because without any data, you just cannot implement your AI to work on it. You just need to have, like, in crypto investigations, you just need to have one input, which is ultimately the crypto address, right? And you can start working on it because the whole other data is on the blockchain already, if we're talking about the on-chain data. So yeah, I would say the data access is the biggest challenge right now for financial institutions.
And any AI applications that you're seeing that are most ready for deployment?
It depends on what you're pursuing. Like what we're trying to do in our company, we're trying to implement AI securely, but in the way that it is efficient to an end user. So we combine different techniques. Basically what we do, and what a lot of companies based in Kazakhstan and all over the world do, they do not try to build your own LLM. You just try to use the ones that you already have on the market, because it's an easy access and it's the best solution that you can get. So what we do, we use the best solution on the market available. If due to benchmarks and other statistics, I would say there's a new AI built somewhere in Singapore or somewhere else, and it's beating like the Cloud, ChatGPT, and etc. Then we're probably going to use that, use their enterprise API, and in the way to keep it secure. Again, we work only with blockchain data, so that means there is no access to personal data. So I would say you better use right now those tools that are beating everyone on the benchmark comparisons, because it don't make sense to use trying to develop your own LLM system or trying to develop the product that is seeking some new solution, you just got to use the ones that are already on the market.
Sure. Thank you for your perspective. Over to you, Talgat. The AIFC has attracted fintech and regtech companies and has a mandate, of course, to develop the financial innovation ecosystem here. Which AI-driven financial applications within or around the AIFC perimeter are at a meaningful scale? So not just pilots, but do we have anything where their traction tells us already that they're really being used, there's real demand for them here?
Okay, so AIFC is quite big. It consists of a lot of bodies. It's not just the regulator, but it's also the exchange, the property business, right, the academy. So let's talk about AIX, which is our international exchange. I think that was the first production use of AI. We bought the solution that runs on our exchange. It's monitoring the activities of different brokers and then different individuals trying to find fraud, trying to find the suspicious activities. So this has been working very well. It's trained on a lot of the data worldwide. It's been used, as far as I know, in NASDAQ as well. It's the same engine, right? So using that helps us to understand the behavior analytics, and then try to prevent fraud or spot it early on when we see suspicious transactions. So someone was not active for 3 years, and right before some deal, he starts bidding, right? Either shorting a position or putting a call option or something. So this behavior is not natural. This is just a simple case. There are more sophisticated cases. That's one application of the AI that we found useful. It helped us to actually find a few incidents. I'm not going to disclose them, but there were some warnings that we have issued. There were some brokers that were warned. Another one is essentially tech support. Back in 2023, everybody was starting with a chatbot, right, which was trying to answer frequently asked questions. We ended up with creating a sort of a AI note-taker / employee, assigned it an email. The beauty of that was you can simultaneously have the same person in every meeting, which understands the context, every resolution, every project that's in the pipeline, right? So he knows it's common knowledge shared across all meetings. But like I said in the beginning, the problem is now who's responsible for this AI employee, right? It has its own email, but somebody in our labor code, or technically in any labor code, there is no, like if it's a person, you're like, yeah, you can fine him, you can fire him, you can give him negative recommendation if it fails, or praise him if he's good. But with AI, it's very hard. So right now we have a project manager assigned who is in charge, but even that project manager is not 100% sure of what's happening in that LLM's mind, right? And then we're trying to train it, like my colleagues have mentioned, accessing data that is ready for AI to be trained on is a big challenge. We did increase a lot of surveillance among the work that we do, trying to do more footage of actual human work. We do have human in the loop in almost every cycle, say in regulation. Let's say we're doing research. We have a research team which is studying different regulators, Dubai, DGM, right? Finding what are the good instruments that are being developed, what we need to bring to AFC. But then that research, there is always human in the loop, right? Who's verifying everything. This kind of slows down the whole process. And if you remove the human, which we can, given all these new tools, is the responsibility problem. So that's a big challenge. We haven't found a solution to it yet, except having a project manager. And then the third big project that we're working on, like I said, is reputation scoring. It's essentially started with trying to link people in their social media if they have relationship in which different projects, different forums, events. Ended up even parsing some of the gossip websites, gossip Telegram channels, and then public media, trying to find the hidden links or relationships. This didn't get us anywhere officially because this is not official information. However, it helped us to build context and understand some of the personalities who are around the AFC. Some of them might be, having negative, sending negative images. Could help us understand their behavior, where they come from, what project they're stuck with, why they have this. So it's more like a PR tool now for us. So we can more understand our participants and people around who couldn't get a license, for example. So AI essentially helps us to analyze a lot of data. But like I said, holding somebody responsible for its results is the biggest challenge that we're trying to resolve. Yeah.
No, thank you for your perspective. So we've heard from the panel now about some of the use cases that have been deployed that are actually, you know, having consequential impacts in the market itself. Let's move on now to talk about some implementation challenges, talent, governance, and risk. So again, you know, if we look at AI and financial services, it's not neutral. A model that's used in credit decisioning encodes assumptions and risk. A fraud model can, for example, exclude legitimate customers. A supervisory model can shape which institutions are examined. A customer-facing generative AI system can create conduct, accuracy, and trust risks. So the question here to the panel that we're going to be exploring is, what makes implementation difficult? What controls and capabilities need to be in place before AI is used in regulated financial processes? This time I'm going to start with you, Amangildi. You've talked a little bit about the working with financial institutions for deployment. From a technical standpoint, when you're building these particular systems and deploying them, how do you help the financial institutions, which they need to be cognizant of because of their regulatory reporting requirements, to ensure that with the models that they're using, that there is explainability, auditability, and containment of model risk?
That's actually a very good question. So what we're trying to do in Cryptic AI, when you're building a report on some specific crypto wallet, you will see there's a special tab called Evidence. So in this tab, you will see links to specific transaction hashes that you can check on the blockchain explorers. So even though if you won't have, or a person that you send the report to, they don't have an access to paid solutions, they just can click on the transaction hash and they will be redirected to blockchain explorers so they can see that the data is valid, the data is verified. And this is something that I think we did a really good job on, because the main concern with a lot of AI systems is essentially the black box mystery, when you don't know how exactly AI came to a certain conclusion. So what we'll also do, we also show you the investigation trail, so you can actually trail the whole, trace the whole investigation process. You see how AI agents, they do iterations, you see each iteration, you see what is the response they get through APIs or other data sources. So we're trying to make AI valid, verifiable, so we actually supported a few court cases in Kazakhstan. I also worked on a few court cases in the US when we actually presented reports made in our solution to the court. We are still waiting for a court trial, but preliminary we used that. We are still hoping to have a real case scenario. So this, I would say, is the main concern, the data accuracy, but you should also, as I said before, you should also be concerned about the privacy. And in these terms, we also have a version which uses only on-premise solutions like open LLMs like DeepSeek, ChatGPT, Kimi, or any others. So we're working on that also. So we're trying to make sure that the data is stored securely, and you do not just feed US companies or any Chinese or any companies from abroad your data, because right now I think, like, if you haven't tried to ask ChatGPT to roast you, try it now, because it will show you that it knows much more of you than you probably assume. And yeah, for many people, AI just becomes an ultimate friend, even to say. So in this manner, we have to always consider data privacy. And this is something that I think we give a lot of solutions to our clients. And this is the right approach to do it.
I think that's an important topic on privacy with respect to models. I think many people don't realize how much data they're exposing when they do indeed talk to the models that are available online. And many people don't even realize that there's a button or a tab that you can go in and click which says do not train model, right? So if you haven't come across that, maybe you may think about pressing that, or unless you're happy for the future of humanity, to continue with training of AI, that's also possible as well. Aycan, moving over to you, and on the topic of talent and capability, we've talked, Alman Geldi talked about, one of the constraints is budget, but talent is also a constraint, right? And it's named as one of the binding constraints for AI in finance. What is the National Bank doing to build AI capability inside its own workforce? And is it actually changing how people are working?
Yeah, it's a good question. Everyone knows that talent is like a real constraint. I mean, lack of the talent, real constraint that are ready to work in a fast-changing environment, to ready to be in this new AI agenda. So, as Talhat said, there is a principle, human in the loop. I would say there is from my perspective, as a competent human in the loop should be. So we have to prepare our workforce, our people. So in NBK, within NBK, we have a top-down and bottom-up approach. From top-down perspective, for example, the whole top management team, our governor, deputy governors, and all head of departments, they just recently completed a Stanford AI fundamentals course. So it helps us a lot. I mean, we can, at least we can talk to our top management with the same semantics and be on the same page, and they understand risks and problems and possibilities of AI systems and constraints as well. It's like AI is not magic because not all stakeholders, I think, understand it. And from the bottom-up approach, we have different programs. Like last year, we trained 300 people within NBK. Just to understand for the context for the audience, there is 800 people working within NBK. So we trained 300 people with the basic AI knowledge. And we have a KPI from the governor to train, to cover 100% of the people working in the NBK and the regional branches of NBK. It's more than 2,000 people overall. But another idea that we have just recently launched, it's not like to train people what is model, what is LLM, and we are trying to train people how to use it properly. So recently we launched a local NBK AI challenge contest. And the goal of this contest is that everyone in NBK should build own app. In our sandbox, we just released our own Dev AI sandbox. It's a full on-premise. It's in our infrastructure, so it's fully secure from a different perspective. So everyone should build own project, and then we have some monetary prizes. So I'm myself curious what is going to be as a result. It's related to our strategy. It's a horizontal implementation of AI initiatives, and I believe that from NBK perspective, every person responsible for AI implementation. It's not like a responsibility of a digital transformation team, but every person at some point, at some level, are responsible for AI implementation, and we are trying to talk to people and to include to our agenda, so with the different events and different contests. So, yeah, thank you.
Thank you very much, Aycan. And finally, Talgat, coming to you talking about governance and market standards. Within the AI FC perimeter, How are AI-driven financial services being assessed from a regulatory and supervisory perspective? Are there any particular AI use cases, such as RegTech, risk scoring, customer onboarding, that raise different issues for the AIFC?
Yeah, it's a big debate that's happening worldwide. We've been traveling a lot to different regulatory conferences with AFSA, it's our Financial Services Authority. Like I said, we have not taken the step toward actually assigning an AI to do any supervision or per se issuing licenses or making decisions. Just like Amangaldi has mentioned, it's a evidence-based report, which is we're using causable AI. It's a different type of than generative transformed like GPT. So causable AI is a slower and actually dumber model, but it doesn't hallucinate, which is important when you work with a lot of documents. I think in the back it uses something like Kimika 2, which was a big context window, but I'm not sure. So we're implementing it as a tool for our employees to do their work faster, but being frankly honest, there is no solution at AFSA that does it. At court, we have AI translation, we have AI assistant that will answer a question on our website. For the property management, you can rent offices, it will do the booking, but not for the RegTech or SubTech. Just because we are international jurisdiction, we have to be very careful because there are, different authoritative associations that are backing AFC reputation, and then we don't want to do something that will cause questions, right, in our compliance procedures or our supervision or regulation. However, I'd like to mention one thing about the what is being done by the government, which we really like, which helps to implement AI faster. It's the AI ministry. They have provided us with a supercomputer, which helps us to do a virtual, it's essentially a virtual GPU machine, right, where we can deploy a local, there is a website called Hugging Face. I'm sure a lot of AI enthusiasts know it. So on Hugging Face, you can have, I think, 400, 800 models of different AIs that you can just install on your GPU, on a virtual GPU, and then run isolated environment, which is great for privacy. And considered it's our supercomputer in Kazakhstan, it comes at pretty much zero cost. But the training that the AI ministry provides, teaching prompt engineers, is also helping. I wish our management also went to Stanford, right? But we're right now dealing with the course that we have. There is one more thing that I think is an important part. Since everybody's, the infrastructure for the data center is being built, there's a lot of investment happening. People are learning AI and using AI already. Like you, in the beginning, did a survey in the room, everybody's using AI. So the question comes to the data, the quality, and the ability. So we launched last year in April a project. You can search for it. It's called Data Marketplace, datamarketplace.kz or Data Marketplace AFC. You can look it up. It's our effort to teach small, medium enterprises start using their data as a potential income. And we're trying to do a data exchange, which is not a regulated exchange yet. We've been studying the Shanghai Data Exchange case, which is very interesting. It's a national exchange that they can, trade or rent data. I think investing on our side, investing into this project is a good solution because is a good decision because not only we gather data from the SMEs, it will help us to shape better country indices for different researchers, but also tell the businesses that they need to care about the data. They need to be motivated to clean their data, to make it accurate, and it could be tax breaks, it could be different points that they can exchange with our partners. We're still working on the incentives, and I know that National Bank is also launching with their academy a project for financial literacy and AI literacy, and that initiative is also great because they're going into schools, teaching youngsters to learn AI early. Yeah, I think the AI is a big thing for 3 years, but for the application in our financial center, pet projects, yes. Projects for our efficiency, yes. For RegTech and SubTech, not yet, because we don't know how to regulate it, because we don't know how to, if there is a case, everybody's happy with everything's okay, but if something goes wrong, if a fraud happens or something wrong happens, the reputation is damaged or the economy is damaged, who to blame, right? So that's a big question.
And it's very interesting as well, you mentioned this data marketplace that you're working on there. Is this also an area of combining technologies together? Are you thinking also about AI with blockchain here as well? Or?
Yeah, the way it works, so traditionally when you work as a data scientist, right, I'm a computer software engineer in my bachelor's, right? When I used to work with data, you get a lot of raw data and you're trying to match the whatever your user is looking for throughout the data, try and search. With AI, you can end up with a prompt box, right, where you can say how many pedestrians were crossing the street, right, and then look through all the data available and come up with an answer, and then with the evidence and whatever it's based on. So this is how the work with data is being approached. So now having your own local data scientist working at your SME is becoming affordable. You don't have to hire somebody who will cost you money. You can just put your data into some safe environment like data marketplace, and we'll take care of packaging it, trying to get value out of it, get insights, and then say, all right, you're say a pharmacy shop. This data could be interested to a big pharma, right? Do you care? Do you mind, or do you want to sell it or rent it to maybe AstraZeneca or some other big pharma? So we can help them find value because they're already sitting on this data. The national regulation obligates you to store your data for 5 years at your premise, and then you have to send it to national archives. But it's not national statistics. It's not, because it's private data, right? And then parsing this data, putting it in a data lake essentially, and then putting some AI in it is a good effort that we're trying to build together with businesses right now. Okay.
Good, thank you for that. We've talked a little bit now on the second part on implementation challenges, risks, and so forth. This last part I just want to come briefly to the panel about is the future plans for AI in Kazakhstan, your organization, and so forth. One thing that I want to start off with, and again I'll start with you in this time, Talgat, is you touched briefly on this idea of using AI for supervisory decision making and so forth, right? But in terms of kind of AI governance frameworks, there are several that exist, throughout the world. For example, you've got the EU AI Act, the NIST AI Risk Management Framework, UK approach. I mean, the UK sector-specific approaches that have been developed by the British government as well. From your perspective, with the AIFC, which of these frameworks have you been looking at? Which of these do you think is most relevant for Kazakhstan's context?
Okay, so when we studied benchmark, right, we call it the institutions that we look into. We look at the United States, look at UK, we look at Asia. So they have their own mentality, culture, and context, right? UK is very institutional. The way they do their standards, the way they do their regulations is different from this region where we're working at, right? So I think even if we see a good case of AI adoption, like you mentioned, it still comes down to whether we want to take the responsibility for the risk, essentially to trust AI, to make decisions, to give, essentially it's either you give a license or not, right? Or you consider an action something that violates your integrity or any other rules. So this judgment, including our court as well, we'd like to keep humans for now, just because we're not sure that we want to. There is no limitations on whether the judge or the regulator or uses AI to do their evidence or their homework or whatever, the study, the research. But internally, we just haven't decided. It was the same with the board member, right? When Samruk Kazana announced a board member, we also thought of that. It would be a great, fancy story of AFC having a board member. But then what if he or she or it votes against something or for something that we don't like in the end, and then it causes, it's classified as a bad decision? What do you do to this AI? You cannot unplug it from the network, right? You can't delete the hard drive. You have to punish. This is the level of responsibility we'd like to keep at human level, because humans will live with this reputation, so we care about it. We don't want to go to jail. We don't want to be fined. We don't want to lose our job. So I think we haven't found a comforting. It hasn't to do anything with what's happening in the world. We look at, we study, but it comes down to a personal, board decision. Do we want to test it? As of today, we haven't found a good justification to remove this responsibility from a human and give it to AI. Although we are AI friendly, like I
Sure.
said, it's in our name, right? Okay.
No, it's a very good point you make about accountability, right? There's not enough, say, trust yet, I suppose, to make AI accountable in that sense. And indeed, there's been many times, even as a university professor, students have come to me and said, well, it's not my fault, it's AI's fault, right? So this is also something that is developing in people's mindsets. Ayjan, if I may come to you, with respect for AI and supervision as well, on a similar theme with Talgat, how is AI being embedded into the National Bank's supervision process? You've touched on a little bit about this, and how is it also changing the way supervision works? Again, you talked about the workforce being trained. Can you expand on this a little bit?
Yeah, of course. Just for the context, we have for financial industry we have 3 regulators. Just make sure that like people understand, because not everyone in Kazakhstan sometimes understands the difference between like regulators that we have for financial industry. We have a national bank itself. We have a financial agency. It's supervision for banks, insurance, etc. And we have, of course, AFC. It's a different regulation regime. And a national bank is responsible for price stability and financial stability oversight. But we have a little bit like some part of the financial industry that we are supervising right now. It's a payment industry, payment organization, payment system, and a new industry that right now is like coming out is a financial assets industry. From the May 1st regulation have started. So for this part of this supervision, we are right now working on our new AI-enabled subtech platform that we can see how different transactions related to financial assets is like linked, what kind of subjects we have, what kind of scoring we have, different profiles. We are working on a project. I think soon we're gonna share with results. But the main principle that I want to say here, we have we always saying that like same activity, same risk, same regulation. It should be across all our supervision landschaft, across all our regulators. So it's our federated model of regulation within country. But the main, I think, business of National Bank of Kazakhstan is analytics and data-driven solutions and etc. I can deep dive what projects we have in this area. So, for example, we have a prototype of NBK AI Monetary Policy Assistant. It's like a virtual or digital member of Monetary Policy Committee. So, it's a interesting project. There is a lot of skeptics about it, but let's see what's gonna happen, because there is a different types of sources, there is a different types of agenda, and there is a different infrastructure questions that we have to solve before the real virtual member of monetary policy committee is gonna work. But this project is very interesting for our governor, for our deputy governor, so we invest a lot of to this project. Another one, we have a lot of graph analytics related to transaction analytics. And another project for financial stability, our colleagues from Financial Stability Department, they just built as they called Bank Scope AI, is a tool that can write some reports for bank situation. We have 23 banks in our system for different banks related to our different source of information. It's information from our data warehouse, regulatory reporting, it's information from media, from internet, from social media, and etc. So, like for the bank, we have like whole information for the who is a key stakeholder, what's happened to stakeholders, and etc. What's happened to financial indicators, and then we can oversight financial stability overall. So yeah.
Thank you, and it's great hearing from your perspectives on, even the consideration of an AI board member or an AI member of the MPC to help with those kind of decision making. And in fact, we've had, I remember it's been some time now that even governments have appointed AI, not an AI minister, but a minister who is an AI, right? I think it was in Albania or had a case where there was a minister who was an AI, no?
Just quickly, one question to the audience. If you come to court, would you want the AI judge to be taking over your case? Because you want to keep that human factor. This is what I mean, right? You can't just give it to AI. And same with the doctor, right? If you do surgery, some things you want to keep humans. This is also how we treat regulation in court. This is why we're careful. Yeah, right?
That's a great example. And finally, Geldi, over to you on this last part. You're building a business on the premise that Kazakhstani financial institutions will deploy AI at an increasing scale. What's your honest assessment of institutional readiness, and what would help you the most beyond budget to get AI more into the Kazakhstan financial system?
Is it on? Yeah. That's actually another great question. So as you can tell from the topics discussed by Ayjan and Talgat, you can tell that the Kazakhstan government officials, Kazakhstan government officers, they are pretty qualified for building AI solutions. This is something that I think we have done a really great job because if you go to any government institution, you will see a digital department in it. You will see a lot of software engineers. You will see a lot of project and even product managers working there. And it's actually easier for us as software developers to communicate with the government who actually understands what we are talking about, right? So I would estimate our readiness is high. There's always a room to improve. I would say that each organization, like large organization, should consider hiring an AI officer. This is not the person who is mastered machine learning or who has mastered vibe coding. This should be somebody who understands AI on the institutional level, who understands all the risks, who can do assessment of the risks, who can build the strategy of your organization to use AI properly. So I would estimate it, Kazakhstan potential is really high in that matter. I would say that there is nothing really from the market to really add to competences of people working in government, because they already have lots of competences, they already have lots of qualification. But at the same time, we had cases when we were going on POCs, we were showing our products, and then some of the authorities, they decided to build their own. So usually I say, that's completely okay. I'm happy for you. Just make sure you keep my number, just to call me afterwards. But yeah, that's right. It's just, if you want an analogy, not to say anything opposite of that, this is really great that we have digital departments and we have software engineers in it, but you cannot cover all of the potential aspects that you'll be working on. Like, to give you a perspective, you don't produce like medicines, you don't produce pills yourself, although you can buy yourself a 3D printing machine, you can buy yourself ingredients, you can find a recipe on ChatGPT and try to prepare that medicine for you. But again, it's going to cost you more and it's going to be less effective. And it might be dangerous for you, right? Same goes with AI systems. Not to, again, advertise any of our services, not to advertise somebody else. Just the way it is. Not to take anything away from the government agencies. Again, as I said, I have a lot of respect for them. I have a lot of belief in that they will lead us to the right direction, because we as a nation, I think we showed worldwide that we are really capable. We have cases of Kaspi Bank being discussed, I think in Harvard or in, yeah, I'm just about to finish, or in Stanford University, something like that. So this just proves to the point that we are really technology driven. So yeah, I would say we are pretty ready. We just have to, I think, communicate more with each other just to see how we can help each other. And I think we can build a great AI nation in here.
Fantastic, thank you. I was going to go to the audience for questions, but if we're running short of time, if I may just ask each panelist to just sum up their thoughts on AI in Kazakhstan with one closing sentence as a remark. If I can start with you, Ayjan.
Thank you, Nikhil, for this session. Just to conclude, I truly believe that we have historical moment and historical opportunity to build new industries based on AI. We have a strong support from our governor, from the president. So I think like Kazakhstan is an AI native country, and we have an AI native regulation. So we have like 5 years maximum to build and use this historical momentum, I think.
Thank you. Target.
I'll just add, not only we are supportive in front of the government, meaning president, the minister, and everything, but we also have cheap electricity, and we're building a lot of data centers. So that's also that. The infrastructure is there, the supercomputer is there, it's a good time. Kazakhstan is having its own momentum right now. It's a good time to build something here.
Fantastic. Amin Galdi.
I totally agree with what have been said before. If I can conclude in one sentence, when me and my colleagues, my friends, we get the latest news on AI, I usually say to them, like, go find a job on a farm right now. Start looking for another job, right? Because we're about to be replaced. But yeah, I believe that we're going to grow economically with AI adoption. And I just agree with the point of Talgat that we have a lot of momentum because we are, in a way, we are in a specific zone and we are between two of the biggest neighbors in the world, two of the biggest economies. And we got to utilize that. We got to provide them with the opportunities, data centers, as Talgat said. We got to use that, leverage it, and make sure it helps us grow economically and it keeps us safe.
Fantastic. Audience, would you join me in thanking the panelists for sharing their view this afternoon? Thank you.
Thank you so much. So many insights, so many quotes that we could use, right? We are going back to the financial topic, delving deep into implications of relevance for some of the topics that we've discussed today. Implementation of CBDCs imply adaptation of the monetary policy and how the central bank manages interest rates and reserves liquidity. So I'm happy to introduce Farid Abubakar and Maxim Nasheret, who would present the paper that, as I said, you can find also on the research library on the website.
Yeah. Thank you very much. And that's the slides. How do you? Okay, it works. Hello, everyone. Thanks for staying in for so late. So many exciting discussions. I want to thank Professor Paulo Tasca for organizing the event, for inviting us as one of the paper presenters. So far, an excellent event. I would like to thank the National Bank of the Republic of Kazakhstan. As a former central banker, I feel here at home, and really shows how central banks are open to the public in terms of information transparency. I know about the time limit, so I will try to make my speech as brief as possible, particularly taking into account that we have so many practitioners as opposed to researchers and macroeconomists, something that I'm more used to. I do work currently as a regional director for Latin America and Europe at a large Asian fintech company called Patronum Tech. But my previous experience for many years has been money market analysis, bank sector liquidity analysis. And of course, a familiar and easy topic for me would be to discuss what happens when CBDC is introduced. We have discussed with, we have heard today from the representative of the Central Bank of the Republic of Turkey about different systems and their accessibility, about CBDC design, and thinking of the final user of CBDC design. But essentially, on the background, this, of course, accessibility of financial instruments are very important, and this is part of the agenda of any central bank. But let's not forget about the mission of any central bank, which is price stability and financial market stability. And the first step in achieving financial market stability and price stability is, of course, monetary policy implementation, which is a set of toolkits that the central bank uses to make sure that interest rates in the financial market are close to the key policy rate. So we're going to talk about it really briefly. I understand that the audience is more, practice-oriented, business-oriented, rather than kind of discussing some research issues. But I want to briefly swing through the key findings and the reasons why we decided to write this paper. So nothing new will come out in terms of how CBDC affects monetary policy implementation. But the interesting twist will be a cross-country analysis that we do, and we did a pretty deep dive into monetary policy frameworks of the three jurisdictions where the central bank digital currency is about to be introduced. So essentially, the motivation for this paper, as I put it, is, today we talked a lot about the innovation, CBDC as innovation, tokenized assets as innovations, but at the same time for central banks, a very important issue is how CBDC will affect the way central bank implements the monetary policy and achieves the closeness of market rates to the key rate. So from that perspective, from the operational work perspective, CBDC adoption can alter reserve demands, which is, commercial bank reserves at the central bank, can change bank liability composition, specifically taking into account that CBDCs in most jurisdictions are not thought as part of commercial bank balance sheet, but rather a liability directly to the central bank. And how basically this would affect liquidity forecasting later today. Later I will explain why this is important. And of course, the consequence of that would be the influence on money market rates. So essentially, we look at the concept of CBDC from two perspectives. On the one hand, there will be CBDC design taken into account, holding limits, specifically for the ECB case, remuneration, institutional architecture, and on the other hand, we will look at how policy instruments are organized, what open market operations are run, what liquidity position is, and so on and so forth. Sorry. I wasn't intended to break anything here. Very briefly, of course, we all... Exactly, you're quite right. Financial system right now at a lot of risk. So very briefly, just when we look at any central bank and how he designs CBDCs, he usually thinks of this in a very, actually the first step is very simple. Each CBDC, when introduced, just replaces cash then of course not much happens, because cash has always been one of the so-called autonomous factors, one of the factors that suppose a liquidity drain or liquidity pop-up when cash is transformed into bank deposits. But when for some reason CBDC supersedes either supersedes commercial bank deposits, or cash is used for some reason more, then we have this liquidity drain. So we just need to bear that in mind, that in terms of autonomous factors that need to be taken into account for central bank monetary policy implementation, CBDC is absolutely harmless when it means that it's just a transition to cash, but can have certain implications for, for the regulation, for the operations, if it's moved to from commercial bank deposits into CBDCs, if there is a liquidity drain. And here I introduce another concept. It takes time to actually digest it in. It's well known in the specific qualified literature. Basically, we kind of approached this cross-country analysis from the perspective of operational framework, and one of the first elements that we need to look at is how generally central banks operate, and how kind of different situation with liquidity, with how much there is money on the commercial bank deposits affects the way interest rates react. So what these graphs show, I just wanted to stop on this one to give you a little bit of a framework, is that if there is a corridor system, if there is an upper and lower bound, the interest rates and the key interest rate, let's say, is targeted somewhere at the middle, then we have a situation where basically in a balanced liquidity position, where basically there is where banks don't have too much money on the current accounts, you have a situation where the demand curve for liquidity, the demand from commercial bank for reserves, is highly elastic. And what it means is that any fragile mistake of how central banks forecast the demand for liquidity will result in higher volatility of interest rates. And at the same time, if you have a so-called structural surplus in the bank sector, you basically move the liquidity supply to the right, where actually the reaction, the response of interest rates and the need of commercial banks for liquidity is much less sensitive, and the response is much less sensitive. In this table, we kind of decided to sum up the instruments that are currently used by the three central banks that we researched. Is the ECB, the People's Bank of China, and the BCB. I won't stop on this one, but I will briefly, in 3 minutes, describe what we find about each jurisdiction. So the first case, we call it a benchmark case for the ECB, is, a classic story. Before the 2008 crisis, the central bank, the European Central Bank, has a very balanced liquidity position, a very limited set of tools, and very efficient operational framework. What changes after the crisis is that the ECB has to run quantitative easing. As a result, there is more liquidity on current accounts, and we shift from a balanced liquidity position to structural liquidity surplus. So what happens is that all commercial banks have a lot of money on the current account at the central bank. And when this happens, there is no need for commercial banks to interact with each other. So why we call ECB an interesting use case is because at the time they introduced a slightly different operational framework, which was the floor system as opposed to corridor system, where you target, or the policy rate becomes the deposit rate. It means that because all banks just need to deposit somewhere the money, they basically use the deposit rate as the key policy rate. And two takeaways that I want you to take from the ECB example. First, it is the operational work is highly adaptable. It means when there was liquidity surplus, two-tiered system was introduced, access deposits were introduced, and this way the European Central Bank was able to incentivize money market activity. And at the same time, when the situation with interest rates normalized a couple of years ago, gradually, as we can see, particularly the negative side of the graph, gradually the ECB is returning to a smaller balance sheet and basically removing some of the operations. I'm not going to get into details because I'm actually short of time. From the perspective of introducing CBDC, what is important? From the structural strengths of ECB are the floor system that absorbs liquidity and allows the ECB to be less sensitive, or let's say commercial banks to be less sensitive to sudden liquidity drains, effective short-term rate control, and something that allows the ECB to guide target interest rates well. And in terms of the design of CBDC, something that we would like to highlight is that its whole design is made to make sure that there is no dramatic shift from the liquidity surplus to actually the balanced liquidity position. So from that perspective, the ECB case is interesting because they introduce holding limits, and that means, as I mentioned on the first slide, that means that basically you don't have this drain from commercial bank deposits into CBDCs. There is a certain limit which you can hold on the wallet. And of course, there's access exclusion. In our paper, we do not cover the Forex segment. The ECB explicitly excluded non-residents and corporates from CBDC holding, which makes the effect and the impact of digital euro on liquidity much less pronounced. I feel like I'm really running out of time, so I want to highlight some of the things that we find about People's Bank of China situation and the Central Bank of Brazil. 2 points that we would like to see. If the case of the ECB is a, let's say, benchmark for us, the cases of Chinese Central Bank, the People's Bank of China, and the BCB are, let's say, interesting creative divergence from that. When it comes to the People's Bank of China, one thing that stands out in terms of their operational policy is that they use long-term instruments, and as you can see on the balance sheet, there is a very large structural liquidity provision tool that basically not undermines but makes short-term operations, which in a rule book should be the primary operation of a central bank, which makes them less efficient in terms of transmitting the key policy rate. And a second feature is that the People's Bank of China, of course, regulates bank sector liquidity using required reserves. Again, this tool is becoming, sometimes is becoming in China a more informative policy tool. But how does this interact with the introduction of CBDC? An interesting twist in the case of China is that digital yuan will not be designed the same way as in Europe. In Europe, you have non-remunerated digital euros, so you can't open a deposit in digital euros. There is a holding limit, and digital euro will be a claim on the central bank, not a direct one, but indirectly, it's still a claim on the central bank. Digital yuan actually will be part of bank sector liquidity in China, and this is completely different setup, because it means that essentially the use of digital yuan is equal to the use of commercial bank deposit. You can deposit digital yuan at a bank, you still get, you earn an interest rate, and essentially nothing changes for you as a user. And again, for the People's Bank of China, there is no change either, for one simple reason, because again, this will be part of bank sector liquidity. Banks will be complying with required reserve obligations on digital yuan deposits. So from that perspective, what we find is that digital yuan is more about infrastructure provided by the central bank that competes with private wallets in China. No risks of liquidity drain there, no risks for monetary policy implementation, and frankly speaking, when we were developing our recommendation toolkit, we saw absolutely no change in terms of how People's Bank of China would react to CBDC introduction. And a final thought to kind of give way to others is that essentially the Central Bank of Brazil is another exciting case. I don't have time to discuss it fully, but DRAC's introduction at the wholesale level definitely means that there will be very limited effect on bank sector liquidity and on the ability of the Central Bank of Brazil to steer money market rates towards the key policy rate. There is a completely different story that we wanted to cover that is related to government debt management and fiscal policy at the same time as monetary policy is implemented. But that's a whole different story. I'll leave you with a slide with our policy implications. Thank you very much for your time. Sorry for giving so many unknown terms in a very short space of time, but we really wanted to highlight this case. Thank you.
Thank you for being that ambitious. We can take a couple of questions. Do we have questions in the audience? Then I guess, Java? Yes. Can you get another mic and I'll bring this to Java? Yeah, sure. Maxime, do you want to join? No?
Yeah, sorry. So the slides where you were showing that CBDC and the triangle, CBDC cash and commercial bank deposits, right? Effectively, there seems to be no kind of difference between CBDC and cash, because you show them as if they were kind of equivalent, and then the commercial bank deposit, they both add kind of liquidity constraint to them, right?
Yeah.
So I just feel, of course, we see that CBDC is kind of like a digital version of cash. But then later on, you also introduce an example of E, C, and Y, where they try to be where I guess the CBDC, the digital currency, and try to be innovative and start to add features like interest accrual, which you wouldn't have with cash. I'm just wondering, like, what is the trade-off there? One is to have it completely cash-like. The other one is to start to compete with kind of the commercial banks.
Yeah, a very good question. That's an amazing one. Actually, I covered very little about the CBDC design. I kind of started off describing the operational framework in an audience that has a lot of expertise in payments. I apologize for that. As far as CBDC design is concerned, remuneration of CBDC deposits means that you have the certainty of depositing money at the central bank, almost having no risk, and being remunerated at market rates. So any person in this room, so here we're completely on board, and I think at the same level of competency. If I have to choose between a deposit at a commercial bank and a deposit at the central bank, my choice is natural. If the interest rate is more or less the same, I see no reason why I should go to the commercial bank. So there is this problem of disintermediation every single time that you offer remuneration on deposits. The second thing that you mentioned is, of course, the case of digital yuan. So in case of the Central Bank of Europe, European Central Bank, you have the design of CBDC where it is equivalent to cash. And the idea, the whole strategic idea was that it will be the technological version of cash in the future. So that's the whole point of European Central Bank approach. When it comes to digital yuan, things get slightly more interesting because this is a two-tier tokenized system where essentially digital yuan deposits are offered by commercial banks, and probably at competing rates with traditional commercial banks, traditional commercial bank deposits, and the only difference being is the new infrastructure that will be used for managing the ledger of CBDCs. So essentially there is absolutely no change from the perspective of the Chinese case, in a sense that
yeah, this is where I don't understand. I probably should, because I'm Chinese, but I still don't. Like, we already have e-money. We already have bank deposits in electronic form on your app. So what is the point of E, C, and Y if it's not even central bank money?
You're absolutely right. The only reason for introducing CBDC in the case of People's Bank of China is to offer the new infrastructure, is to offer the alternative to cash for the future. And essentially, the economic implication is the same.
But that is not right. It is offered by commercial banks. It is not offered by central banks. You were just saying.
Yes, the thing is, because it's a two-tier system.
Okay, they were offered by central banks to commercial banks, and then distributed.
Exactly. There is a wholesale part of CBDC and the liquidity management on that in that layer, and there is a retail part of CBDC which by design is such that it competes with commercial market deposits. So basically, again, our perception is that it's a competition between technological solutions rather than economically different products. And there's no effect on bank sector liquidity because it's... Yeah.
moving forward, probably looking also at other countries that you didn't represent here in the study. So there is this actually, we're touching actually just now, there is this type of relationship there can be an healthy collaboration between the public and the private. So, of course, you know, we have many examples beyond financial markets of public infrastructure that are basically serving public goods that are operated by private operators in many countries, in many developed countries, many developing countries. So the same for financial markets, when you have a commercial bank that help to transmit that money flow into the economy from the central bank digital money. So I think that from your examples, I'm not sure if this is the trend, but it looks like this is the trend, that's the central banks maintain control over the design architecture of the CBDC, but then the operations is delegated. Do you think this will be the trend, delegated to the private sector?
Well, to put it simple, again, we have the design by the central bank, we have a certain system, but again, let's say if we imagine that CBDC is some sort of a digital platform, then the central bank operates it. And what commercial banks do in most cases, in the classic case of digital euro, what payment service providers, what commercial banks do, they become interfaces for the client. So essentially you open a digital wallet in one bank and you see the balance in the app of another commercial bank. So this digital wallet is reflected in all your commercial bank apps. So what I'm trying to say is that this interaction is the interaction between the platform run and operated by the central bank and commercial banks serving as interface providers. So that would be the classic case, but again, there are so many details that I didn't manage to cover on the Brazilian and Chinese case.
We have a similar case in Indonesia. They had Curious. It's a kind of an early stages of the CBDC. But what they have done, there were lots of payment companies and they brought them together. So I agree with Pablo actually that the design, at the end the central banks start regulating them and then they give the design. Private companies also involved, private payment companies, but at the end it is the decision by the central bank. So my guess is that central banks will not leave this space, but there will be some sort of a collaboration. That's why, I mean, it's not just about the technicalities, but what would be the purpose of the CBDC? It will be different for Indonesia, it will be different for Brazil, it will be different for ECB and so on. And the problem of this sort of research is that we don't have the actual data. It's more kind of more of a simulation that we use. We have similar papers, like unfortunately, that's why one option might be to use some sort of a similar CBDC-like things like Curious of Indonesia is a good example. This is exactly what they have done, so I agree with Pablo actually in that regard.
Yeah. I don't know if I have to respond to that, but very quickly, generally, my friends, when we talk about CBDC design, we talk about the purpose, the economic purpose. If we want it the same as cash, if we want it for settlement between banks, for large volume operations, if I want to buy an apartment or a car, and you know, using CBDCs, let's say using Drax in Brazil, you can use that wholesale infrastructure. So essentially, the cases are different. Indonesia, in Brazil, in China, the approach is different to what exactly will be understood as CBDC and what will be the functions. Again, remuneration, holding limits, one-tier or two-tier systems, when individuals hold balances directly in the central bank ledger, or through tokenization, they hold actually tokens at commercial banks. So all that in terms of CBDC design is relevant, and our kind of modest, humble attempt was to look at how different CBDC designs affect operational framework, and how, whether a certain jurisdiction is ready to introduce CBDC, or certain instruments, policy instruments need to be added. So
by the way, there's a new trend now, like the purposeful money, and the CBDCs are a good example for that. If your purpose is, for example, financial inclusion, you design your CBDC accordingly. And yesterday, actually, there was a design of CBDC for reducing corruption, which is also quite a reasonable argument. So I believe instead of thinking about the CBDC as a kind of a holistic way, because it will be difficult, none of the central banks will be very much eager to that. This will be good to frame it like a purpose CBDC, where you have a purpose first and then you design the CBDCs accordingly. I believe it can be a good starting point for most of the central banks.
Thank you. Thank you. Thank you.
Thank you so much, Farid, and thank you everyone who has participated in these debates. I think this is why we love this kind of events. Let's go get charged with some coffee. Last coffee before the last panel and the last paper today. Enjoy. As usual, we are as quick as flying gods.
Yes, it will be published on our website. It will be my honor if you comment on it. I apologize. Actually, I had so many slides and I didn't figure out that I will only have like 10 minutes for board because we're mostly market participants, payment systems experts rather than monetary policy. And then I figured that I need to explain what structural surplus means, what liquidity drain means in terms of monetary policy implementation. Generally, there's a whole need of concepts and so forth. But when it comes to the central bank of Turkey on the website, you had very creative people, period in the last 3 years, reports, interventions, and frankly speaking, I would go to Turkey and talk to department experts to kind of discuss it because in your case, because you were sometimes much older than traditional CBNs and support, it would be interesting how you would use CBDC to either provide liquidity or drain liquidity to program money to if it is a perfectly relative cash, then the central bank will be able to nowcast how much money how many deposits will be transformed into cash. Yeah, that would be very interesting to read. And Dr. Ahmed, I would like to present you No, well, the paper may be okay, but the presentation was not. I mean, it's confusing. People were falling asleep, particularly over there in the last rows. But I mean, it takes some time to figure out what exactly needs to be said in 15 minutes. Right?
Yeah, of course. Yes.
Like 3 slides would be great. Only 3.
Ah, total 3 slides.
Yeah, 3 slides. But anyways, I'm gonna take a picture of those.
Yeah, I took some photos.
Oh, so we'll put ourselves
You
here
wanna
or
here?
somewhere. I don't know.
We can sit if you want. We can sit.
Yeah.
Or
No, I don't want to sit.
You don't want to sit.
I think it was a good idea. Yeah.
horizontally or vertically?
Right. I've got a lot of photos of you. I'll share with you. Yeah, sure. Okay, we've got one more paper. That's not a paper. We've got one research.
Can we like see LinkedIn accounts? Yeah, sure. Right anytime you want.
Oh, you can actually scan through that.
Okay, that's
Yeah.
yeah.
Yeah, I'll show you.
Well, but I have your name. Oh, my dear friend, it's so boring. I know it. I know it. You don't have to say it. I just not even remotely. Yeah. No. It should have been much shorter and more specific because people didn't understand. The whole idea was to show how ready central banks were before adoption. Exactly. Specifically when you have different. Yeah. Well. The link. Sure.
Like all the way from New York.
Presented it, so we actually put on the perspective of infrastructure, combination monetary policy fund structure, evolved.
Max is a very famous financial infrastructure expert. Yeah.
Now you know.
I know this. About my contacts and all that. Other stuff. It's Russian. Oh, really? Oh, well, thank you very much. Yeah, thank you. I wish that was more. that should have been more fluent-based. No. It's a very simple task because they teach it at the university. Very simple task. If your presentation flew well and was well perceived, if people understand concepts after you spoke, and if you start juggling with terms that people don't understand, it's a failure. Everyone, a good sign of a presentation and a good sign of scientific work is that after someone speaks to you, you can repeat the whole thing and understand it and, sit at your computer and reproduce it. So that's good presentation. benchmark, there are lots of money, there's a lot of money on current accounts, but at the same time they have tools to make sure that whatever happens, for example, there's an outflow of that money into cash, for example, there's still, I reside in Police in Georgia, whenever
inside because we are already the most patient and strong people who stayed till the end. It would be a pity to stay and to miss the last segment. Thank you so much. Do we have other people here outside? Takeshi, awesome. Pressure. Okay, so you are the best, and now you will be hearing the last winner of the paper submissions that the workshop has organized. So I'm really honored and very happy to introduce you to Ali Al-Zuhairi, who will present his paper. You should know that we didn't know, and Ali didn't know that he would be here with us today, I guess just a few days ago. So it's really, well, I wouldn't call it a miracle, because this is something that we are making ourselves, right? Miracles is something that we get if we really want. So please welcome on stage Ali. You need a clicker?
Hello, everyone. I think it's here. Yeah. Hi, everyone. Thank you so much for staying till that late time to have this study. I will not be long. I will not go to a lot of details with numbers and everything, but just to make you sure about three things. The first one, this study is more into capstone project on reform stage economies that we worked in as UNDP, and it's focused on USDC stablecoin usage on crisis level and crisis projects that have been managed by the United Nations Development Program. The third point is that we're not focusing on the whole picture of the system itself, because there is no whole picture in these environments that we worked on. The financial system is a bit scattered, I would say, and what we are trying to do is either to deliver aid or deliver development aid in a very fast way. So I think to solve this, this is a pathway for countries like Kazakhstan, who did a lot of development in order to export the knowledge to such central banks. I want to start with a question. Who knows this device? Do you know the name of this device? Did you hear about it? Like, when you envision it, it looks like a MacBook, right? The old MacBook. So, yeah. So this device actually called Minitel, it's established by the French innovation teams in 1978. And this device was a breakthrough in all aspects. You could do dating, you could do receipts, you could pay banks, you could do everything in that device. And it survived until 2010, when all the financial sector was there. There's Visa card, there's MasterCard. This device was having 10 million transactions in 2010 before they closed it. This gives us why we are doing this study on social practice theory, and why this social practice theory is important if we want to design a financial service. So this device is the same narrative that we're having now. It was turned off because it was centralized. It was like reporting everything that you do to the government because it's linked to the telecommunication. So you pay one bill per month to the telecommunication company, and it requires everything that you did in that month. And the argument behind closing it, it's because it's centralized. And guess who was decentralized? The internet, Web 2. So now we are in a stage that Web 3 and blockchain presented as the decentralization way, as the new argument of decentralization that we're having. And this gives us why many standards doesn't fit. Many standards, for example, when we go to the countries that I will speak about, which in this presentation I'll focus on two, which is Haiti and Syria. And in those countries, when you go to the financial system, especially after change, after regime change, or after political unrest, or everything related to huge change in the community, you will find out that there is a surge of consultancy comes to the central bank by UNDP, by the World Bank, by MasterCard, by Visa. Everyone will knock the door of the regulator in the central bank and ask to give advice, like they will provide their advice. This advice will go through the channels of the central banks, and it will rest with no action in the end, because there's a lot of information. There is similarity when it comes to the advice, but there is no unified way of what should go forward. So that's the bottleneck when it comes to reform stage economies. We dealt with five of them, and it was the same issue, that there is a lot of consultancy advice comes, and sometimes it's even the political scheme pushing the regulator to make a decision, and it depends, the decision will depend on what is recently on the table. Maybe in the table it was the previous advice was better, but we need to take action now. So in that way, it's a way different than what Kazakhstan is developing and doing, which is a great advancement that we see here in this stage in the last 2 days. And for this, you will notice that many advice comes that you need to establish an innovation unit, sandbox, RegTech. You need to have this in your central bank, but also there is World Bank coming, for example. They want the Findex to be higher, which is more important for the regulator than caring about what blockchain is doing or digital assets. So that's why it's on the corner. That's what we saw in our conversations and studies. Mainly, that doesn't mean that the gray area will disappear or nobody will work. So we've noticed in the 7 non-custodial wallet that we worked with, they are still operating, but they are operating by award or by a relationship that they have with the central bank officers or the digital payment in these jurisdictions to go forward, to have any type of transaction, but it's not on paper. And this is different than what regulatory uncertainty means, because it means that there is communication between the regulator happening and the non-custodial wallets when they are start building, and this creates also this area of uncertainty for the people who are building solutions, financial solutions in the communities. And for this, I would say that the first thing that we did, for example, in Syria when we were testing, is that we dispersed. So just to give you a better understanding, for UNDP, it's a big organization with $5 billion budget dispersed annually. So there is a high number of disbursements happening. This is in one UN organization. And what we did is when we want to try stablecoins, especially in cross-border payment, we tried with $1,000 at the start for 10 workers, and those 10 workers were based in a project inside UNDP. They are known. All of their data is secured. We know their names, everything related to them, because they are already having established relationship with the organization. When we tested out, it was 100% successful. The people received their money in the same day. They cashed it out in the same day because the non-custodial wallet that we were working there they have a lot of agent networks, which is like not dealing out with MoneyGram or some other cash out way, but they have their own agents. We call it, if anyone is familiar with Hawala systems, which is already legitimized in many countries. So this 1,000 proved the point, and the difficulty was to scale up. The scale up needs more regulatory involvement, because we can't scale up for more without having a clear jurisdiction rules. And this where every pilot stops, and I think all of you know we don't need like many testing anymore. We already proved the point that it's secure, it's trackable, everyone is using it, they could cash out in the same day. Previously, in the same project, it was taking a week for a worker who his life is depending on this project in Aleppo to get their money out from the system. So it's actually institutionally viable to use such tools for us. And in this example, it requires a lot of attention to the details related to what happens in the lives of the people. So who is harmed in this? Previously, we were dispersing the money through a connector, which is a person who give envelope money to the people, and everything goes well. But in many projects, not necessarily this project in UNDP, it have been reported many times that this connector could take a percentage. So it can give you an advantage, which is an anti-corruption. This could be an anti-corruption tool to be used in the project. This is how it was presented. In the second example, what we did is a bit different. So this project in Haiti, it was 15 pregnant women. It's to support them in the payment of the health issues that they have, to checkups with doctors in a very remote area in the north of Haiti, in Cap Haitian area. And in this project, the uniqueness of it, there was no connectivity. And there was no rule to even for when you go to telecommunication to have what does connectivity means, or what does digital identity means, except the link between those beneficiaries and UNDP, because they are also known and registered as part from the program. In these 3 days, we did a 3 days pilot with them, going to pay taxi by stablecoin, paying the doctors by stablecoin, and they cash it out through we used two non-custodials in Haiti. One of them is to do the transaction from the doctor's account, for example, from the beneficiary account to the doctor account, to make sure it works, and one of the, like, to install also in the taxis to make the transaction easier, and it was working 100%. The only challenge was the internet was very bad. So in all the pilots, we had to do Starlink everywhere, like in the clinics, also in the building that we were doing the disbursement of the workshop, and this is all cross-border payment of organization money, goes from US account to Haiti, to beneficiary in Haiti, and it was also successful. So now the question is that the money, how much it cost for UNDP before that, it cost 35% of the amount that we are sending. Like before using stable coins, it cost us 35%. If we want to send $100, it will cost us $35 to give the money to the beneficiary. And this operational money could turn out to make the people live better. Actually, this could support another beneficiary if you are using the stable coin in the right way. And this will give us like what exactly the gray area quietly costs. And it costs some slips when it comes to the inclusion metrics, because you don't have inclusive metrics there. If it is what we saw from the experiments that was outside from UNDP, because those non-custodial was also working by their own to do some pilots, there was no metrics. I would share with you some numbers. So out from the 7 pilots that we did with, 7 out of 7 mentioned in their beginning is that their target is to target the 1.3 billion people who are unbanked. This is their goal. 1 out of 7 had a behavioral, or let's say a behavioral study or background for the community they are providing financial services for. 0 out of 7 is doing anything related to what is the financial and the banking system says, or what is the design when it comes to this. And that means the metrics related to what is the virtual asset strategy or anything related to it. And all of this give us that there's a lot of slips when it comes on the right time to report such metrics, when the right time comes and you want to present your solution as the best solutions as a builder. The second is that the field connected, for example, the operator will be in a better local, like the local fintech community in these areas are not connected very well. So for example, there is no interbank transaction happening. There is no RTGS in many jurisdictions that could really facilitate the payment. So this is also the second. The third, I would say, the bill comes late. That means if you wait too long for this gray area to be there, that might be like poor FATF assessment in the end of the day. And we all know that depending on the FATF is that we have only one jurisdiction till now for 3 years maybe. One jurisdiction is fully compliant, and maybe Sweden was before compliant and now it's dropped. Maybe this is Magnus, he needs to bring them back from the Nordic people. But this is like if we have for 3 years or 2 years, one jurisdiction is compliant with recommendation number 15, it means either the FATF needs to be changed as a recommendation, or we need to find a way to such rule when it comes to this. So our suggestion and our approach to the government when we reach to these 7 pilots have been proposed on three levels. The first one is that when we talk with the authorities, we suggest the first that we form a surveillance cell. And the surveillance cell depends on the use case. So the use case means, for example, if we are having the Ministry of, if it is related to farmers, we will involve the Ministry of Agriculture, the Central Bank, and also the Ministry of Telecommunication. And it changes on who is the regulator depending on this, on the use case that we are having. Exit metrics is very important, so we don't be stuck, because some jurisdictions, when you give them, for example, an advisory and they like it, when they implement it, it's stuck. Like, that's it. Like, there is no change after that. So what we are suggesting here is that to do the exit strategy, which is what we're suggesting by name it the gray area exit strategy framework, is that we go to the second step is by making it easily to get out from this since the start. And also the annex pathway, which is whatever the regulation before when it comes to regulating the banking system, we need to build circulars or annexes as a start related to digital assets, and then we go forward. I will not take long because the time is... so mainly it's 5 steps that we're suggesting when it comes to the dealing with, especially with the central banks in these countries. But this is not possible if it is not unified, like if it is only UNDP, because as I started talking, we are not the only ones who knocking the door. And I think all of us in the room, we would say that UNDP is knocking, World Bank, everyone is coming to provide advice. And this should be a unified approach that we go as one cell to advise the government on such things. And I think many of you are here in this room, so and the AML experts, stable coins, issuers and builders, and reform stage central banks, they all need to be part from this cell in order to be successful in the end. So this is the risk of what I'm talking about in the paper. If only UNDP is providing this, it will end up as any paper in the end of the day. I think the end why it's worth adopting, especially this framework that you're suggesting, it's more light when it comes to the regulatory side that we're talking about, especially when it comes to the reform stage economies. It's provide a good gateway when it comes to getting out from it. And the most important point, and maybe like this is also one of the critical points, it depends on the politics of the country. So if the politics of the country is changing, if there is a lot of government change, if there is a lot of uncertainty in the political level, it's also solve the problem for this regulator when it comes to at least report to something. The question here is not the economy will regulate digital payment. I think it is whether they build the evidence that already exists or write the rules after that. So because UNDP rule or any organization is not, we are not writing rules. We are not even in the beginning of the wave that it's taking us to change the financial system. But mainly this is what we are trying to do with many governments. And I'm open to any questions, or even here or after. Yeah. Thank you so much.
This was really very interesting. Thank you so much. I don't know how much relevance does my question have, but I'm really curious because I was, back in the days, I think it was in 23 that UNDP launched the Blockchain Academy for the staff, and it was really a great initiative. So how does the educative aspect enter the picture in the framework that you've discussed?
It's a great question. Blockchain Academy, it's also one of the, as you know, like Alternative Finance Lab, we are a bit disruptive when it comes to the UN agencies. And apart from like 20 people team who did, the first product was the Academy. The Academy was linked to get the information from the country offices, because now we have people who are talking about blockchain inside the country offices, getting out from these country officers are working closely with the government and the reform stage economies, and then feeding up to our team, and then we have been built this framework. I wouldn't say that's enough. It needs also, the first part of the presentation was mainly about how we can build from the accelerator side. So all of this information on the 7 pilots that we were discussing, it's coming also from another product that we developed, which is the blockchain accelerator. So now we're working also with Exponential Science on establishing the blockchain for government. I think all of this information will fit up there, but it's also an invitation to Kazakhstan government and the blockchain, especially the blockchain experts here, because they are close when it comes to providing such expertise and such experience to other jurisdictions who might be struggling to find the right expertise. And also, it's better to hear from you, not from us. And you are the ones who can transfer this information, because central bankers trust central bankers, to be honest. Like, this is how the world works. Yeah. Any other questions?
Thank you very much, Ali. Thank you so much. Awesome, thank you very much. I think it was not only an interesting research, but also an important issue that is in the middle of everything that UNDP is doing, sustainability, and whatever we are building, we need to keep in mind that there are different contexts all around the world that we need sort of at least think of, look at, and observe and research. And I think the last panel of the day is also discussing a very important topic, that is data, that sometimes is as precious as money, sometimes even more precious than money. So open governance, data governance, open data and other issues related to digital development will be the topics of this panel. So I'm happy to introduce you to the moderator, Javak Su, Executive Director of the UK Centre for Blockchain Technology and Associate Professor at UCL. And the panelists are Professor Ettore Maria Lombardi from the University of Florence, Odunolo Wikere, that you already had a chance to see today at a panel, and Alexander Polorotov from Datanomics. Welcome on stage. I think we miss another, yes.
Exactly, we can relax. Yeah, so yesterday, in my amazing closing remarks, not that I said it, a lot of people said that to me, that I confessed I ran into a payment issue with a taxi, right? So today, I think in this exact panel, we can come back and look at that problem. So, you know, the problem wasn't really the technology. The technology was there. I have a phone. The taxi driver has a phone. I have a banking system. He has the banking system. There's something that's beyond that. On top of that, it's probably standardization and data sharing. Then that is exactly the topic that we can cover, and the panelists can help us with today. Since everybody is a little bit sleepy, I'm gonna copy Nikhil's strategy of doing a quick poll. It's going to be very simple, trust me. So hands up if you have a banking app. Great. Okay, so wait, keep your hands up. So keep your hands up, but keep your hands up if you know how to revoke access or how to remove data from this banking app. What I want to say is, do you know how to ask the bank to forget about you? Oh, not too bad. I see a few savvy people, my colleagues, who are very savvy. These days, you might, not sure. For compliance issues, ChatGPT usually refuse to talk. Let's see if they will. But that is exactly my point. And you can see here, a lot of people, they have a banking app, but they don't really know how kind of to control their data. They don't know how to ask the bank to forget about their data, right? So this is where the expertise, our panelists, lie. And here I want to introduce the panelists again. So we have Professor Ettore Lombardi, who teaches private law and digital society law in Florence. Odun Olowokere, pronounce your name correctly, research director for the digital economy at CIGI in Canada. And Alexander Polorotov, co-founder of Datanomics, a data and analytics house, whose team also built Red Flags, a tool that catches procurement fraud with AI. So I'm going to start from you, Alex. Your own research found that 2/3 of AI projects in Kazakhstan collapsed for just one reason: the data. So they're either missing, disorganized, ungoverned. So before we say anything ambitious about, you know, open banking, standardization, just you give us an honest picture. Who actually controls this data? And when you go into an institution, who actually owns the data? Yes.
Okay. Oh, yeah. Fine. Thank you. Thank you for having me. I'd like to start from a simple observation about general purpose technologies. So, as you know, there is a list of them. Yeah, the technologies that change our lives. And there is a list. So the number one is, for example, electricity, internet, generative AI. And I'm sure that there is one missing value here in that list, and it's Excel spreadsheets, because of when I look in any industries and in any company, bank, financial institute, etc., if we deep dive into the analytical layer and decision-making layer, it's also a shock absorber here, a human who calculate the data, who make the perfect Excel file with the calculation, who define the correct metrics and use all beautiful complex formula in Excel. And it's no matter which data platform are any customer implement. It's no matter in which regulation are we talking about. It's always about that across the departments, I see that experts inside the organization exchange their insights using Excel. So, and that's why I think it's general purpose technology, because everyone knows what is Excel, etc. But at the same time, what I see that in the past years, dozens of years, every consultant preach, and me too, preached the same way that we should become data-driven and let's implement some master data management system, etc., etc., etc. And I see that the AI changed the game, because for now, problem in in any report, it's not some kind of a silent killer of the organization. For now, because of GPT and chat-like interface, I see that data quality started to not some kind of a silent killer. It's pop up in organization to the top managers, because top managers ask their technical team, hey, bring me chat interface over our data lakehouse, warehouse, and other things. I want to chat with the data. And because top managers start chat with the data, I see that the data quality problem has a price tag now for a top managers. Before, it was some kind of a silent thing. That only one people inside the organization know that, oh, I see that in Excel there is a problem and I know how to fix it, etc., etc. And yeah, that's what I see.
Thanks for the insight, Alex. I think you give us insight on the operational layer of things. I just want to summarize it real quick. Correct me if I'm wrong. It sounds like in the organization, a lot of teams will get their hands dirty in data, and in legacy systems, this is obviously unsustainable, and it produces just really, really unorganized data, same as I read from your research, right? And so my question stays, like, who actually, from a legal perspective, perhaps, who actually owns this data? Because we hear a lot of, this campaign saying that, our customer owns the data, we protect our customers' privacy. But at the end of the day, we also see that a lot of people can actually, have access to this data. Even in one organization, it just gets all over the place. A lot of different teams have the data, can have access to data. So I guess as a law expert, etc., I'm going to ask you this question: who do you think actually owns the data? Or perhaps even, let's take a step back, is ownership even the right concept there when we are talking about data?
Yeah. So, Java, thank you for the question, and I would like to thank as well the organizer of this event. It is great. P2P events and the National Bank of Kazakhstan. So thank you very much for inviting me. For me, it's an honor here. So let me be a lead moment professor, and I would like to distinguish very briefly the difference between ownership and property, because there are two concepts that are completely different, in the sense that ownership is the right and property are the goods. So if we are speaking about data, we are speaking about something that is dematerialized, and the influence of dematerialization is regarding both the right and the good. So that's very important for understanding as well the concept of property and right, in terms of right, because the question was who owns data. But I would like to have as well another step back that is very important for me, that is the digitization and digitalization. So here we have a different concept that is very, very important. Why? because digitization is something that we are doing, for example, with stablecoin. We are transforming something that is material in something that is dematerialized. While digitalization is a process of transforming the workflow of manual activity in something that is more digitalized. So that's something completely different. So we are speaking about ownership, property, dematerialization, digitization, and something very important for me to analyze today, very briefly, of course, don't worry, because we didn't speak at all about this concept, is sustainability. Why? Because yesterday, one of the speakers spoke about data center and said, data center in Kazakhstan are very important to be placed because it's a cool place. Not cool, fancy, it's as well fancy, but cool because it's cold. So that's the problem of data centers. So how to cool down the data centers that will be more and more in place, active, and let's speak about quantum intelligence. Quantum intelligence will ask a lot of energy and a lot of activity to cool data centers. So why I want to speak about data centers? Because it's something related as well to liability. So the damages, for example, caused to environment, that's why sustainability, to society as well, and to economy in general. So what is that? Nothing more than CSR, corporate social responsibility, ESG, environmental social governance, SDG, so sustainable development goals. So data centers are involving sustainability 100%, and it's very, very important to consider this profile, and I underline it in terms of intergenerational liability, responsibility, accountability, and I'm making reference, of course, to Brundtland report of 1987 that everyone knows. So coming back to digitalization, dematerialization, so I see here a very strong change of the concept of ownership and property. And indeed, I qualified it with three concepts. That is a lack of material property, a lack of unique possession, because everyone can possess everything in the same moment, and it's something that is revolutionary, because property was the dominion of a guy or a person on a thing. So we are changing completely this parameter. And a lack of apprehension, because we don't apprehend a Bitcoin, a data, or something like this. Not at all. So that's why it can circulate. So the advantage of this situation are, for sure, an easier use, an easier transfer, an easier circulation, an easier possession, but there are as well disadvantages that are an easier possibility to apprehend data, and that's the violation profile. And we have as well an easier possibility to violate data, because if something is dematerialized, can circulate more easily, and we can apprehend and violate it easier. So we need something that is protection, and how to protect data. So first of all, I would consider more a liability accountability profile, and then an ownership profile, because we can say Ettore Lombardi is the owner of all the data that is transferring, but let's see in case of violation of what is happening. So that's the lawyerish part that is taking place, and in my mind. And that's the issue, is not so much the transfer of ownership, but what happens in case of violation. Because you can say, Ettore, if you want to use this app, you have to transfer data. I give a consent, I transfer you the data, but what about the violation of this data? That's the problem, in my humble view. And how we can solve this issue? So we have two paths. The first path is the subjective liability, so based on negligence, recklessness, and so forth. The second one is the strict liability. Strict liability is much more protective for the person that has a violation. And what is important in this case is that is involving not just the violator, that can be a bank, can be an app, can be Amazon, whatever, but as well, in my humble view, the regulator, because the supervisor shall control how data is circulating, and shall apply the measures that are protecting really the data. So this one is the path that very briefly I wanted to describe. Sorry if I was too long. So to answer your question, in my humble view, it's not important who is the owner, but who is responsible of the violation. and I said, so I said, it can be the
So-
bank, it can be the app, it can be, yeah.
Yeah, so it can be all these actors. Of course, we diagnose on the case by case basis, and probably Odin, you could add to that how the state could play a role here, because ultimately, the rules are written by the state, and you have expertise in sovereignty. So I want to also hear your view on
Yes.
this.
What I'm going to be saying is going to just be an addition to what Torres has quite elaborately emphasized on. So, if the issue with having public infrastructure here is it needs to have create room for innovation, and with innovation comes risks, the risk that he has outlined. So there needs to be some form of regulation by design. So the regulation needs to be imbibed into the design such that it's easy to allocate liability. So for example, if the intermediary here is a custodian, is an API or is a bank, there needs to be a way to attach and easily fix liability if there's any data breach. Because of this complexity, I anticipate a situation where there will be a new regulatory class of custodians with a unique set of regulations and with a unique set of liability structure too, because it might be difficult to pinpoint where damage was done or where loss occurred. So everything Ettore says needs to be worked into the designs of this system such that they are practical and they are workable. So yes.
Thank you very much. And I want to get back to Ettore on this liability issue, because you just elaborated on liability and duty regarding kind of data sharing, data flow. And I know that you've been writing something also about this, and you've been studying this for years. So as we know that Europe has been building kind of this financial data access APIs, and then there has been follow-up laws, but still in terms of governance has been stuck in negotiation for years. So just wondering, what is your view on this, and why is this easier to build but so difficult to get it put into place to implement?
Are you speaking about financial data access
Yes.
Regulation? Okay. Yes. So, well, as well in this case, the circulation. So, what is FIDA? Just to explain, everyone knows, but I would like to be more clear. So, it's a regulation that provides the expansion of the opening banking, transferring it as well to the financial system. That's said in very short words. So what is important in this case is always a concept, in my humble view, that is duty of care. So as well the transferring, as well the circulation of this information shall be based on concept of accountability, political profile, liability, technical profile, and therefore a duty of care that is the source of this kind of liability. And as well in this case, very important is the distinction between a subjective liability, that is the one that FIDA expressed, and the objective liability or strict liability. The situation, I would like to describe the situation that we have with an example. So I wrote recently an article in Milano Finanza. Milano Finanza is a very important newspaper of finance and economy at the European level. And I spoke probably for the first time about this concept that is the responsible prompting. What is responsible prompting? So probably it's something that is quite innovative, I don't know. So everyone thinks about the output and the black box, right? But we have to think as well about the input. So what we are putting inside the artificial intelligence machine to obtain a certain result. So when we have this result, who is responsible of this result if it's used by the person? So who is creating the input? Who is using the input? The black box, so the machine, the creator of the machine. That's a problem of liability that is very, very strong. So that's why the responsible prompting is something that we can use as well in the sharing data. When we share data and we let circulate and transfer from the banking system to the financial system, we know what we are doing in terms of outcome, but we have to as well understand which one are the consequences, so the input of our actions. So that's why we have to increase always the threshold of liability always in terms of subjectivity, objectivity, and making responsible. I know that I say something in a regulator like the National Bank of Kazakhstan, but it's important as well to let be responsible, liable regulators, because just in this way you can assure the real application of measures that can be effective in my view. Regarding the European system, and then I come as well to the Kazakhstan system, regarding the European system, the problem that we have is that we have two layers of authorities. We have a national one and we have a European one. So for example, in the banking sector, we have the Central Bank of Europe and we have the European Banking Authority at the European level, while at the national level, for example, in Italy, we have Banca d'Italia and Consob. So who is responsible in case of violation? We have to understand which one is the rule that is violated, European level, national level, and eventually operate in a coordination between the European and the Italian level. And that's applicable in all Europe. Regarding Kazakhstan, and I close my remarks, very important is the example of PIX. So before our colleague from Brazil spoke about the open banking, so the fact that there is a real situation in Brazil, well, the financial system and banking system are working together, making it very easy to pay and so forth and free. In Kazakhstan, for sure, the Brussels effect can be very strong. So FIDA can be a parameter to use, but I consider this area of the world very important as well because can differentiate our parameters, the European one, and subjectivize it. So make them more harmonized to the system and the workflow of data. So in this regard, I look more at BRICS, because probably BRICS is a system that is less harmonized than the European one, but can have some features that are more applicable, for example, to Kazakhstan. That's why I made the example of BRICS, Brazil and PIX.
Thank you very much. I just want to pick up the responsible prompting thing. I think here we have the technology expert Alex here. There are actually regulations, or perhaps voluntarily or enforced by regulation. The technology companies are already trying to enforce that from a technology level. If you are inputting irresponsible prompts, you wouldn't get the answer, or you might be flagged or for or whatever mechanism. But of course, I understand that there's also you can also enforce users to have responsible prompting as well. It is you can, but whether it's enforceable or not, I'm not sure. But perhaps Alex, you can add a little bit to that as a technology expert.
Yeah, thank you so much. So what I see from technical perspective, if we're talking about open banking and open data, API, etc., and other things, it's not a huge problem, you know, to organize access to the data. I mean, if we have data platform and we want to provide access to some kind of data, it's not a technical problem. It's more about, as I said before, how to organize governance, which metrics should we need to show to particular user, for example, and which access and level of details for any business domain do we need to show. And from that perspective, to protect data, we need rules that was incorporated in access process to the data, and I see that it's not a technical problem anymore. Yeah, for dozens of years, it's more about how to again make governance metric layers inside the organization. That okay, for example, my balance is my balance, and I know how to calculate it, and how many active customers do we have in our organization, how to calculate it, because I like the question to any bank. For example, if you ask how many active customers do you have in your retail, you will have many versions of the active customers because it depends on which side of business do you ask it. And it's the same for the AI technology and other users of the data that we want to connect to our open data API, etc. And yeah, I see that we need to focus on the boring stuff like how to make these metric definitions layer correctly.
Thank you very much. You said that technology is advancing and there's little technological problems anymore. But what I see as a problem is inclusion. Although the technology itself is mature, a lot of people do not, unfortunately, have access to technology. So here I want to discuss a little bit about open banking's kind of financial inclusion. Maybe Odin, you can shed some lights on that. So is that really just open banking? Is that just a app with a nicer app for people who's already privileged, or is it actually helping with financial inclusion?
Okay, so originally it was supposed to help with financial inclusion through the principle of data minimization, where you don't require as much information from people to onboard. But it's been overtaken or been dominated by the other ideology of open banking, which is portability. Now we see the emphasis on over-reliance on the ability to transfer your financial data from one institution to another. And that's understandable, right? It facilitates competition amongst banks for customers. So Bank A wants Bank B's customers, so they try to design new services that would attract more customers. But who I see benefiting from this is the credit bureaus and the SMEs, that's the small and medium enterprises that need better services. So unless the data minimization angle can be emphasized on more, then perhaps we could have more inclusion. But as of right now, I don't see much inclusion. All I see is just competition for the existing customers that have been onboarded. I'll give an example. So in Canada, my home jurisdiction, we have, because open banking has become a very charged terminology, the legislation is called Consumer-Driven Banking Act. Where in that name would you think the contents would have something of open banking? It doesn't seem that way, but I mean, it's a nice name, catchy name. Consumers want to drive their banking services. But when you open the act, all you find is just portability frameworks. You have a new regulatory category. You have provisions for how you can transfer your data, your financial transactions from your existing service provider to another. And the inclusion has been put in the back seat so far, so we need more work done in that area. Yeah.
I myself, I work in blockchain and DeFi, and blockchain and DeFi, they always tell themselves as a kind of, try to drive financial inclusion. I think a lot of banks are trying to adopt this technology by launching tokenized deposits, which we also discussed at breakfast today. So just want to settle this this debate. So what's your view on tokenized deposits? Are they promising, or is it just a gimmick, or can they truly compete with DeFi? What do you think?
Okay, I don't think we're going to settle this argument anytime soon. But I think it's just the financial intermediaries in existence now trying not to, lose deposits. So a lot of research has been done in that area that shows that stable coins and private wallets would have an effect, a deleterious effect on existing deposits. I don't think tokenized deposits can successfully compete unless the intermediaries do some heavy lobbying, which I see happening. So we find a situation where they're co-opting the technology and using it for their own unique purposes. Another thing worth mentioning is it appears as though the open banking framework is more compatible with tokenized deposits than it is with blockchain technology, and that's the existing financial intermediaries, doing their thing. At the end of the day, I don't see on a fair level playing ground tokenized deposits versus stable coins and private wallets. I don't think tokenized deposits would win, but a big but here, the lobbying and the fact that the influence that the existing financial intermediaries have and the fact that they're extremely adverse to the competition that these alternative forms of payments and digital assets pose to them would probably make them use alternate means to have their way. So, yeah.
Thanks for your view. Speaking of our debate, we had another debate I want to bring to the audience as well, which is this concept of portability embedded in open banking. So the idea of open banking is that your information should be more easily portable through banks. This sounds like a nice vision, but a lot of people perhaps don't even want portability. They probably want a fresh start. For example, when I myself apply for my visa, right, I deliberately use one set of bank transactions as opposed to other, just to make sure that it looks nice and clean and understandable. I'm not going to tell you exactly why, but with open banking, if you want to port everything into a different bank, would that take away kind of the opportunity for a start, for a fresh start? And Ettore, what do you think of this from a legal perspective?
So, frankly speaking, I haven't understood exactly the question. So, open banking. Sorry,
one of the benefits of open banking is portability, right? You can go from
sure. That's understood.
Yes, but however, sometimes I don't want complete portability.
Okay.
Sometimes I want a fresh start for various reasons.
Yeah, sure. So probably you want to make reference as well to concept of privacy?
Privacy and also data control. You know, consumers, they might want to just select. I want my I want my part of my data to be associated with this institution and part of it associated with that institution.
Yeah, that's
many things.
that's a point.
That's not to be discussed here.
Yeah, it's true. Well, it depends on what the data that are circulating. So, of course, Paolo is right, and as well, Christina. So, if I have to apply for something and there are requested specific features or specific data, I don't know what I have to hide, for example. So it depends on the use of the data. So that's why it's not very clear. So if you want to generalize, and you want to say, actually, there is a problem of privacy in the circulation of data, which one can be the measures that we can use? Yes, I can tell you we can use as a parameter the GDPR, because it was very used all over the world. The Brussels effect was very strong in this measure, as much as the AI Act. But of course, if we want to use something, we have to share data. And I used to use this example with my students. So as you noticed, we passed, speaking about the cell phones, we passed from the digit opening of the cell phone to the face opening of the cell phone. Why there was this change? Because they had already our fingerprint, billions of fingerprint, so they don't need it anymore. And so they need something more, some more data. So what should you do? Shall I use or not the iPhone or all the devices in this way? It's up to you. And so if you want to be isolated, you can be isolated. You live in a monastery.
That is exactly my question. I mean, when it's very nice if it's still an option. I'm just. I guess the question is, would that be imposed when for example, when entirety.
Sorry, I didn't want to interrupt you. Sorry, Java. No, it's indirectly imposed, because if you have to use something,
of course,
you have to share. But there are sites that before they were free. Now they are not free anymore. So I choose. I want to pay and I share data. I don't want to pay and I don't use this app. I will try something else. So it depends on the real usage that you want to do of the app or the technology and so forth, and the data that you can share. The problem is, and I tell you, I don't want to repeat myself because I don't want to appear boring. is not the consent in general, is the real consent, the consciousness of the consent. So if I have a clear consciousness of what I'm doing, giving my consent and having access to some application and sharing my data, that's the real problem. And what is the way to solve these issues? Knowledge. If I am aware of what I'm doing, if I have the knowledge of what I'm doing, the regulation, tendentially the system, the ecosystems that are applicable and so forth, I can be more conscious, aware of what I'm doing, and I can protect myself much more, better. So that's why a way of communication and information like the internet, the web are fundamental, and that's why Odun was speaking about as well circulation of information and so forth, protection of consumer and so forth. You can be a real consumer if you are aware of what you are, your position as a consumer. That's knowledge.
Thank you very much. I want to, yeah, but please go ahead.
So what you're asking is, even though it makes me worry about you a bit, but
she wanted legal advice for free. That's the question. But I will let you pay anyway.
So I think a combination of tools can help you achieve what you want. So if there's, you've mentioned it.
For people who want to hide partial transaction history.
Yes.
Out there.
Sorry,
not necessarily
don't quote me. So if you have an API that has the option to be forgotten, which you mentioned built in, you could have, if your current service provider allows you to separate your transactions however you want, and then you highlight particular Excel spreadsheets with your current expense accounts that you want protected, and you say, forget this, and then port this, then that could help you achieve what you want, right? So this, your question actually leads to something else, the opportunity for more competition in this field. You find a situation where certain service providers would want to provide this for people like you that want to be forgotten, not forgotten, a selective amnesia on certain expenses that you don't want to move to another service provider. So that could help you.
Exactly. Well, I know what we are all thinking, and yesterday we talked about kind of fraudulent activities and financial crimes and so on and so forth. But there can be legitimate, reasons to hide certain transactions. You might not want to know if you're using if you're buying a certain medication. You might not want to know. You might not want your employer know in case of discrimination and so on and so forth. There are a lot of reasons, right? So just there are actually legitimate reasons. I just want to highlight that. And when I'm speaking of medication, that also reminds me of my experience with the NHS, the amazing national health provider in the UK. Actually, when with NHS, they promise that. They don't have to check your visa status if you do need the treatment, which is extremely nice. And, that is in contradiction to the current trend of digital ID when perhaps the idea is one ID will be linked to kind of everything you have. But in some circumstances, there's kind of a need to keep certain things kind of separate. There's a certain need to have the data siloed. That's my opinion. I don't know what the panelists think about this. I'll go with Alex to give you a little bit more speaking minutes.
Can you please repeat the question? Yeah, I just lost
I guess
in
the
the middle. Yeah.
Sorry, I guess the question is sometimes we're talking about kind of data governance. Sometimes we want the data to be a little bit more siloed as opposed to more linked. And what is your opinion towards that? Is there in terms of technology, privacy preserving techniques, and also in terms of regulation, how we can enforce this. So just in terms of kind of data segregation.
Yeah. Okay. So what I see again that from this perspective, I see that AI agent forced, for example, me forced to share all the data that I have inside the AI agent. It could be Claude code, etc., etc. And in my opinion, and just it's a story about me, it's okay for me. Please know everything about me, that's fine, because I see that I have more benefits about that than any, some evil things like, oh, someone will stole my data, etc., etc. Okay, nothing to hide, just use it, etc. But at the same time, what I see, for example, regarding the last update in Claude, for example, I have Interactive Broker account, and I can link my Interactive Broker account, it's a brokerage service, to the Claude, for example. And it can generate orders in interactive brokers. And here, what I see that it's good that in interactive brokers we have a button that should I make this order or not. So it's some kind of a permission. So, and I see that it's, story about case by case. In some case, it's okay for me that use all my data, do actions, I mean AI agent, please do action, etc. Get all my bank information, etc. And from other side, in the case where I see that it's a huge, effect to my financial account, for example, it's better to ask me, are you sure that you want to do that or this kind of action? Yeah.
To sum up, consent is key. It's always about consent. What I hear from the panel today is that I think the central kind of theme of data governance is still that data governance wants to kind of empower the end data producers, which is end users ourselves. And I'm not going to talk about ownership because that makes me sound like a legal amateur, which I am anyway. But it's also about responsible sharing, responsible prompting, and so on and so forth. So conscious of time, I want to already open up the floor for questions. Yes, please.
I'm scared right now. I'm very scared. It's not for me, right? For you. No, I knew that. I knew that. Yeah, so I'm joking.
Oh, sorry.
Thank you. When it comes to data governance issue, this is one thing. This is to Ettore. You wanted it? Or to all of you. Yes. And also about the AI governance. One thing, it is about prompting as well. But it's also mostly about the outcomes. And there's a huge literature coming out about the data governance, about the AI governance and auditing. There are lots of AI tools being used, but are they really functioning properly? This is the governance part, somewhat, and also auditing part. At the end, we have to audit how these things are going on. And I believe there could be even more of a role there to play through blockchain and so on. So I wonder your views, especially probably the second question, or then it may come to you about this AI governance and auditing part. So it's not just about initial architecture of how we design the things, because this is how it is how it is understood mostly in the IT sector, but it is more than that. At the end, we should be able to test whether people are not treated differently through AI tools, and there has to be mechanism, and this has to be a continuous mechanism for this. So, thank you.
So, shall I start? Yeah, please. Well, so Ahmed, so thank you for the question. It's very clever and nice as usual. Well, I didn't want to speak about big tech straight away, but I said so, speaking about a digital fingerprint, a face recognition, and so forth. That's a problem, and they have our data. We gave our data, and we are very happy. So some years ago, a friend of mine gave me a draft of a book, and he told me, Ettore, so I wrote this book with a friend of mine of UNESCO. what do you think about it? Can you read it? So I read it. It was a very nice plot, story of love and so forth in the future. So something like in 100 years. And it was a repetition, it was a repetition, a little bit of 1982 of Orwell. So the big guys that is checking us and so forth. I said, well, the plot is interesting. So my comment was, the plot is interesting, it's nice, I like it, but it's old. It's not updated. Why? He asked me. Do you use Facebook? Yes. Are you informing the big guy of all your movement with the pictures? Yes. I'm there, I'm even having dinner, I'm at the seaside and so forth. So what are you doing? They are not controlling you. You are allowing them to control yourself because you are giving all the data. So that's the difference. So we are happy to share our data, to let them circulate, because we want.
We are forced to do so. It's not necessarily.
No, we are not always forced.
Because they are the ones who are in the market anyway.
Yeah, but for example, I don't use Facebook, and I don't share data with Facebook. I use LinkedIn. They know that I'm here, for example, but because I want to give this information. Yeah, because it's interesting for my profession, my academia, and so forth. So we have to change a little bit the parameter of viewing the things, because we are victim, but we are as well author of the violations that we want to, in my opinion. Yeah. Regarding the audit, may I answer as well to the second question very briefly? So you were speaking about auditing corporate governance, right? Especially. So something that is very interesting, I will be super quick. It's another article that I proposed to Milano Finanza that is, in my opinion, very innovative. Sorry if I don't look very humble. But it's interesting, is the quantum computing. So now we don't have the possibility to decrypt some kind of language because we don't use, we don't have the mass use of quantum computing. But in a couple of years, all the crypto messages will be really clear, transparent, so they can be read without any problem. And this one will be a problem of privacy for the companies. Not just the one that are sharing data, but the one that are operating normally. So, for example, I'm president of the board of supervisor of Baker Hughes, that is a huge company, American, that is operating in drilling, turbo machineries, and so forth. And every day we are facing this issue. With the quantum computing, all the privacy, all the lack of transparency in terms of not sharing of data will be discovered. And we have to analyze already this problem, and this problem will be important as well for the impact value of the companies, because we have to analyze in terms of profit, in terms of mechanism that are used, which one is the value actually of the company, because in 2 years, for example, all the project and the secret, the confidentiality, will be very easily discovered.
Thank you.
Thank you, Ahmed.
Just to add a little to that, I'll be talking more on the data governance, trying to answer the data governance question. So there's a lot of talk and a lot of research around humanistic digital governance going on right now, where the governance regime will focus more on the people that are supplying their data. I mean, we unwittingly supply our data because it's free. And there's this saying, I'm sure everyone knows it, that if you're not paying for a product, you are the product. So because we feel that data is, is free, you just give it to them and they use it for your own use. So if we have, there are talks around appointing some form of trustees, right? An entity that would monitor your data, the data you have willingly submitted, willingly, quote and unquote, right? Willingly submitted to the big tech, and then there's a trustee that would track how that data is used and would obviously search for your own cut from whatever data, whatever use they put that data to. So that could be encouraging. How that would work, I do not know. It's a very fancy idea right now, but I don't know how it's going to be implemented. Yeah.
And Alex, you want to add something on? Okay, I actually understand when you said they forced us, exactly like Odin said. If you want to use it and the product is for free, it's probably written in terms and conditions that you consent to. But of course you can choose not to use it, as Ettore said. I just don't use it. But I also understand you kind of have to use it because of social pressure, because you have to be linked. But then as soon as you use it, you have to consent. So it's kind of, yes, you do consent, but it's forced consent, so is it real consent or not? I'm not the expert in judging, and I'll leave it to whoever wants to pick this question up, or any opinion from the participants, or any further questions? No? Okay, thank you very much. How are we doing with timing? I know we're... Thank you for my amazing panelists. Thanks again. Thank you, thank you, thank you, thank you, thank you, thank you.
Thank you so much. Actually, Java, you made me think that, you know what does data mean? It comes from Latin. It's actually participle of the word give. Do, dedi, datum, dare. That is, it's the verb to give. So data is things that are given. And here the consent is actually key, because normally if you give something, like it's you who is the actor of the thing. To the closing remarks of this amazing 2 days, I invite both of you, no? Amazing. We have 2 days and 2 amazing co-founders. So round of applause and a second mic.
Yeah, there's no need. No, we keep it short because half of the people already left. So anyhow, thank you all actually to be here. Thank you for having traveled also very far. People from all over the world. People from New York. People from Europe. People from Canada, etc. So thank you so much. Of course, thank you the bank for the hospitality. Yeah, generally at the end of these 2 days, apart to be a bit tired, we come back home with more doubts and maybe more scare, because the quantum technology is going to break all our codes, and our bank accounts will be empty in a matter of minutes. Agent AI are going to sit in these panels in the years to come and replace us. I mean, I think it's good to bring under the same roof different type of opinions, different type of expertise, academics, regulators, entrepreneurs, and of course do like always meet together during the coffee break, which is basically the most important part of these events, because you can speak freely, right? And realize that actually at the end of the day, everything boiled down to life experience, our personal life experience. That is not our professional life experience. Our personal life experience take us who we are, shape us, our thoughts, shape even our professional activity. So there will not be agent that will replace human, I guess, because of this fundamental differentiation between us and algorithms. Of course, we are scientists. Some of us are very much involved into these technologies, and technologies are advancing a lot. So it's good that we bring regulators, we bring lawyers, we bring policymakers and educate them, like we do with Exponential Science, because of course new technologies bring new risk, actually. But we always need to, I think, start from the point of view that we don't need to be scared, because we are the kind of the controller over what we produce. There is always our fingerprint on whatever we do, in a smart contract or in a piece of code. There is always a piece of us there. So, and if we realize that there is always us behind everything we do, then this boils down to the human condition of who we are and what we want to be as a society. So thank you to be here. And,
I have a few thanks I need to give, and one comment I would like to make to just finish off the conference in terms of the infrastructure. We've been talking about a lot of infrastructure, right? We've spoken about resilient infrastructure, digital money, AI systems, tokenized assets, but I hope you all will probably agree with me that after 2 full days of this particular workshop, we can agree that the most important infrastructure here has been the coffee break. Thank you very much. So I would like to thank the National Bank of Kazakhstan for hosting us here in Astana, Professor Paolo Tasca for setting up this workshop and conference many years ago. Thank you. And the P2P team for bringing us all here together for these 2 days. Special thanks also to Dias Savidkanov, whose work connecting exponential science with the National Bank of Kazakhstan and coordinating so much of the local engagement has made this particular workshop possible. Thank you to all the moderators, to all the speakers, the panelists, the paper presenters, organizers, and indeed to you, the participants who have joined us for these 2 days. I think, you know, Kazakhstan is now firmly in our minds for those of us who are visiting, and we will hopefully be collaborating in the future. And one thing for you to bear in mind as we leave, there will be another P2P next year, and if you have any interesting or if you have any thoughts...
Raise your hand if you want to candidate yourself
yes,
as a candidate.
we would be very happy to engage with you.
Very good.
Yeah?
So you know how to find us.
Yeah. Thank you very much,
Thank
everyone.
you.